I think the more interesting question is, can you imagine a 144? Something pushing 200. If we got something much, much stronger, that would feed this idea that we're getting this reacceleration. I see nothing like that in the data so far this week, with the exception of one thing. That subcomponent of the ISM manufacturing with new orders. Apart from that, there's not much to hang your hats on.
On the flip side, what if you get 50,000 jobs and then you also get the unemployment rate coming down? I mean, there are all of these sort of questionable sort of mixes that leave people scratching their heads saying, what do we do with that?
Let's throw some of these questions at David Doyle of Macquarie. David joins us now for more. David, welcome to the program. A loan churn dynamic in this labour market. That's been true for quite a while, David. There's been a worry it breaks one way or the other and maybe in the wrong way. How are you shaping things up?
Yeah, look, I mean, obviously we have low hirings rate, low layoffs rate, and I think that's impacting the data in sort of broadly speaking in a lot of ways. The way we're thinking about it actually is, and I think it's the point you folks made off the top, is low labor force growth is I think a big factor here. And you know, when we go back to look at what the economy was doing in 2023 and 2024, you needed about 200,000 jobs per month in order to sort of keep the unemployment rate stable. We think that number's come in a lot. It might only be 50,000 or 75,000 at the moment, potentially even lower than that. And I think what that means is you can have months of low jobs growth, but still have a steady unemployment rate. And I think that's largely shaped the data over the past 2 or 3 months.
David, is there a contradiction here in the idea that companies are accelerating their profits while not necessarily growing their workforces? Does that have to change, or is this the new reality?
Look, I think I agree with the notion that things will break one way or the other. Like, I think we either see a deceleration eventually or a reacceleration. So I don't think that I would be cautious in terms of using the terms new reality. Now, it's possible that we stay in this regime for a few more months, maybe into the end of this year. But by 2026, we actually are fairly confident that you're going to see the economy start to reaccelerate as you get some of the impacts of the One Big Beautiful Act taking effect, and as you start to see, likely, in all likelihood in our view, some of this policy uncertainty come in a little bit to give more confidence in the outlook.
It seems like a lot of people are talking about the economy breaking to the upside. How much risk is there of it breaking to the downside at this point, given that very few people are talking about that, and that's not what's currently being priced into risk assets at all?
Look, I think in the near term, there are risks of that. I think that there are headwinds over the next few months to real income growth, real wage growth, from the likelihood that we get this tariff price pass through. That's going to weigh on real consumer spending, and so potentially you take a leg down. I wouldn't say a contraction, but certainly lower growth than what we've had in recent months or recent quarters. And so that slowing, though, I think paves the way for a reacceleration in 2026. So I think there's risks of a slowing, but I don't think it's all too severe. And I do think that things start to look better when we get to 2026.
David, you just talked about two issues in Washington. One, the One Big Beautiful Bill, and that could potentially be fuel for next year. At the same time, tariffs, which could potentially dampen the outlook for next year. Do they just equal each other out, cancel each other out?
Well, that's a good question. From we'll assume for now that the tariffs remain in place, right? So there is some uncertainty in that regard. But if you assume that tariffs remain in place, they largely, pay for the deficit or increased deficit impacts that flow from the One Big Beautiful Act. In our view, actually, what we've seen so far this year has been a significant effective fiscal tightening from the implementation of the tariffs that's now causing a slowdown in growth. Once you get to 2026, that tightening, actually, you look at the math, it turns into an easing, right? So you've absorbed the impacts of the tariffs, but then you start to get some of the easing measures that were in place in the One Big Beautiful Act, and that can start to support growth when you get to the first quarter of 26.
Where exactly will we see that support from the One Big Beautiful Bill?
So you've got larger tax refund checks. We think that will flow through to consumers from no tax on tips, no tax on overtime, et cetera. The other element you could see it in is in fixed business investment, right? You get 100% immediate expensing and other business tax measures that were part of that One Big Beautiful Act. That could provide support in that regard. But, so those are the sort of the sub-elements to it. But when we look at it, we just look at the broad fiscal deficit. The broad fiscal deficit has narrowed this year. When you look at the math for 2026, it's likely to expand, suggesting that the government spending and the fiscal policy becomes more supportive of growth.
David, can we just stay on this reacceleration theme? I just want to dig into that a little bit more with you. Is that a consequence of the rate cuts people are expecting, or is this a Fed cutting interest rates into a reacceleration?
So I think that it's a bit more nuanced than that. It's a good question. I don't think we're at the reacceleration just yet, right? I do think that there's some more headwinds to come in the near term. So the Fed is almost cut. If the Fed proceeds with cuts, in our view, they're doing it at the end of a slowdown type of period. Potentially, those cuts would contribute to a reacceleration later in the year. But to be quite frank, I mean, I don't really think that the effects will be all that significant. We're not talking about a dramatic shift in policy. The market's already pricing in the cuts. I think delivering, 25, 50 basis points through the end of this year isn't likely to move the needle too much on what we're looking for in 2026.
And just quickly, what's the number you're looking for tomorrow?
Always a mug's game to forecast the monthly payrolls number. I'm going with 100,000. A little bit above
100K. And do you consider 100K in today's environment a good number? Is that more of a structural story and less of a cyclical one?
So it's a structural story, yes. And given the low labor force growth that's currently being experienced, 100,000 jobs in a month could be consistent with a tick down in the unemployment rate. Not saying that we're going to get that, but it could be consistent with it.
Something to think about. David, thank you, sir. Appreciate it. David Doyle there of Macquarie. That was the scenario that you were leaning into before this conversation started.
Because of the low turn kind of dynamic, that even just a little bit of job creation could end up with a lower unemployment rate. The point you are making, is the Fed cutting into a reacceleration, or is the reacceleration on the heels of the Fed rate cut? I'm still thinking about that because ultimately that determines inflation, right? I mean, if they're cutting into a reacceleration, could that just juice things in a way that would allow price increases to become more entrenched?
And juice this market too, a market that's rallied pretty hard coming into September. Equity futures still just about positive on the S&P going into the opening bell 50 minutes from now. Let's get you an update on stories worldwide with your Bloomberg Brief. Here's Yahira. Hey, Yahira.
Hi, John. A recap of this morning's labor market data. Hiring at private sector jobs slowed in August, with ADP data showing 54,000 jobs added in the month. That's roughly half the pace of the prior month and below the median estimate of 68,000 jobs. Elsewhere, weekly jobless claims rose to the highest level since June at 237,000, adding to evidence that the labor market is cooling. Meanwhile, Russian President Vladimir Putin told his Ukrainian counterpart Vladimir Zelensky that he should come to Moscow to hold peace talks. Putin, who was attending Beijing's massive military parade on Wednesday, also claimed he never refused a meeting with the Ukrainian president. And the NFL season officially kicks off tonight with a matchup between the Dallas Cowboys and Super Bowl champions, the Philadelphia Eagles. But NBC is the big winner. The network said this season will be its highest grossing yet, having already sold out its ads for the Super Bowl in February. It's also said 90% of its ads inventory for Sunday Night Football. That's your Bloomberg Brief. John?
Some serious money. Yahira, thank you. Appreciate it. Up next on the program, Subhadra Shapra of SocGen, as the 30-year Treasury yield continues to back away from 5%, and we count you down to an important hearing on Capitol Hill with Stephen Myron from New York City. You're watching Bloomberg TV.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
It's a very, very sluggish labor market, and I think what's important is that consumers are telling us pretty clearly that labor market conditions are deteriorating. My sense is that there's an ongoing sort of labor market slowdown that's already in train. I think we're maybe entering a situation where the markets will have to price in more rate cuts, and that may not be so good.
That was Neil Dutta of Renmac on the program with us a little bit earlier, following a downside surprise on ADP. The jobs number came in at 54K. The estimate was 68. Jobless claims, the wrong kind of upside surprise, 237 versus an estimate of 230. Still jobless claims pretty stable at the moment, given the picture elsewhere. The picture elsewhere hasn't been great for this labour market so far this week. Equities look like this going into the opening bell. Equity futures still positive by 1/10% on the S&P. On the Nasdaq 100 up by 0.1 also. In the bond market, things stabilise a touch. Down 2 basis points to the front end of the curve, 360 on twos, as this market positions for more rate cuts from this Federal Reserve. Sticking with the Fed, Subhadra Jayapur of SocGen remaining slightly cautious, writing this. Well, the hope is for lower policy rates to stimulate the mortgage market. That could backfire. We could see a repeat of last September when a 50 basis point rate cut resulted in higher long-end yields. Subhadra joins us now for more. Subhadra, good morning.
Good morning.
Going to pick up on the line of questioning that we finished the last interview. Is this Federal Reserve cutting into strength?
It feels like it, because if you look at a lot of the data that's come in, economic surprises have been to the positive side. The growth momentum into the second quarter is also on the positive side. Inflation is high and sticky. The job market, as Mike McKee was pointing out, there's no hirings, there's no firings. It's in a state of stasis. So to me, it feels like that, plus all of the fiscal stimulus that could potentially come down the pike, could be something that could move the markets higher. So it feels to me like some of these cuts that are priced into the market are more preemptive than really something that's warranted.
Is this something that's tradable now, or is this just sort of warning shot ahead of what could be a tumultuous couple of months?
I think so. I mean, the market's pricing in nearly 6 cuts between now and the end of next year. The markets, people are looking at, a cut and maybe 3 cuts this year. To me, it feels like if they cut sooner and more aggressively, they won't be able to cut as much next year. So the neutral rate is going to have to be a lot higher, given the fact that inflation is still high and sticky, and the risk is that you could see a reacceleration of inflationary pressures. So the market, to me, feels like it's overpricing cuts between now and the end of next year.
Even with the political impetus, right? I mean, how do you sort of overlay any kind of political interference with this, given that right now this is a Fed that has a dovish bias and might have an even more dovish bias by the time we get around to 2026?
So that's the part that's tricky, and I think that that's part of the reason why the market's pricing in 6 cuts by the end of next year. So the market's really looking at what the Fed could do as opposed to what the Fed should do. So to me, it's very hard to really kind of separate the two aspects. One is, if we have a very dovish committee next year, that could really change the dynamics in the market. But over the long run, that, to me, leads to Fed credibility. A lot of times we look at the market and say, that, the bond market is very complacent right now. Volatility is very, very low. But you could see a pretty significant sell-off in bond yields in a very short amount of time if there is a crisis of confidence.
But there isn't right now. How much are you going to be watching this Stephen Miron Senate confirmation hearing just to really, as Terry Haynes put it, read the body language of the Senate, which at the end of the day, the purview of the Fed does belong to Congress?
Yeah, I mean, it is important. We will be paying attention to what he's saying, but it's really a committee decision as of now. It really depends on what the composition of the committee is going to be next year, who President Trump nominates to be the next Fed chair. So again, there's a lot of uncertainty, but there's a lot of complacency, I think, in the bond markets. Just going back into the last, say, few years, we've seen many episodes when bond yields have risen sharply. We saw 100, 150 basis points of bond yields rise after August of 2023 when the Treasury issuance, coupon issuance sizes changed. We saw a pretty decent sell-off in bonds even last year when the Fed cut rates by 50 basis points. So, to me, it feels like there is just that feeling that everything is going to be status quo when there's just a lot of uncertainty coming down the pike, whether it be Fed independence, whether it be the trajectory for debt and deficits, not just in the US, but also globally, and other kind of, extraneous factors like tariffs and that working through the legal system.
I think you're building a credible case, but what's been surprising for me is just how stable the Treasury market actually has been.
Yeah.
Yes, we've had steepening in America, like we've had steepening in Europe, but this steepening has been completely different. It's been led by the front end. 10s and 30s have been really resilient relative to some of the chaos in France, some of the chaos in the UK. What's supporting the Treasury market right now? Maybe that's an interesting question to ask. What is supporting this? What is keeping 10s at 420, 30s away from 5%?
So I think that when you look at the composition of where people can invest, I mean, clearly the front end is pegged to Fed expectations. The market is pricing in, as I said, a lot of cuts over the next year and a half. And then when that trade's maxed out, investors kind of move on to the belly of the curve. And the belly is really where you've seen a lot of the flows. I mean, the 2s-5s curve actually inverted a few times. You're seeing a lot of demand for the 5 and 10-year part of the yield curve. And investors, broadly speaking, are concerned about putting money beyond that 10-year sector because there's a lot of volatility in the very long end, not just from the debt and deficit trajectory for the U.S., but also what's happening globally. You're looking at, the picture in Japan or, the political, unrest in France. That all argues for higher long-end yields. So really the center of gravity for the Treasury market seems to be the belly of the curve.
So last year, they dropped rates 100 basis points. Yields rose at the long end by 100 basis points. What are you actually looking for into year end? What kind of number?
To me, it feels like the 10-year yield is still going to stay between 4 and 4.5%. Yes, to me, the risk is that we might actually start drifting towards 4.5% if the market starts to get concerned about kind of the inflationary, impact of tariffs that feeding through, or if there's any sort of concern over Fed credibility. But the different sectors of the yield curve are still going to remain range bound. Where I'm really concerned about yields getting unhinged is in the very long end. I think 30-year yields could very easily get to 525. I mean, we saw a lot of volatility in just this week in the 30-year. So it's very conceivable that you start seeing, that sort of, concern play out in the very long end of the yield curve.
Saw a massive range yesterday, in just yesterday's session. Subhadra, appreciate it. Thoughtful stuff as always. Thank you. Subhadra Rajappa there of SocGen. 30-year bond yields very close to 5% in yesterday's session, within a basis point. Now back down to about 4.87 and down 3 basis points on the day. Let's talk about the big event. It takes place in about an hour and 7 minutes time. Fed pick Stephen Miron preparing for a grilling on Capitol Hill. Tyler Kendall joins us from Washington for more. Tyler, walk us through the procedure here, the process down in Washington.
Yeah, hey, John. So Stephen Miron will be in front of the Senate Banking Committee starting at 10 a.m. Eastern. This is the first step in what we're expecting to be a pretty expedited confirmation process for Miron. And today the spotlight's going to be on him and his bid to try to reassure lawmakers that he's committed to the central bank's independence. But I'll also point out that we are closely watching some key senators here because this is really going to give us a rare glimpse into how some of these Senate Republicans are balancing their prior support for Fed independence with their current support for President Trump. And while we're not expecting any Republicans to vote against Myron, I will say my eyes on some key ones like John Kennedy, Mike Rounds, Tom Tillis, who actually met with Myron last night, because these have been the lawmakers that are perhaps a little bit more staunch in their support for the job that Fed Chair Jerome Powell has been doing. Now, with that said, we got the prepared testimony from Myron. He's going to give brief remarks before he takes questions. And in that prepared testimony, as you've been covering all morning, he says he's going to be committed to preserving Federal Reserve independence. But with that said, we know that there's this paper that he authored last year where he suggested that there should actually be more presidential control over the central bank, putting forward some perhaps controversial changes, including potentially changing the term limits of Fed governors and subjecting the central bank to the congressional budget appropriations process. John, at this point, Democrats have conceded privately to us that they don't have a lot of procedural options to really stall this vote ahead of the September FOMC meeting.
Tyler Kendall with the latest. Tyler, thank you. Looking forward to the coverage down in Washington, D.C. As we've said a few times, credibility here is important. And it's not about gaining credibility with the people in the room. There's an obvious and clear political divide down in Washington, D.C. No point even discussing that. It's about having credibility with the market. And as Neil Dutta said, having credibility as well with your future colleagues, some of which are still very much on the fence when it comes to September and cutting interest rates.
Given some of these big questions, you pointed out that Treasury yields have been remarkably stable. So while people are fretting about it, there has been a stability in the bond market. I ask why, and it's because of this two-sided risk. On one hand, you see the labor market data coming in soft enough to get people worried that maybe things could break to the downside, while people are thinking, well, hold on a second, maybe this is going to be a central bank predisposed to running the economy hot, which could be the other way around, cutting into a reacceleration. That is the tension, keeping things in stasis.
When it comes to credibility with his colleagues, it's going to be very challenging in the sense that this is someone who also wrote a paper about the revolving door between the Fed and the White House.
Yeah.
There's an open question that maybe he goes back to CEA after the short stint at the Fed.
That hearing, an hour and 4 minutes away. Coming up tomorrow, full coverage for you. Chris Verona, Stratega, Sarah House of Wells Fargo, Nadia Lovell of UBS, Stephanie Roth of Wolfe Research. The Jobs Report up next.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
A cidade estava sitiada.
Nisso, ao começo, eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Nasseri, and Los Angeles royalty Will Obed. We're going to talk about how sports is eating entertainment, check in on the state of the movie business and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Bringing you up-to-the-minute news whenever and wherever it happens, I'm Matt Miller, the Circuit de la Sart in Le Mans, and this is Bloomberg.
Back to within 1% of all-time highs, despite the jobs data coming in thick and fast, mixed results. 30 minutes until the start of trading. I'm Danny Berger. Matt Miller is off. Bloomberg Open Interest starts right now. Coming up, AI anxiety. A tepid outlook from Salesforce fails to impress, heightening the stakes for results from chipmaker Broadcom. And it just might be the hottest ticket in town. Tech leaders, including Zuckerberg, Cook, and Nadella, all set to attend a White House event tonight. Meanwhile, Fed Governor nominee Stephen Miron heads to Capitol Hill as President Trump's threat to the central bank starts to worry investors. Some stocks on the move this morning. Salesforce falling. Investors seeking stronger sales growth from its AI pivot. Again, those tech leaders going to be at the White House today. Figma, also another set of results, down 15.4%. It failed to meet a high bar for its first earnings report. And today, Broadcom's $730 billion rally will be tested with earnings after the bell. But first, we start with Wall Street and a story breaking moments ago. Citigroup is entrusting its wealth business about $80 billion or so worth of assets to BlackRock in a new partnership. Bloomberg's Todd Gillespie reported on the news, broke that story just moments ago, and joins us now. Todd, great to see you. Excellent reporting. What exactly does this partnership look like?
Well, essentially, Danny, this is the last asset manager at Citigroup. The last asset management operations in the entire bank is finally being shuttered, and $80 billion of AUM is being handed to BlackRock. That's a large chunk. That's about an eighth of all of Citigroup's wealth client investment assets. So we're looking now at an environment where banks are increasingly looking to partner with asset managers, looking for other options, looking to do this more efficiently. It's a big part of Jane Fraser's goal at Citigroup to improve returns, streamline its wealth business, increase revenue, and essentially deliver more outsourced products to its clients.
But how much of this is Citi almost backing away from some of the wealth management division in that they're entrusting BlackRock with it? When we've seen other, let's say, basically all of global Wall Street try to double down on their wealth offering.
No. I mean, it's essentially Citi saying we're going to stick to our knitting in terms of they are going to double down on the advisory side of things. They're trying to hire more advisors. They're trying to expand their products to the mass affluent. They're trying to grow their wealth business, certainly, but do it in a way that they know they can do the thing that they're good at, BlackRock can do the thing that it's good at, and everyone can partner up. Notably, Citi, unlike Goldman Sachs, unlike JP Morgan, unlike Morgan Stanley, Citi doesn't have an in-house asset management platform that it can, share products between. It can get, it can kind of has its own built-in partnership, and now it's looking to BlackRock to essentially provide that service in a similar way that Citi in its banking business has looked to Apollo to provide private credit.
Well, to that point, it's kind of the moment of partnerships. Another one that you reported on this morning was T. Rowe Price and Goldman Sachs taking a large stake in them. What is the aim of Goldman in doing this?
Yeah, it's a good question, Danny. And I mean, for a lot of people, T. Rowe Price is seen as a fairly ailing asset manager, right? I mean, hundreds of billions of dollars of outflow we've seen since the peaks of 2021 when T. Rowe Price's shares were up high. I mean, now we're looking at Goldman Sachs appearing to see some undervalued opportunity here in T. Rowe Price, particularly in its position as a leading retirement manager, manager of retirement funds in the United States. Bear in mind, we've seen Donald Trump's administration grease the wheels just recently for banks to start to put more private credit assets, more alt more alts platform products into individual investors, 401ks, retirement plans, and Goldman is looking for more channels to collaborate in order to do that, to make sure that it can get its products into the hands of T. Rowe Price customers as well.
Todd, excellent reporting. Thank you again for bringing those stories to us. That is Bloomberg's Todd Gillespie. Let's turn to tech now, and where we had earnings. Salesforce after the bell yesterday, projecting weak sales growth compared to Wall Street expectations. That's adding to anxiety around AI's return on investment. Let's bring in Mandeep Singh, Global Head of Tech Research for Bloomberg Intelligence. And Mandeep, I think there had been some real hope that Salesforce investment into AI was providing returns, that people would actually be using their AI agents. So is it not happening? Is it delayed? What's going on?
I mean, look, when you compare Salesforce to a Microsoft, which is, 5 times bigger and growing double digits, the high single digit growth just doesn't look good enough. And so from that perspective, they called out, adding AI products is just not making a difference. And everyone is comparing the AI revenue contribution. In the case of Microsoft, it's close to $15 billion. For Salesforce, it's less than $1 billion. And so the main question here is, do the AI products get consumed through someone like Salesforce, or are companies building it themselves? Which is why all the database companies did so well this quarter. We saw Palantir, MongoDB, Snowflake. I mean, companies are using their data and building their own AI agents. So the question is, do they build AI agents through Salesforce, or do they build it themselves? And that's what's reflected in the growth right now.
It's a good question, and a lot of questions surrounding tech, and we're going to get maybe more question marks with an event at the Rose Garden. I think the spokesperson for the White House called it like the hottest club is the Rose Garden Club. Yeah. So we're going to have Zuckerberg, Cook, Satya Nadella, among others, at an event hosted by Melania Trump. Do we know what this event is? Do we know what the impact of it might be?
I mean, look, the president had an executive order where they specifically mentioned AI infrastructure as a big priority and, exporting the U.S. large language models to other countries. So from that perspective, I mean, these companies really are pioneering the build out of that AI infrastructure. In fact, NVIDIA said the hyperscalers will spend almost $600 billion in aggregate next year. So think of all the companies that are attending the dinner. That's where the $600 billion is coming from. So from that perspective, I think they would want to know the timeline and the ramp up of that AI data center.
It also just comes in such an interesting time for the regulatory landscape for these tech giants. We talked ad nauseum perhaps about the Google ruling yesterday. But what does it say at this moment where the AI is developing quicker than regulators can keep up? How much of this will be weighing on administration's mind that many people hoped would be more lax when it came to regulation?
Especially when it comes to the biases of the model. I think one of the concerns that was raised during election time was just, whether the social media is left-leaning or right-leaning. And so with the models, it's the same thing all over again. I mean, these models are trained on data, and you want to make sure that, they are as neutral as possible, and just how the models are trained and what are their biases, and those sort of questions are still very relevant.
Yeah, a very good point, Mandeep. Thank you so much for joining. Yeah. Thank you for that. That is Mandeep Singh of Bloomberg Intelligence. Also, Figma reporting its first earnings report after the bell yesterday, moving on that, where the company's sales outlook failed to meet Wall Street's lofty expectations. The stock is up more than 100% since going public in July and is down 16.5% in the pre-market. Bloomberg's Bailey Lipschultz joins me now. Bailey, we were talking about yesterday about what a big test this was for Figma. So did it fail that test?
It failed the test, Danny. I think in Spider-Man they said with high stock prices come high expectations, maybe something like that.
Yes.
But really, when you see a stock that rallies like this, you have to beat expectations. That's what we spoke about yesterday morning. You have to beat and raise. We saw revenue relatively in line with what Wall Street was looking for, and this is Wall Street that modestly is kind of, or for the most part, is kind of a hold equivalent on the stock. So when you don't beat those expectations, you have profitability falling short. That's why you're seeing the stock down so sharply this morning. Again, we've seen a lot of these momentum IPOs pulling back from their recent highs. So Figma really the latest, but again, you can't miss your first print after going public.
So you go public, you miss your first print. Bailey, we also talked about this idea that maybe a test for the general IPO market. Does it give people pause that, sure, you can get a 250% rally in your IPO, but you just steadily eat into that gain, especially if you can't show up with your earnings?
There's a lot of kind of debate around the current IPO environment. When you look at how these deals are being priced, when you look at how they're trading on day one, I think many bankers and investors would say 250% is not really what they want to see. It's a lot of momentum. There is a retail trader aspect at play with that kind of dynamic. The goal and kind of what we're going to see next week with a number of these deals pricing and debuting is, are we going to see banks push on price? Are we going to see kind of more modest opens? Are we going to see stocks that are up 20, 30, 40% and not 100 or 200%? Because most people would agree that's not really good for anyone.
Yeah, I mean, unless you're a shareholder who bought at the IPO and you're
sold.
still up.
You had to sell.
And sold, or you're still up 100%. So that's not too bad, Bailey. Thank you so much for joining Bloomberg's Bailey Lipschultz. All right, a quick check on futures. We're about 20 minutes away from the open, and we continue to gain. Some of those gains starting to peter out. A lot of mixed jobs data coming in. How do you handle that? How do you incorporate it? We still are within 1% away from all-time highs, even though we are little changed in this morning's pre-market session. And coming up, we're going to talk about this morning's data on a labor market, some of it pointing to cooling, some of it pointing to steady jobless claims. We're going to break it down and what it means for the Fed next. You're watching Bloomberg Open Interest.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. Getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francina in Sintra, Portugal, and this is Bloomberg.
The Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Let's get you some high-interest stories. A look at what's making headlines around the world. Apple planning to launch its own AI-powered web search tool next year. Sources tell us here at Bloomberg that the system will be integrated into Siri and eventually its Safari web browser. The underlying tech enabling it could come in part from Google. Apple is aiming to release the service in the spring as part of a long-delayed Siri overhaul. Elsewhere, HPE delivered better than expected sales and profit in the third quarter. The CEO said the company expects to weather narrowing profit margins as it enters a new era of AI-driven demand. And don't miss our conversation with HPE's CEO on Bloomberg Tech. That will be at 11:40 a.m. Eastern. Shares of American Eagle surging just under 28% in the pre-market. It reported higher than expected quarterly sales, and probably you can guess why. The success of its controversial ad campaign featuring actress Sydney Sweeney. They said they sold out literally of all of the jeans that she promoted. So thank you, Sydney Sweeney. Now, on the data front, initial jobless claims rise to their highest level since June. And even though it was steady, it did signal that the U.S. labor market might be cooling alongside an ADP report, which was also worse than expected. Bloomberg's Michael McKee, international economics and policy correspondent, joins us. Mike, a lot of jobs data coming in over the past 48 hours. What do you make of it?
Well, it's basically telling the same story, the same narrative, Danny, that the Fed has been looking at and that people on Wall Street have been talking about for a while, that companies are not hiring, but they're not firing too many either. 237 still a very low number in terms of jobless claims, but only 54,000 jobs created in the private sector, according to ADP last month. We'll see how that plays out when we get the non-farm payrolls number from the government tomorrow. Continuing claims fall, 1,940,000. That's 4,000 lower than they were the previous month. So it doesn't suggest a labor market in free fall. Might also note the trade balance widened, kind of expected, but it did show a big pull forward of imports during the month of July, and it suggests that people were, again, trying to get ahead of tariffs.
Then you also get the Challenger's job report, which has the weakest hiring plans for August on record. Mike, how does this set us up for tomorrow's non-farm payrolls?
Well, basically, we're looking at not much gain, 75,000. That is not a real firm estimate, I think, from people on Wall Street. They're willing to concede that we could go either way. We could see a strong report. We could see a weak report, and a lot of that may have to do with seasonal factors. But it's definitely a situation where people are expecting some weakness as the economy slows down. We also, of course, Danny, want to look at the revisions and see what we get after that 258,000 revision last month.
We will be looking at it, and the White House will be looking at it, Mike. Speaking of the White House, you're down in Washington, D.C., and Stephen Myron, in about 45 minutes' time, is going to be starting his confirmation hearing to see if the White House, which they want to do, can get him on the FOMC before this month's decision. What does the timeline and road ahead look like that for it to happen, Mike?
Well, it looks like it could happen because Republicans basically in the Senate will do whatever Donald Trump wants. It's not easy to do the way their calendar works, but it certainly could happen. Now, Myron is going to be questioned today by Democrats in particular over his stance on Fed independence. In his opening remarks, Myron pledges to use his economic background to make decisions, not his political background, saying the most important job of the central bank is to prevent depressions and hyperinflations. Independence of monetary policy is a critical element for its success. My opinions and decisions will be based on my analysis of the macroeconomy and what's best for its long-term stewardship. However, Myron did write a paper last year before he joined the CEA, which called for nationalizing the regional Fed banks and letting governors appoint the boards of directors who would then choose the bank presidents, which would inject politics into the Fed. He also says the president should be able to fire any Fed official at will, also political, and he looks for a major turnover of the Fed staff because the president can do that. So there'll be a lot of sharp questions about whether he's going to be too political for the job, but the Republicans have already indicated that he's not.
Mike, really looking forward to your coverage of that hearing. Again, kicks off in about 45 minutes' time. Bloomberg's Michael McKee in Washington. And again, he'll be there the next hour from Capitol Hill. Stephen Myron will be testifying before the Senate Banking Committee. All right, let's check on futures. Just 10 minutes away from the opening bell. We are within 1% of all-time highs, but we're a little changed on the S&P and NASDAQ, though looking to push for a second day of gains. Outperformance from small caps after they tumbled yesterday. Getting a help from this bond market, where the range yesterday was 11 basis points for the 10-year yield, jumping around quite a bit, but ending lower and pushing lower, again supporting some of the equities this morning. Speaking of getting jumpy, coming up next, investors apparently getting jumpy about Fed independence. That's the latest report from Wall Street. We're going to ask Morgan Stanley's Mike Wilson if he's seeing the same thing. This is Bloomberg Open Interest.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Wall Street strategists say investors are becoming more concerned about Fed independence as President Trump seeks to impose his will on the central bank. JP Morgan analysts wrote to clients that, quote, markets have become more concerned over Fed independence as there are signs of a Fed inflation trade. Goldman Sachs analysts also noted growing concerns around Fed credibility. Let's get Morgan Stanley's take. Joining us now is Mike Wilson, who is the firm's chief U.S. equity strategist and CEO. Mike, thanks for joining this morning. Great to see you.
Great to see you.
So is this showing up in markets at all? At least on a headline level, there's been little drama.
Yeah, I think so. I mean, we've seen a little bit, maybe some term premium. I mean, in the bond market, I would say in the equity market, we haven't seen a major rotation yet to where I would say overly concerned about inflation running away from us. But this is part of a broader strategy. I mean, I think regardless of what happens with this particular event or, transition, the Fed and Treasury are working closer together and have been working more closely together because we have too much debt, okay? And they've been doing this for, I would say, several presidents' terms and Treasury Secretaries' terms. And as I've been saying for quite a while, the Treasury is captured by Congress, right? Their job is to fund whatever Congress decides to spend. And the Fed, in many ways, is captured by Treasury's needs. So we've seen them work hand in glove in the past. And so that doesn't mean that they're going to be manipulated and do something that's really crazy. But I think the Fed does have an obligation to help the government fund itself.
This is so interesting because there has been so much noise around Fed independence. Of course, we're going to get Steve Myron's hearing today in Washington, and their concern about Fed independence is what I'm basically hearing from you is it's not a concern that you need a Fed who helps run this economy hot in order to tackle the deficit.
That's right. And by the way, I'd be nervous if the Fed wasn't somewhat totally independent because we do, the Fed needs to work to help us get out of this deficit problem. By the way, this is a bipartisan problem. This is not a Republican problem. It's not a Democrat. It's an American problem. We have too much debt. So the Fed should be working more closely with the government, with the administration to try and get our way out. And running the economy hot, as our note was titled this past week, is one of those strategies. So higher nominal GDP growth, maybe let inflation run a little bit hotter for a period of time, and then do more investment through tax incentives, and then hopefully you can kind of grow your way out of this debt.
Some people would say, though, that the risk with that is that you get the long end of the yield curve doing what it has been, and that is going higher, bumping up around 5%. What does it mean for equity outperformance? If running it hot helps equities, but potentially hiring long-term borrowing costs mean that it has the opposite effect of helping to loosen policy.
Well, that's right. And that's why I think the Treasury and the Fed together need to keep back-end rates lower, as they have in the past, right? So financial repression is not a new phenomena. There's different ways to do that, whether it's QE, yield curve control, they call it different things. But I'm pretty confident that if yields were to move back towards 5%, they would find a way to get them lower again.
So fiscal dominance means that in any of these circumstances, equities do well. Is that fair?
And to a point. I mean, look, they were priced for a lot of bad things in April, right? They were priced for a recession, which, by the way, in my view, I think we experienced a rolling recession that troughed in April. We've written about this extensively. And now we're into the next recovery. I call it a rolling recovery. So it's not going to be straight up for every sector. But the one part of the economy or one part of the market that has not really performed yet is the interest rate sensitive parts of the economy. Housing, areas that require borrowing costs to be lower. So that is the next stage of this. And I think, last week or 2 weeks ago, Jackson Hole, that's the first step to the Fed becoming more dovish. This is going to play out over the next 6 or 12 months. One of the reasons why we're still pretty bullish over the next 12 months.
Well, one of the things you write about that I think is so brilliant is this idea of a presidency that's kitchen sinked, much like CEOs who kitchen sink, get all the bad news out of the way. So the sequencing, is the bad news done then, Mike? Are we entering the period of deregulation, of tax benefits, and that adds rocket fuel to this equity market?
Absolutely. I mean, I think from a policy standpoint, the bad news is behind us. They sequenced it with a kitchen sink quarter in the first quarter. That created a trough. And if you look at the policy, sort of initiatives from the administration and all the rhetoric starting really in middle of April, it was all pro-growth. They really flipped the switch. And I think that was intentional. I think that's a very out of consensus view still. So yeah, it's going to lead to, I think, somewhat of a boom next year in CapEx, in earnings. Corporations earning more money. They get a tax break now from the recent tax bill that was passed, and that recirculates into a higher velocity economy. The missing piece, once again, in this recovery is lower interest rates. That's the next phase.
But if it's all really concentrated in the first half of 2026, which we know the one big beautiful bill is, what happens when some of that juice starts to run out? When some of the CapEx spending on AI starts to run out, does it mean a more challenging time at this time next year?
Well, to be determined. That's a story for another day. Right now, we're focused on the next 6 or 12 months. Now, I do think there's some risk in the short term for some corrective activity because it's been straight up. And I wouldn't even be surprised if we get a sell the news on the first Fed cut, like maybe back-end rates get away from them a little bit.
And you'd be buying those dips.
I'd be buying those dips, but I think over the next 6 to 12 months, it looks pretty darn good from an equity perspective.
Okay, Mike, stick with us. We have a lot more to discuss. That is Mike Wilson of Morgan Stanley, and we are just moments away from that opening bell. A look at futures heading higher, just ever so slightly. So again, we are within 1% away from all-time highs. S&P up 1/10, as is the Nasdaq 0.1% as the Russell 2000 outperforms with lower bond yields this morning. Your opening bell coming up next.
Break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. It is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Just moments away from the start of trading, you're watching Bloomberg Open Interest. I'm Danny Berger. We are attempting to do a second day of gains, and at least if this price action holds, we will do just that. S&P and NASDAQ futures up 0.1%. Russell 2000 outperforms, getting some help from this bond market, which has been in rally mode since basically this time yesterday. We've had a lot of jobs data coming in over the past 48 hours, maybe mixed, maybe this low hire, low fire type of environment, but that's still supporting us. At the opening bell over the NASDAQ, we have IDEA. They are a bioscience firm. And then over here, we have Vontobel Asset Management, which, if I'm not mistaken, is a Swiss asset management firm, but they are celebrating the launch of their first ETF. All right, so we got the opening bell. Let's look at some of the price action of the major stocks this morning as they open up. Salesforce, that decline continuing. It is falling. Investors are seeking a stronger sales growth from its AI pivot. Figma, you can also see there, down 19%. It failed to meet a high bar for its first earnings report. And today, Broadcom's $730 billion rally will be tested with earnings after the bell. So that's the look of equities this morning. And again, this overall market continues to rally. Still with us is Morgan Stanley Chief U.S. Economist and Strategist Mike Wilson. So Mike, we were just talking about how you're getting these strong tailwinds that you expect coming from policy, coming from an economy that might run hot. But if you look at the very moment we're in, we had ADP figures this morning that missed expectation. Challenger showing the worst August hiring plans on record. You also had the Beige Book saying that companies were fearful of hiring because of uncertainty. Is there some real tension at this moment between the macro outlook or the current macro environment we find ourselves in and equities near all-time highs?
I think there is, but when you actually look at what's been going on, I don't think there's any tension at all. I think you can explain this very simply, which is we're now getting all the lagging economic data on the economy, right? All that data is backward looking, particularly the labor data. And if you actually look at the revisions, right, the 2-month revisions, they all troughed in the second quarter with everything else that we look at, revision breadth for earnings, which are forward looking, okay? So now, if I had my druthers, okay, this would be the perfect setup. We get negative payrolls, we get some more negative labor data, the Fed goes, oh my goodness, we're actually in a recession, every economist says we're in a recession, and then they really cut rates, okay? But the equity market's already figured this out 4 or 5 months ago, as usual. It's pricing forward, so we have a correction on that, but it's nothing like we saw in April. And then we resume the new bull market with a broadening out at that point. Because at that point, then the market can say definitively we're in an early cycle environment, the Fed's cutting, the yield curve steepens, and we get that real push through the broader economy.
Where does that broadening out happen? I'm just thinking about some of the earnings we had.
Yeah.
And you did see some of the retailers really flag some weakness and flag some issues when it came to tariffs. Walmart, for example, talking about higher prices every single week. Does the broadening out include them?
It does. Consumer good. I'll give you the list of areas I think that have been in a recession for really 3 years. Housing related, consumer goods, anything manufacturing related, okay, transportation stocks, particularly trucking and rails, commodity sectors have been in the doldrums, and then regional banks. There's been no C&I lending growth. So like there's a huge part of the economy which then will drive employment growth into 26 and 27, and also probably wage growth. So, like this has been a very unique economic cycle. I think we figured this out a while ago, this rolling recession. We didn't trade it perfectly throughout because it's been tricky. But now I have more conviction in that thesis that we are now in a rolling recovery from the trough of the recession that ended in April. And the Fed will be late because they look at economic data, which is backward-looking, whereas the equity market is forward-looking because it looks at things like revisions and earnings revisions.
If the broadening out happens, does it happen at the sake of tech leadership, or does tech leadership continue as the rest of the market also catches up?
Well, it's interesting, tech has also been in a soft recession, ex-AI. So we could see now more spending on traditional IT, particularly software, some of the areas that we haven't seen upgrades since really the work from home upgrade cycle. So you could actually see it broadening out within tech. As opposed to just 10 or 15 stocks that benefit from AI, now we actually see spending kind of diffuse across the broader economy.
So wait, so it's spending not necessarily on AI. Does some of the AI spending then, does that peter out?
Well, it's funny you mention that. We had a deceleration in AI CapEx starting last summer of 24, something we wrote about. That also caused a slowdown in Q1. So we're not going to see negative growth in AI spending, and now we're actually seeing a re-acceleration. So I would argue that AI spending went through, in their world, a mini recession, and now we're seeing a re-acceleration there. No, I'm growing more of the view that we're going to have a spending boom in 26 after this kind of continued softness through the rest of this year.
Mike, you just sound incredibly bullish. Is there anything that you're worried that could hamper this thesis that would make it not play out?
Well, I mean, if I can figure this out, the stock market's already figured it out. So that's the one thing that worries me a little bit, is that the stock market already knows all of this. And so we have gotten ahead of ourselves on some valuation metrics. And look, this strategy is not without risks, right? I mean, this is a aggressive strategy to run the economy hotter to try and get out of this debt problem. And who knows if it's going to work perfectly? But I think this is our best chance of getting the debt down as a percentage of GDP.
So we get an economy that runs hot, again, this strategy, and it goes back to what you were saying, that you could get something like QE or something to make sure long-term bond yields come in. But if you do have a real clear working together of a Treasury, of a Fed, what about foreign buyers, not just on treasuries, but on American equity as well? Is there some damage to brand America because people have said Fed independence, it's sacrosanct, it's so important to the U.S.?
Well, I think there's a lot of things going on. I would say that maybe foreign investors shouldn't have as much capital in the U.S. because there's been this one-way freight train. The current account deficit's been negative, which means the capital account's been positive. So I would argue that foreign investors probably own too much of the U.S., and diversifying back to their own economies is a good thing. One of the things that lower interest rates globally will do is it will stimulate the global economy, right? That's another area that's been in a recession for the last 3 years, is most of the global economy. So if that can come out of its doldrums, that can add to the story. And why can't foreign equities work in concert with U.S. equities?
Is there any tension of all this risk on happening in gold that is at all-time highs, of calls for gold to hit $5,000 by next year?
Well, I mean, gold has been probably the single best asset to have owned in the last 25 years, without question. But this gets back to the policies that we've had for the last 25 years, which is, print money, don't invest, overconsume, pull forward demand, and basically not have any concern about, the long-term value of the dollar. So maybe over time we can grow. If we grow out of this problem, then gold will become less attractive of an asset relative to other things. But the reality is stocks are also a good hedge against this strategy, right? So what's worked the best over the last 25 years is high-quality stocks, that can grow through this type of an environment, and basically fiat currency hedges like gold or even Bitcoin.
Yeah, sure. I mean, hey, in the inflationary environment post-COVID, stocks still did really well.
That's
right.
Right.
Speaks to that too. Mike, thank you so much for joining. This has been absolutely brilliant. That is Morgan Stanley Chief U.S. Equity Strategist and CIO, Mike Wilson. Let's get a check on the stock market just under 10 minutes into the trading day here in the U.S. And you have about even up and down stocks. Look, we are gaining, not to a huge amount, up about 0.2%. What is leading us there? It does seem to be some of the Mag 7 this morning. Recall that some of these CEOs are going to be in the White House at the new, apparently, concrete garden, Rose Garden. That's at least what Michael McKee tells me it now looks like. So Amazon, Meta, those shares are higher this morning, as is Broadcom. Remember that they are going to be reporting earnings after the bell today. On to the downside, we have also tech leading us lower. Apple, those shares down 0.5% this morning. Meanwhile, Salesforce, again, that takes the cake of the top decliner. They had earnings which disappointed. Does their AI offering finally pick up steam at some point? It would seem that they're getting a real challenge from companies who are going at it alone and incorporating their own AI. So that's the look at the individual names. Now, when it comes to sectors, again, we are at a moment where you are looking at a S&P that's just up 0.1%. It's interesting to see healthcare, so some of the kind of more safety energy trades this morning is lower. Consumer discretionary, that's at the top, up 1.5%. I got to be honest, Mike Wilson was talking about an expected broadening in this market. The trade kind of looks like that today. It's not infotech that's carrying us higher like it did yesterday. In fact, tech as a sector, you can see is down 0.2%, but of course, the communication sector, which has a lot of Mag 7 in it as well, is also the second best performing sector. Okay, coming up on the show, Ollie's Bargain Outlet continues its expansion across the U.S. The company's CEO will be joining us next. You are watching Bloomberg Open Interest.
Now, your co-headquarters is in Miami. You spend a lot of time in Miami and Florida. People often think the hedge fund world is centered in New York or London. Do you have enough access to talent and information in Miami, or does it make a difference anymore?
Information is, everywhere at this point. So information's not the challenge. I think young talent tends to want to be in New York. I'd say 75-25, just because the ecosystem of young people and social reasons. But we are having more big hedge funds, obviously Citadel being the most prominent, come down to Miami. And that causes management teams to increasingly come through Miami. So it is a perfectly good place to run a hedge fund, and there are many good hedge funds down there.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question. I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Let's get you some top calls, some of the analyst action in focus this morning. First up, Muffin-Nathanson upgrading Apple to neutral, seeing a limited downside as key headwinds continue to fade away. Apple weaker in today's trade. Next up, Seaport Global downgrading AMD to neutral. Shares fall 2.6%. They say recent channel checks indicate slowing progress within its AI accelerator business. Finally, Evercore upgrading Brinker to outperform. That highlights an attractive valuation and improving customer satisfaction measures. Shares up 5%. Now, price targets keep rising for Ollie's Bargain Outlet. Since reporting earnings last week, 10 analysts have raised targets by an average of 13%. 8%. The stock has been on an impressive run, up over 40% over the past year. Joining us now is Eric Vander Valk, CEO of Ollie's Bargain Outlet, a U.S. discount retailer with more than 500 stores across 30 states. Eric, thank you so much for joining.
Thanks for having me, Danny.
So you also had your earnings last week. That looked very robust. I would love to know what's driving that. Is that consumers trading down to Ollie's, or is it already your current base just spending and robustness there?
It's all of the above. So we are seeing a trade down, very solid with low middle income and higher middle income consumers, and even high income. So we define that as 50 to 100,000 in household income, or even 100 to 150,000 household income. We're also seeing growth in younger consumers under 50 years old, which is great for us.
So with that, because there's a lot of questions as to when retailers report, is this something of a moment of economic stress? If you are seeing that down trading, does it to you indicate greater economic stress?
Perhaps. We do see that in the way customers are behaving, and our concern for customers as we enter the back half of the year that perhaps that pressure will intensify. In our business, we see customers shopping more intensely for consumable product, consumer staples, products they need. They're shopping close to need, which is an indicator that the consumer is under some stress.
Well, businesses under stress too, trying to figure out how to navigate tariffs. I think as the start of this year, it was something like 20% of your products were imports. Just the day-to-day of doing business with things like de minimis tariffs ending, confusion over what absolute levels are. How difficult is it to put a price tag on an item right now?
It's challenging, but our business model is very fluid and flexible, so we're in a great position. We can make a decision not to buy an item if we can't offer the right price to the consumer, and we can buy something else. Our customer doesn't have an expectation that we'll have anything in particular in stock on a day-to-day, week-to-week basis. That gives us the flexibility to just not buy it, not import it, if we can't achieve the right price and the right markup, ultimately to make us profitable.
Given that, again, you're just so known for value and discounts, does that mean that you are avoiding at all costs trying to raise prices, or are you doing that on the margin?
We are avoiding at all costs to raise prices, but we are a price follower, and we maintain price gaps to the market. We're fiercely committed to making sure we are the absolute best price in the market. It will continue to do that. Again, we can substitute items and even categories to ensure that we are the best price in the market and not necessarily follow the market in price increases.
On your earnings call, you also talked about this idea that bankruptcies and store closures that are happening right now are a big benefit to you too, because you can look into expanding into these spaces. Just the level that you're seeing at the moment, if we compare it to other moments of stress, I mean, the most recent of one being COVID, how does it stack up with these retailers that are closing and, again, advantages you're seeing there?
Sure, yeah, it's a great moment for us. 43 years of business for Ollie's, and there's always been enough closeouts in the market for us to be able to fuel the demand of our consumers. In this moment, it's bankruptcies and it's tariff-related uncertainty that's created even more closeouts. When you look at the market share opportunity for share of wallet with all the different companies that have closed, gone bankrupt, or closed stores, tremendous opportunity. It's also an opportunity to pick up people, human capital, people who are without jobs, and hire them into our new stores. We accelerated growth this year, opening 85 stores on top of 50 last year. Was an opportunity for us to hire more people and provide tremendous value to that many more communities across the country.
I have to say, Eric, I also think part of the reason it's so fascinating to be in your seat right now with a really iconic American brand started in the 1980s is that for so many brands closely tied to this country, you're seeing a real interest from the online community and from the president, be it calling out the Cracker Barrel change of logo or Sydney Sweeney selling jeans for American Eagle, which I'm going to assume you're not hiring any actresses to sell all these bargain brands. But how do you think about just approaching the public when it does seem like there is this greater awareness, again, be it from the White House or online, with what companies are doing?
Sure. Ollie is actually one of our founders. He's a real person, and his image is all throughout our stores. It's a very quirky kind of funny, friendly brand, approachable. And Ali is one of our founders, is, you know, kind of funny looking older man. And we love him and our customers love him and we lean into him and have no plans to make any changes in terms of our iconography and our brand personality.
But again, when you think about changes, do you have in the back of your head potentially that this could have an audience of the White House? Does that factor into decision making at all?
It does not.
Okay.
It does not. No, we find it maybe humorous to talk about, but it's not really factoring into decisions that we make.
Hey,
Our customers give us feedback on Ali. They love Ali.
Well, just quickly on the customers, you don't want to raise prices. You can be really flexible. I just wonder what levers you're looking at pulling right now to deal with some of the tariffs on items that you do want. How are those conversations working with suppliers and elsewhere?
Sure. Our suppliers are great partners, and we have a tremendous buying acumen to work with them, partner with them to ensure that we can bring the right value to the marketplace. So they participate. Again, we choose potentially not to buy. We substitute items, and we watch very closely the price comparisons to make sure that our value gaps, our price gaps are maintained or even wider.
All right, Eric, thank you so much for joining, and I'm sure Ollie is happy with this interview that his face will stay the face of Ollie's. That is Eric Vander Valk of Ollie's Bargain Outlet. Now, coming up, speaking of American Eagle, those shares climbing to an intraday record literally because of Sydney Sweeney, the CEO saying that her jeans sold out everywhere and they picked up customers in every single county of the U.S. We're going to have that story for you next. You're watching Bloomberg Open Interest.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersachi in Tehran, and this is Bloomberg.
American Eagle shares are rising in the early trade. You can even say they're soaring, a pun that I think our production team missed, but that's okay. Shares up 32%. The apparel brand that famously made an ad with actress Sydney Sweeney saw shares skyrocket in late trading yesterday. It reported a quarterly sales beat. For more, we are joined by Bloomberg Managing Editor for Global Business in the Americas, Shelley Banjo. Shelley, is this like literally due to Sydney Sweeney, the fact that they did so well?
I think that it's part of it. I mean, people are talking about this brand in a way that they haven't in probably years.
Well, okay. It came with a lot of controversy, though. So what does this mean for other consumer brands maybe looking to replicate the success?
Yeah, I mean, I don't think they did it on purpose to, like, bring up the controversy. I think that they really tried to do, you know, a good brand, or at least that's what they say that they tried to do. But they leaned into it and sort of kept going with it and realized that they had a moment here that they could step into, and then followed it up with another big brand partnership with Travis Kelce.
Does it tell us anything about the consumer and the health of the consumer at this moment? Maybe the fact that there is still a disposable outcome, especially with younger customers who want to buy the same thing that Sydney Sweeney or Travis Kelce are wearing.
Yeah, I mean, I think people want to buy the stuff that's cool, and that's always been the case. And so the only way to get people spending in an economy like this, where people are a little bit uncertain or teetering, one way or another, is to make a big deal about it, make it really cool. And so this is sort of, they a little bit of luck, a little bit of, really leaning into it at the moment.
Making things cool. I think that's kind of an interesting theme when you look at the likes of Macy's, for example, trying to do a turnaround. A lot of these retailers hoping to achieve a turnaround. How much are we in an environment of a fickle customer that isn't just going to buy, that you really need to show up and give them offerings with taste changing so quickly?
Yeah, I mean, I think that's exactly the playbook right now. They really, the brands that are doing well are really leaning into it and really trying to say, okay, what can we do, even if it's one thing, if it's one partnership with one buzzy thing or one buzzy person, how can we give people a reason to actually buy something right now?
Speaking of buzzy things, Gap announced that it's going to expand beauty items and accessories in its Old Navy stores. I'm going to be honest, if I think about buying, like, I don't know, a face mask or something, Old Navy would be so far off the list that maybe it doesn't even factor. Why push into this area for Gap?
Yeah, this is a huge area, beauty right now. I mean, it has been for the last few years, particularly face care and skin care, especially with the tweens, the teens. This is where they are dragging their parents, screaming to Sephora, being like, give me your credit card, let me spend some money over here at Sephora. And Old Navy wants to tap into some of that.
It wants to tap into it. How much of this is also just for a grab of people who want that, but are also looking to trade down, that maybe don't want to spend as much as a Sephora trip would set you back?
Exactly. I mean, when you want, that little luxury, it's the whole lipstick index, concept where I can afford to buy something like this. Maybe this will bring me into the store. Maybe there will be a buzzy TikTok moment at Old Navy that'll bring people in to buy these things.
Is this all it is now, just TikTok driving sales, Shelley? Is this the new world we're in?
It really is. It really is.
But it's scary because it also means, to your point, that literally tweens are like, what anti-wrinkle cream do I need? And what's my 10-step skincare routine for children whose skin is completely fine?
You talk to most 10, 11, 12, 13-year-old, especially girls, but also boys, they know they have a skincare routine, probably better than you and me.
Probably. Shelley, that's terrifying. But I guess good news for Gap that's expanding into there. Shelley, thank you so much for joining. I really appreciate it. That is Shelley Banjo. By the way, in the next hour, we're going to hear from Gap Inc. CEO Richard Dixon. He's going to be joining us, sitting down with Lisa Abramowitz at 10:30 a.m. New York time. We'll see what he has to say about expanding into beauty and accessories. All right, a check on stocks this morning, about 25 minutes into your trading day. Again, we are moving higher, not by a huge amount, 0.1% for the NASDAQ. S&P goes up 0.2%. And see the Russell 2000 outperformance there again with more easy and stability environment in this bond market. Bonds this morning, yields are lower for your 10-year yield, down by 3 basis points. We've had a lot of jobs data coming in, ADP worse than expected. The jobless claims, though, those looked mostly steady, but challengers, that one really looking tough. Hiring plans for August, they were their worst August ever since the data going back that Challenger was trying to capture. We're talking with Mike Wilson earlier, who said that cuts are coming, and this is a Fed and a government that is going to run the economy hot, and that means any of those dips you can buy. Well, coming up, we're going to hear from Karen Pay, Head of Portfolio Management at Fiduciary Trust, plus Tom Bravo, Seth Burrow on infrastructure, software, and cyber investments. And live on Capitol Hill, Stephen Myron, President Trump's pick for Fed governor, will be testifying. We'll bring you that in the next hour. You're watching Bloomberg Open Interest.
For Trump to have been, you're never too young to learn AI. That's why he's urging the government for school kids as young as 6 to be taught how to use it.
Within this system, from first grade, they all start with the AI education. They play 4 years, just playing. And then from 5th grade, they start to develop AI by themselves. And STEM and robotics, I see very clearly how Vietnam should be in future. Vietnam just about 100 million people, young people, good education, and latest technology. That's the only way to go. Education not contribute much profit for equity, but from the country point of view, that's most useful contribution what equity should do. And today we're thinking about every kids, not in cities like Hanoi or Ho Chi Minh City, but kids in the countryside should got the good education. That's what we're going to do now.
So you're leapfrogging?
Yes, exactly.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Sparks could fly when Health Secretary Robert F. Kennedy Jr. begins answering questions at a Senate hearing that gets underway in half an hour. Members of the Democratic Congressional Doctors Caucus have been rallying outside, among them Minnesota Congresswoman Kelly Morrison.
We have had a complete political takeover of our nation's top health agency.
Correspondent Natalie Brand.
This hearing is expected to get heated as Secretary Kennedy faces tough questions and growing concerns over the massive changes he's made to the CDC. Ahead of the hearing, 1,000 current and former Health and Human Services staff members released a letter saying that Secretary Kennedy's actions are, quote, compromising the health of the nation, and they're calling for his resignation.
The first day of classes getting underway in Florida, first day since the state Surgeon General announced he wants to do away with vaccine mandates. CBS Miami's Bree Buckley is outside a high school in Pinecrest.
Here at the school, there was a student who caught measles a few months ago, so that announcement really hitting close to home here. Officials here at the school say they were able to stop an outbreak, but now the worry is that that might not be the case moving forward if the mandate is changed.
Texas lawmakers have passed legislation that cracks down on mail-order abortion pills. CBS's Michael Wallace.
It's already illegal to provide abortion pills in the Lone Star State. This bill will allow residents to sue doctors, abortion pill makers, and delivery companies like UPS and FedEx for damages, even if those residents have no connection to a pregnant woman. Opponents say the legislation deputizes Texans as bounty hunters and may illegally export Texas law across state lines.
Investigators are searching for the cause of a streetcar crash in Lisbon, Portugal that killed 16 people. The BBC's Alison Roberts.
The car hurtled down the very steep slope, as eyewitnesses indicated, and only did not crash into the other car standing at the bottom of the slope because there's a slight curve just before the end.
The 19th century streetcars are a popular tourist attraction. An Italian-born fashion master is gone. His company says designer Giorgio Armani has died. Correspondent Matt Piper looks back.
Despite being one of the biggest names in fashion, Giorgio Armani told CBS News that he always worried no one would like his next collection.
Sono terrorizzato.
I'm terrified, he said. But the designer who made the cover of Time magazine had no reason to be. He was a hit with the public and popular with filmmakers. And while Armani started out designing clothes, his multi-billion-dollar empire would eventually extend far beyond fashion to include luxury goods and services.
Giorgio Armani was 91 years old. The Dow's up 35 points. This is CBS News. A court hearing today could settle how a prison inmate will be put to death.
In Alabama, a murder convict condemned to death filed a lawsuit not to overturn the punishment, but to change the planned method of execution. Legal analyst Lori Levinson says Anthony Boyd argues death by nitrogen gas amounts to cruelty.
It's not that Boyd won't get executed. The question is how. He wants a firing squad or he wants hanging. It's unclear whether Alabama is set up to do that and whether there might be a delay if he wins with this lawsuit.
The lethal gas causes suffocation. It's also being challenged in Arkansas. Louisiana carried out the procedure in March. Steve Kathan, CBS News.
So many great songs. How do you choose? Lin-Manuel Miranda tells people his favorite from his musical Hamilton is Wait For It, sung by Leslie Odom Jr.'s character, Aaron Burr. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, good Thursday morning. We are broadcasting live from the Power Players New York Conference at Bloomberg HQ in Midtown Manhattan, the 6th floor, the famed 6th floor where all the buzz is, everybody running around all the time, and that's where this conference is taking place on the 7th floor here. Bringing together, Scarlett, a lot of players in the business of sports, the folks that are involved in the leagues. I mean, kind of everybody coming together here for the business of sports.
It's a real gathering, and it takes place in early September before the start of the NHL season, the NBA season, and, of course, the NFL season, which is the granddaddy of them all when it comes to money in sports.
Yep, so we're going to sprinkle in a lot of the speakers that are speaking here at this conference, and that'll be cool. I'm also going to check out with Michael McKee, get his thoughts on what's happening down there in Washington, D.C. Mr. Myron is going to be in front of the Congress and getting talked to and discuss some of his candidacy for the Fed, and we'll break that down with Michael McKee. So we got a lot coming on. Angela Ruggiero, co-founder at Sports Innovation Lab, and also an executive board at World Rugby. So we're going to talk about women's sports, including the World Women's Rugby coming up as well. Jason Kelly, Bloomberg Originals chief correspondent, is going to give us kind of a lowdown on what to expect here at this Power Players Conference. So a lot coming up over the next couple of hours here from the Bloomberg HQ, the 6th floor. But right now, let's go to John Tucker and get a Bloomberg Business Flash. John.
All right, guys, this flash being brought to you by IBKR. Will September 2025 be the warmest September on record? At IBKR Forecast Trader, the yes was recently at 11%. You can start predicting today at ibkr.com/forecast. Last trading day for this contract is October 10th. We are data dependent. Let's start with the biggest part of the economy. Services. The headline ISM Services Index rising to 52. That's better than expected. Anything above 50, remember, that signals expansion. Right now, 9 of the 11 major industry groups in the S&P 500, they are pushing higher. Consumer discretionary in the lead, and that's where you're going to find shares of Amazon. They're up 3.2%. After the close, we heard from Salesforce. Those shares this morning down 8% in the early going. They projected quarterly sales growth kind of lackluster. This is also an AI story. Investors have been pretty anxious that the incumbent software maker is going to be outshined by new AI-based vendors. Right now, the S&P 500 up just 3 points at 64.51. The Dow Jones Industrial Average 23 points lower. The NASDAQ 100 down 10 points right now after more evidence of slowing in the labor market. Remember, we got ADP, which kind of gets a little more oomph after the revisions to the non-farm payrolls in previous months. The 2-year, which is more policy reactive, that is down right now 1 basis point. We're right at 360. And just to recap, the Justice Department, according to the Wall Street Journal, opening a criminal investigation into Federal Reserve Governor Lisa Cook. They've issued subpoenas, according to the Journal, as part of this inquiry into whether she submitted some fraudulent information on mortgage applications. Much more to come on that. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney, we are live, broadcasting live from the Power Players New York Conference at Bloomberg's headquarters in Midtown Manhattan. And we're also watching Senate Banking Committee confirmation hearing to consider Stephen Myron to be Federal Reserve Governor. When that kicks off, we will dip into that as well. But right now, let's get a look at what's happening in the markets here. We can do that with Bloomberg Equities. Christine Aquino. Christine, what are you looking at?
Well, Paul, let's look at HP Enterprise this morning. Ticker HPE. Those shares are rising, up more than 3% at the moment. We did get their third quarter results. Net revenue beating estimates. Fourth quarter adjusted EPS also in line with forecasts. They did flag a narrower adjusted operating margin, down slightly to 8.5% from 10% year over year. But Bloomberg Intelligence says that the company is past its server execution issues and that it should get back to free cash flow on track in fiscal 2026. And so it looks like investors rewarding HP for those solid set of results here.
All right, very good. What else you have for us today?
Taking a look at C3AI this morning. Ticker AI, those shares not doing very well, down more than 6% at the moment. So this is a company that's focusing on developing and operating enterprise AI applications. They forecast revenue for the second quarter that missed the average analyst estimate, and they're doing a management shakeup. They just named a new CEO, Stephen Hicken, who was most recently an acting administrator of the General Services Administration under President Trump. He's also a Salesforce alum. Bloomberg Intelligence, though, saying that the company's weak fiscal first quarter results and disappointing second quarter sales outlook illustrates the continuation of execution challenges that the company has faced over the last few quarters.
All right, and we got American Eagle.
American Eagle.
Is this a meme stock? What are we doing here?
It may be a meme stock today. I mean, shares are up more than 30% at the moment. So ticker AEO, that's doing really, really well. After we did get their results for the second quarter, net revenue of $1.28 billion, beating estimates, though it is still slightly lower from their year-on-year figure. And third quarter operating income forecast, $95 million to $100 million. That's right in line with estimates here. But the kicker here is really their most recent ad campaign with Sydney Sweeney, all about the jeans.
Right.
I know. Have you seen this, Paul?
I just saw it. Don't worry about my jeans. Army Navy store, Levi's. I'm solid Levi's.
Okay, you're a Levi's guy.
Yeah.
Okay. So probably not a customer, but Chief Marketing Officer Craig Brommer crediting that ad campaign with actress Sydney Sweeney as a real driver of revenue for this period.
But how long is that sustainable? I mean, I get the boost that it gives sales for now, but I can't see this being something that they can count on going forward.
Absolutely, Scarlett. I mean, it's certainly generated a lot of buzz over the summer, but the question really is how sustainable is it, especially because the company did also flag quite a substantial tariff hit. And of course, once we're past the seasonal trends of back to school shopping and all of that, that is really a question of sustainability. But, you know, they're also going to be banking on a collaboration with Travis Kelce's True Colors brand. So it seems like they're really leaning into the celebrity endorsement tack so they can keep up this momentum.
All right, Christine Aquino, thank you so much. We appreciate that. Bloomberg Equities reporter Christine Aquino there giving us the stock reports. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's get a little economics talk going on there.
Absolutely. We have data coming out. We also have the Stephen Myron confirmation hearing. Michael McKee, our Bloomberg International Economics and Policy correspondent, is on Capitol Hill right now. So, Mike, this is expected to be smooth sailing for Stephen Myron, isn't it?
It's expected to be smooth sailing, but he's going to have to go through some rough seas first. The Democrats who are on the Senate Banking Committee are going to hold his feet to the fire. He'll get through that, of course, but they are going to ask tough questions about his political stances because he has suggested in the past that the president should have more control over monetary policy. And no doubt they will ask him about the Lisa Cook case. He'll probably try to bat that away, saying it's a criminal case now, so I can't talk about it. But there are going to be issues in terms of whether the president is trying to destroy the Fed. And we have Senator Elizabeth Warren, the ranking member of the Banking Committee right now, making that case very forcefully in her opening remarks, saying that Trump is scheming to destroy the independence of the Fed and create his own lackeys to do what he wants, to use its power to please the president, but not to control inflation. So you can bet there will be some tough questions for Mr. Myron.
What is the feeling, Mike, down in D.C., in the halls of Congress about what President Trump may or may not be trying to do in terms of influencing the Fed? What's kind of the consensus brewing down there?
Well, I think you'd see in people in private saying, yes, Trump is trying to interfere with the independence of the Fed, but Senate Republicans are too scared to do anything about it, so they won't talk about it in public, and they will just let Myron go through, figuring, well, he's only going to be there for a couple of months, according to the president. The Cook case presents something different, but it is also down the road. It isn't clear whether she'll be able to stay in office during the time that all of this is litigated, but if she is, then the president can't appoint a replacement right away, and he's going to have to wait, as everyone else is, until this all plays out. So we're a few days away from knowing what's going to happen on that score, Paul, but I don't think we're going to see a lot of opposition here on Capitol Hill unless the markets tell their senators that they should be scared.
All right, Michael McKee, thank you so much. Our international economics and policy correspondent, Michael McKee. And just a reminder, if you hear some background noise here, it's because Paul and I are live at Bloomberg Power Players New York. This is a Bloomberg Live event that we're talking about the business of sports, which is a multi-trillion-dollar global industry, and we're bringing you influential voices from the business behind sports to help you identify what's next. So I'm thrilled to welcome Angela Ruggiero. She is co-founder at Sports Innovation Lab, executive board at World Rugby and at International Olympic Committee, and of course you might well know her as a gold medalist, four-time Olympian, a former ice hockey defense woman. Angela, great to see you.
Thanks for having me.
This is not your first time around at Power Players. What does this event mean to you and the growth of women's sports?
Yeah, love getting in the room with smart people, with data, with understanding what the trends are. I think it's behooves everyone to just stay in the know of what's happening. This event does that. Yeah, women's sports is one of the probably major trends that I think everyone's going to be talking about today. It's just in the last 5 years exploded, and particularly in the last 2, you're seeing valuations going up. You're seeing a lot of transactions happening that, you know, even 3-4 years ago, no one was paying attention. Well, I was, for the record.
You're a pioneer.
I was telling everyone our company's data at Sports Innovation Lab, we were pumping it out, saying there's a business case here. There's an undercurrent of fans that want to buy and spend money, and there's a market, and so it's nice to see the market finally catching up.
And Angela's had such a career. My favorite, I think, is you're a member of the 2015 Hockey Hall of Fame, only the 4th woman, very cool. Caitlin Clark effect. That's just been phenomenal, I think, for a lot of people.
Yeah, it's funny. The league's been around. W's been around forever.
Yep.
So there's so many great players. It's not like the game has changed, but she's just has star power that's exceeded, I think, all expectations. I'm actually an investor in the WNBA. I invest pre-Caitlin Clark. And to see her effect on the league in terms of just visibility and reach is profound. And I think what she's done, not only for the WNBA, but all the women's sports leagues, has shown that, hey, there's a market here. Brands are excited. It only takes one breakthrough star. Think Alona Maher on the rugby side. There's a few stars you can identify that are breakthrough stars, and those are really, I think, capturing what the future of sports overall looks like. You know, talk Jason Kelsey, talk any of these big players that exceed the sports arena. That's what Caitlin Clark is.
Yeah, she's larger than life. She's larger than the WNBA. I guess my question here, though, is as everyone tries to capitalize on this moment in women's sports, all the interest, all the money, how do you make sure that you don't grow it too fast? That's happened with the WNBA in the past, where they expanded too quickly and then they had to retrench. How do you do this carefully, in moderation, so that it's sustainable?
It's a great question. I think that is the key. There's a lot of interest from investors now, which is fantastic. I think there's 10 or 12 women's sports private equity funds that have popped up in the last 2 to 3 years. You have bigger funds saying we want to be in the game, but those revenues have to catch up, right? There's a laggard effect. Either you're getting out of old contracts and renegotiating new. That's what you see with the WNBA and the NWSL, or sponsors are coming in. So we see brands saying, okay, maybe we've spent 5% of our marketing budget. We should be spending 10, 15, 20%. And that reallocation is going to the women's game. You're seeing media partners, again, previously not spending anything, maybe just paying production costs. Now that's a big piece of the check. Women's sports traditionally has relied on sponsorship, ticket sales, and a little bit of merch. And again, now you're getting media, which is the big bucket the men survive on, coming in the door. So, yeah, it's a great point. I think slow and steady wins the race here, but investment. It's okay to be in the red, right? I think previously there was this unfair expectation on the women's game. You should be profitable in 2 to 3 years or else we're out. Whereas in the men's game, you know, you could be in the red 2 to 3 decades. Literally, look at the MLS.
Yep.
But now you're seeing, okay, enterprise value and growth. So slow and steady, but a long-term play, if that makes sense.
How about women ownership of sports, just in general? Kind of where are we, and how would you like to see it go?
Yeah, it's great. More women. Look, there's more wealth out there. Women are, think of the family office trend. They have more dollars to spend now, and you never had this opportunity to spend it against a women's asset class like women's sports. So I think you're seeing a lot of family offices, in particular, saying, look, private equity and kind of that capital will come in soon, but in that personal wealth, you see the Michelle Kangs out there saying, hey, no one's taking the bet. I'm going to take the bet. And they're first to market. I think they're seeing that upside. So I'm very excited because there's so many women and men, quite frankly, families that have daughters or believe themselves that women deserve that kind of investment to grow. And that's absolutely changing the game.
Angela, such a pleasure to speak with you. Angela Ruggiero, co-founder at Sports Innovation Lab and on the executive board at the World Rugby and at the International Olympic Committee, a familiar face for those of us who attend the New York Power Players Conference here at Bloomberg. Thank you.
Thanks for having me.
All right, let's go now to John Tucker, who's going to give us a data check. John.
All right, guys, as we look at the early going, not a lot of movement with the equities. This Bloomberg Business Flash being brought to you by IBKR. Will September 2025 be the warmest September on record? At IBKR Forecast Trader, the S was recently at 11%. Start predicting today at ibkr.com/forecast. Last trading day for this contract, October 10th. Trifecta of weak jobs numbers this morning. Applications for unemployment benefits, they rose to the highest since June. And then you had private sector payrolls increasing by just 54,000. That's according to ADP research. That trailed all the estimates. And hiring plans fell to the weakest level for any August on record. That's according to the outplacement firm Challenger, Gray & Christmas. Of course, this all comes ahead of the non-farm payrolls report that we get tomorrow. S&P 500, 5 points higher right now, 64.53. The Dow up 23 points. The NASDAQ 100 down right now, 7 points. Among the most active shares of Salesforce after their results after the close yesterday, right now 7% lower. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Now back to Scarlett and Paul.
All right, John Tucker, thank you so much. Scarlet Fu, Paul Sweeney, broadcasting live from the Power Players New York Conference at the Bloomberg HQ 6th floor. We're waiting on Senate Banking Committee confirmation hearing to consider Stephen Myron to be Federal Reserve Governor. We'll bring that to you when it happens. Let's go down to Washington, D.C. right now, checking with Michael McKee, Bloomberg International Economics and Policy Correspondent. Hey, Mike, what do you expect from... I'm sorry? No Mike McKee. Okay, so no Mike McKee. All right, let's go to Jason Kelly.
Jason Kelly, who's come over.
What a poor substitute.
Exactly.
What a
We're going to
letdown.
get the Michael McKee.
Oh, my God.
Jason, this is some get-together that has been put together. The Power Players, sports, business coming together. You know about it as well as anybody. And Scarlett, you guys on the business of sports, what do you expect to learn today?
Well, I expect to learn a lot from Scarlett's panel with Gary Bettman and Ted Leonsis. That's a deep tease. That's going to be a great set. Listen, these are two guys who have a huge investment in the future of sports, obviously the NHL, and then Ted Leonsis owning both a very successful hockey team and a less successful basketball team, but he's a successful guy. So we're looking forward to that. You probably just saw David Rubenstein go by. He's going to be doing a live taping of his show, Peer-to-Peer Conversations, with none other than Maria Sharapova. So that's how we're kicking off. We're going to go deep into the world of college sports. Nina King.
Yep, Duke.
Duke's athletic director is here. I literally was just chatting with her across the pantry. So what a time to be talking about college sports. And we're going to have lots more, including Carl Anthony Towns, and then a special taping of The Deal, my show with Alex Rodriguez, with none other than Justin Tuck. Wow.
What are the big themes? I mean, you mentioned college sports, and I imagine that will take up a lot of the oxygen because there's so many changes, and it's gone from the wild west of NIL, name, image, and likeness deals, to something with sort of some rules, but no clear understanding of how it'll work and how it'll be enforced.
Yeah, I mean, I think that's going to be a huge topic throughout the day. You know, clearly we're going to zero in on that. We have the athletic directors, not just from Duke, but from Ohio State, UCLA, and Dartmouth. Ohio State, obviously, the #1 football team in the country, a huge upset win over the weekend. It was, we love our size and scope here at Bloomberg, that was the most watched college football game in history.
No kidding. I tell you, the numbers just keep going up across the board. All right, Jason, we'll let you go. We know you're busy here today. Jason Kelly, Bloomberg Originals chief correspondent on the Power Players event here. So we got a lot of people walking by.
I'm distracted because I'm keeping my eye out for different people who are walking by. I mean, Jason was just talking to David Rubenstein. He was just talking to Nina King. I mean, I'm just looking for people scanning about to see if they're going to swing by our booth and come talk to us as well. Angelo Ruggiero stopped by. Maybe Carl Anthony Towns will show up early.
Yes, exactly. All right. Let's get down to Washington, D.C. right now. Senate Banking Committee confirmation hearing to consider Stephen Myron to be Federal Reserve Governor. Mr. Myron is speaking. Let's go down to Washington.
For 2 decades, beginning with my doctoral research in economics at Harvard, I am thankful to have been advised by my CEA predecessor, Marty Feldstein. For the majority of my career, I was active in public markets, particularly interest rates and currencies. I learned firsthand the substantial sway that monetary policy and market structure hold over the price and availability of credit. But those borrowing costs are not just a Wall Street phenomenon. Purchasing a car or a home are major milestones in pursuit of the American dream. Affordability and interest rates affect decisions to have children or start a business. The flow of credit and liquidity is central to America's banking system, and by extension, global capital markets. The Fed's role safeguarding these is of paramount importance. In my view, the most important job of the central bank is to prevent depressions and hyperinflations. Independence of monetary policy is a critical element for its success. Given the central bank's outsized role in the economy, it's no surprise that outsiders have opined on its decisions for decades. However, if confirmed, I plan to dutifully carry out my role pursuant to the mandates assigned by Congress. My opinions and decisions will be based on my analysis of the macroeconomy and what's best for its long-term stewardship. The Federal Open Market Committee is an independent group with a monumental task, and I intend to preserve that independence and serve the American people to the best of my ability. But the Fed's operations expand well beyond this scope. Managing financial system liquidity is a complex exercise requiring regular fine-tuning. The Fed oversees the most important global financial institutions. It sets varying prices of money for borrowers and lenders, including other central banks. The ultimate composition of the Fed's balance sheet is an open-ended question. Effective monetary policy is critical to the well-functioning of the economy, the preservation of America's robust capital markets, and the growing prosperity of our nation. Congress wisely tasked the Fed with pursuing price stability, maximum employment, and moderate long-term interest rates. If confirmed, I will transparently and honestly work towards that pursuit with the goal of preserving a stable and healthy economy that benefits all Americans. Thank you, and I look forward to your questions.
Thank you. Mr. Pickleton.
All right, that's we're listening to Stephen Myron. He's being considered to be the Federal Reserve Governor, listening to his comments down at the Senate Banking Committee confirmation down there in Washington, D.C.
I feel like this is a done deal.
I do too.
Given the makeup of Congress and given the support that the Republicans have given the president and all his appointees. So let's bring in Stuart Paul, of Bloomberg Intelligence to give us a little more context around this appointment. Stuart, Stephen Myron, we just heard his opening comments. What kind of governor will he be? What role would he serve on the Fed board?
What's interesting is that he's coming from the administration. We expect that he's going to effectively argue for reducing rates. He's going to likely argue for consecutive rate cuts. What's interesting about him individually as a person is that he has strong academic credentials, and while that's not out of the ordinary on the Fed board, he's going to be able to bring in an alternative academic perspective rather than relying strictly on the Fed staff. He's going to have his own unique perspective to offer, his own analytics that he's constantly running. He has a deep background in financial markets as well. And so he's going to be able to look across a broad swath of indicators to make whatever the argument is that he's looking to make, which in this case is going to be 4 cuts.
Right, and that's fine. Wherever the data takes you, I guess there's some of the concern in the marketplace is particularly to the extent that the Fed loses some of its independence. What does that mean for the global economic markets? I guess confidence in the U.S. Markets, the Treasury markets, just the whole thing. I mean, is that a viable concern you hear from the clients you talk to?
Every now and then, obviously, we've seen some fading of the concerns around the political independence of the Fed, right? As soon as Trump tweeted out that Lisa Cook was going to be brought up on charges or that DOJ was investigating her, he did this on August 25th, the markets completely just shrugged off the idea of the Fed losing its independence. But I think something that might be more important is that through time, there could be a sort of a dislocation between short-term rates and long-term rates. For example, when you start sacrificing the political independence of the Fed, you have to start baking in a larger term premium. You have to expect that maybe inflation will run a little bit hotter. And by including somebody like Moran in the Board of Governors, somebody who is, again, going to be arguing in favor of cuts and doing a bit of the administration's bidding, you could expect to see rate cuts, but we might not see that ripple through into the long end of the curve.
Okay, so we know that he'll be campaigning for lower rates. That is what President Trump wants. The Federal Reserve also has this massive balance sheet. What does someone like Stephen Myron on the board of the Fed governors mean when it comes to utilizing that balance sheet, or at least giving President Trump the option to utilize it?
I think this is what's interesting, is that in his opening remarks, he makes it seem as though he's going to be much more cautious about using the balance sheet. For example, in the monetary policy framework review that was unveiled at Jackson Hole, it seemed to be the case that the FOMC was more willing to do extended QE and to have more of an active balance sheet policy, especially when they get to the zero lower bound. But as we heard from people like Kevin Warsh, as we heard from Stephen Myron, as he alluded to in his opening remarks just now, it seems as though he believes that the Fed's bloated balance sheet goes way beyond what was envisioned by Congress when they installed the Federal Reserve with the power to conduct open market operations. And so while an easier policy would include something like more asset purchases, it seems as though he's not necessarily willing to go so far as to say, this is a new day where we can just run a big balance sheet permanently and forever.
Can you remind us just how the FOMC kind of really works when it comes to setting rate policy? Can one person have that much of an influence? Good
question.
Well, it's interesting. So, of course, we look at the median dot of FOMC participants, and if one member shows up and says, I expect that we're going to cut rates 100 basis points before year end, he's actually not going to move that median dot, right? He's only one person, and so he's not going to shift the median among the entire distribution of dots. But he's going to be a vocal participant and somebody who could help to guide the conversation and to help build a coalition around the idea of additional cuts. And I think that that's exactly what he's going to try to do. And he's also likely going to be the kind of person who's going to be public-facing. He's very comfortable with media. He's very comfortable in front of large crowds. And to the extent that he's deviating from the typical messaging that we get from somebody like Jay Powell, I think that we're going to have somebody else contributing to the conversation in a meaningful way and helping to guide expectations towards cuts.
Okay, towards cuts, and everyone, of course, is pricing in this 25 basis point cut, at least in September. We did get some economic data today. It is Thursday, so jobless claims came out, and this is all in the drumbeat to the big jobs report tomorrow, which comes out at 8:30 a.m. What did the data show, and how does it set up expectations for tomorrow's report?
Basically, across the board, the data's been pretty weak for the labor market this week.
So if you want a rate cut, this is what you want to see.
That's exactly right. So initial claims continued marching higher, and we are at a point in time where layoffs are of particular interest. Claims have been sort of range-bound between 200 and 250,000 a week for the last 2.5 years. It's been uneventful. But claims have been marching higher consistently for the last 6 weeks, and this is at a time where the pace of hiring is running about half what's needed to maintain a steady unemployment rate. If we start seeing layoffs accelerating, that's exactly the sort of cooling of the labor market that the Fed is trying to avoid. We've also seen ADP numbers that surprised to the downside. Brevelio released its estimates of non-farm payrolls, also running about 50,000 for the month of August. So weak numbers there. Labor demand cooling, according to JOLTS data. Less job openings during the month of July. It's a little bit dated, but as an indicator of firms' hiring plans, weak. Challenger hiring data, also weak. Across the board, labor market data looks pretty weak heading into this August payrolls report tomorrow. This is what's a little bit tricky, is that August estimates are always bad. They're always bad. August is the month that has the largest miss, the largest absolute value.
Do we know why?
Miss. I guess people go on vacation.
It's not enough estimates coming in.
We need AI. This is what's crazy, is that the survey responses both to Bloomberg, the survey responses to the Bureau of Labor Statistics, the volumes of the survey responses that are submitted are normal, but the quality of survey responses that are submitted in the month of August are terrible. So prepare for a surprise tomorrow.
How about just the unemployment rate? Fed Chairman Jay Powell said we pay attention to that. I mean, if it ticks up to 4.3%, is there a level that really gets the attention of the Fed?
They're expecting basically to end the year around 4.4%. The thing is, though, that when we're already running at a pace of hiring that's half what's needed to maintain a steady unemployment rate, and we see layoffs continuing to rise, we're at a point where we can see the unemployment rate really reach an inflection point and start accelerating, rising rapidly. And that should cause concerns.
So when it comes to the data, the labor market, as you mentioned, we have a consistent picture here of some weakening in the labor market. In terms of inflation, it's been coming in pretty much as expected, which is everything is above the Fed's 2% target. With someone like Stephen Myron on the board, do you think that we'll get some wiggle room with that 2% target of inflation? Could the Fed start to change that to 2-ish?
I think more likely he's just going to argue that inflation pressures are not persistent and they're not attributable to tariffs. What's going to be a little bit tricky is that he's going to then need to find a way to say that the inflation pressures that we are seeing are neither from tariffs, because that would draw the ire of the administration that he is departing, and are also not from the labor market, because both would warrant staying on hold, basically. So it's going to be difficult for him to thread the needle and create the argument that we should have consecutive cuts. But just to say, look, our job as monetary policymakers is to skate to where the puck is going. Right now, inflation is running a little bit hot, but people are feeling the pinch of declining real wages. The labor market is cooling. And if our job is to manage the punch bowl at the party, this might be the time to look around, see the crowds getting a little bit light, and we should spike the punch bowl to keep the crowd a bit more lively. And I think that that's basically what he's going to say. He's going to say the indicators that we're looking at suggest that we can maintain our 2% inflation target, to Scarlett's point, while also cutting in anticipation of further cooling of the labor market.
It's interesting because he's skating to where the puck is going, yet all right. All right, so we're going to run right back down to Washington, D.C. That was Stuart Paul talking the labor market for U.S. economics. Let's head back down to D.C. Mr. Myron, Q&A. Kim Scott is speaking. Mr. Myron is Tim Scott. Let's go down to Washington.
And thank you for the opportunity to discuss these with you on these issues with you on the phone prior to the hearing. I couldn't be more in agreement that independence of the central bank is of paramount importance for the economy, for financial markets, for the long-run stewardship of the country. All of those are completely in complete accord with. Look, the president nominated me because I have policy views that I suppose that he liked. If I'm confirmed to this role, I will act independently, as the Federal Reserve always does, based on my own personal analysis of economic data, my own personal analysis of the effects of economic policies upon the economy, and act based on my judgment of the best economic policy possible. That said, I'm always happy to hear views from every source possible. It's important to me to hear a variety of views to make sure that I really do think that the things that I think, to challenge my own views and interrogate them, and hearing a variety of views on that matter is always helpful.
I'll tell you, Dr. Myron, one of the things I like about you is that you're clear, you're consistent, and you've been honest. And you have been clear with me and consistent with me and honest with me, and I appreciate that a lot. I do think I want to reinforce the importance of the Fed's independence because it is something that I actually believe is paramount for our country and for our economy. That said, the current concept of the Fed has led me, especially under Michael Barr's supervision when he was the vice chair of supervision, I had real challenges with Basel III. I could not figure out why every time I heard Jay Powell talk, he said that the amount of reserves we had was about right, but it kept going up every year. And so my question to you really is about the Basel III and the supplementary leverage ratio reform and the immediate priorities that you would take on at the Fed. Can you briefly describe your plans to ensure that the capital framework is looked at holistically so that financial institutions are not forced to keep capital on the sidelines, which ultimately limits access to credit for Americans? We are in a homeowners crisis. We need more small businesses starting. They need access to capital. How do you tackle that?
Thank you, Senator. I agree, or I share some of your concerns around Basel III and some of the regulations entailed in that process. I do believe there needs to be a fulsome process of the Fed for thinking about not only the benefits of regulations, but the costs as well, and thinking about the consequences of those regulations for the provision of credit into the economy. And exactly along the lines that you were discussing before, are small businesses going to be able to get credit? Are various borrowers in the economy that need that credit, are they going to be able to get it? And so I do think it is time for a fulsome examination of the process, of the regulatory process, to sort of think about where we want it to be going forward. And I'm very happy to work on that if confirmed to the Federal Reserve.
I'll finish with you with this last thought. The more incentives that there are in place for banks to leave more capital on the sidelines, whatever the incentive is, perhaps is challenging to small business owners and for those first-time home buyers. I'll leave it there. Mr. Hobbs, your work on Opportunity Zones is something I celebrate. Obviously, it's something that I have a great respect for, is your work ethic. Walk me through the lessons that you learned working on Opportunity Zones and what that means for our economy and, frankly, for providing more apartments, more housing, and frankly, diversity in the housing space is incredibly important, as we're seeing for the first time in I think 4 decades, the first-time home buyers' average age is 38. You have about 40 seconds to finish up.
Thank you, Senator, and it's a pleasure to be here. Great to see you. Very quickly, I worked on the implementing regulations for the tax incentive, and I also worked as part of the White House Opportunity and Revitalization Council. There, we targeted, streamlined, and coordinated over 150 different federal programs to opportunity zones, which drove both public and private investment in some of these distressed neighborhoods. It's vitally important. My hometown has an opportunity zone, and I know it's lifted at least 1 million people out of poverty.
Thank you, with 6 seconds to spare. Appreciate that. Ranking Member Warren.
So thank you, Mr. Chairman. And Mr. Chairman, I agree with you.
And you're listening to the Senate Banking Committee confirmation hearing for Stephen Myron to be a member of the Federal Reserve under the questioning right now. Ranking Member Elizabeth Warren, a Democrat
has
of
launched
Massachusetts.
an all-out assault on the independence of the Federal Reserve. Dr. Myron has said that, quote, To pretend that one can easily shift between highly political and allegedly non-political roles without letting political biases inform policy is at best naive and at worst sinister. So that's what you're about to do. Go from a highly political role to a non-political role. And since you describe how you'll be informed by your political biases, I think the American people have a right to understand just how independent you are or are not. So let's measure that a little bit. Dr. Myron, let's start with an easy question to show that you have some independence from the president. Easy yes or no. Did Donald Trump lose the 2020 presidential election?
Probably have to
No, it's a yes or no.
Microphone on, please.
Hold the microphone.
Come on, and the chair is going to be tough on time. I just need a yes or no. Did Donald Trump lose the 2020 presidential election?
Thank you, Senator Warren. Joe Biden was certified by Congress as the president of the United States.
Right. So did Donald Trump lose that election?
As I just said, Joe Biden was
Did
certified
Donald
by
Trump
Congress.
lose that election? Can you say the words Donald Trump lost that election? Are you independent enough to say that?
The Congress certified Joe Biden as president
All
of the
right,
United States.
so that was one. Let's try another. Let me ask you another question here. The Federal Reserve relies on accurate and unbiased data to make monetary policy, including data produced by the Bureau of Labor Statistics. President Trump recently fired the BLS commissioner, alleging that she, quote, faked the jobs numbers before the election to try and boost Kamala's chances of victory. Do you agree with President Trump that the BLS published fake numbers to manipulate the outcome of the 2024 presidential election?
Thank you for the question, Ranking Member Warren. Look, the data quality from the Bureau of
That's
Labor
not the
Statistics.
question about the data quality. Did, as President Trump said, the BLS publish fake numbers to manipulate the outcome of the 2024 presidential election? This is what President Trump said. Is he right? You're the head of the Council of Economic Advisors.
The Bureau of Labor Statistics data on various measures has deteriorated steadily in quality over time.
I understand that you may have questions about the data quality, but I want to remind you that when the data seemed to show that Donald Trump's jobs numbers were doing well, I didn't hear you say a single word about problems with data quality. The only time you started questioning data quality was when the numbers started showing that Trump's economy was headed in the wrong direction. So let me ask you the question for the third time. We want to understand your independence. Donald Trump stated that the BLS faked the job numbers before the election to try and boost Kamala's chances of victory. Do you agree with that, yes or no?
The Bureau of Labor Statistics did not take corrective action to improve the quality of steadily
Do you
deteriorating
agree
data.
with the statement that they faked numbers?
I believe that they were complacently allowing the data to
Do you
continue to
have
deteriorate
any
in quality.
evidence that they faked numbers?
Well, as I said moments ago, the data have steadily deteriorated in quality, and I'm happy
Okay,
to
in
give
other
some
words,
examples
just
of how
two
that has happened.
straightforward questions about your independence, and you've blown both of them. So let's shift to the inflation caused by President's economic policies, which you've had a key role in designing. You've claimed, for example, that consumers thus far have not seen any material macroeconomic increase from tariffs at all. Your statement. The numbers do not back you up. Since January, cost of groceries is up, cost of utilities is up, cost of housing is up, cost of back-to-school shoes is up, cost of backpacks and baby strollers up. Dr. Myron, the data say that costs for basic necessities are going up. But it's not just the reported numbers. Fed Governor Waller, who President Trump appointed, private sector forecasters, small businesses, and families are all telling us that the costs are up. Do you think those families and data experts are lying?
Senator, thank you for the question. I believe your question is conflating relative price increases with inflation, which is an increase in the aggregate price level. There has been no detectable increase in the aggregate price level as a result of tariffs.
You know,
there have
Dr.
been relative
Myron,
price changes,
you
as
have
there
made
always are.
clear that you will do or say whatever Donald Trump wants you to do or say, and that may work in a political position, but it takes an axe to Fed independence and will make life far more expensive for American families. I apologize for going over.
Senator Rounds.
Thank you, Mr. Chairman. Dr. Myron, first of all, I appreciated the opportunity to visit with you.
And this is Senator Rounds, Republican member of the Senate Banking Committee. The hearing for Stephen Myron to be a member of the Federal Reserve. The question and answer period continues right here on Bloomberg Radio.
I actually enjoyed our discussion and the fact that you clearly laid out for me the understanding that you had a different role as an independent member of the board and that your independence was very important to you. Let me just work my way back through this a little bit, because sometimes when we're trying to get all of our questions in a 5-minute period of time, any of our members can sometimes really want to get a yes or a no answer where yes or no answers really don't work. So let me just talk about some of the things specifically to the board itself. Do you see a difference between the role that you would play as the chairman of the Board of Economic Advisors to the president versus being an independent member of the board on the Federal Reserve?
Thank you, Senator. And I was grateful for the opportunity to sit down with you in your office, and I also very much enjoyed that discussion. There's a night and day difference. As the chairman of the Council of Economic Advisors, someone is a principal in a White House as part of a political administration. The Federal Reserve is an independent agency whose independence is critical to the well-functioning of the economy and financial markets. And, the responsibilities of the jobs are very, very different. If confirmed to the Federal Reserve, I will behave in an independent manner based on my own analysis of the economy, of economic data, of inflation, employment, and the effects of economic policy thereon, and act in my own independent analysis based on those evaluations.
Would you say that it's fair for the President of the United States to lobby the Federal Reserve in terms of moving things in a direction that he believes can move the economy in a direction that improves the life for the American people?
Thank you, Senator. As I said before, I think it's really important in economics, as in many things, to hear a wide variety of views, because you have to challenge your own views and make sure that what you think is really right. And the best way to do that is to hear a whole variety of opposing views and interrogate your own position. To me, that's very important. So I will always be happy to hear the opinions on monetary policy of everyone who's got an opinion, so that I can help evaluate whether my position is actually the correct position and whether I really should be believing the things that I believe.
That would include allowing the president to lobby. Fair enough? Nothing wrong with the president lobbying.
The president is entitled to a view on appropriate monetary policy, as is everyone else with an interest in the subject, and I welcome everyone sharing their views.
As part of your role as chairman of the Board of Economic Advisors, wasn't part of that to carry for the president the message that you believed was appropriate to improve the quality of life for Americans by improving the economy? And wouldn't it be reasonable that you would have a very similar point of view than the president did? Otherwise, why would he be working with you, and why would you be working with him on trying to formulate those views in the first place?
Thank you, Senator. Yes, as the Council of Economic Advisors is tasked by the Congress with advising the president on appropriate fiscal and regulatory policy to achieve full employment and stable prices and prosperity through the American economy. The president selects people based on his evaluation of their qualifications and their policies. And I assume that he nominated me to the previous position because he liked my policy views.
You were asked by the ranking member a number of questions in pretty fast order. I want to give you an opportunity. Anything in particular that you'd like to clarify or make more clear with regard to any of the comments? I'm just going to give you just a few seconds here before I move on, but anything in particular that you'd like to clarify or correct?
Thank you, Senator. I do think that independence of the central bank is of critical importance, and that's why when I look back at recent behavior and see things like climate being worked into the Federal Reserve's policy agenda, it strikes me as politicization of elements of the Federal Reserve that ought not to be politicized. And if I am confirmed, I will forcefully push back on the Fed straying from its core mandates that were assigned to it by the Congress.
Thank you, sir. Mr. Pickerton, I want to just put this for the record. I want to thank you for coming to meet with me in my office in July. I think you are a very accomplished public servant, and I believe that you're very qualified for this position. I want to thank you for your willingness to work with me to get the PASS Act across the finish line, and I do look forward to working with you to get that through and protect our military installations from foreign observation. Thank you, sir. Thank you, Mr. Chairman.
Thanks, Senator. Senator Reid.
Thank you very much, Mr. Chairman.
And you're listening to the Senate Banking Committee confirmation hearings for Trump ally Stephen Myron to be a member of the Federal Reserve. We're hearing right now from Jack Reed, one of the minority members of the Senate Banking Committee, Democrat from Rhode Island.
Every day. In contrast, I would note that when Presidents Clinton, Obama, and Biden came into office and had the chance to nominate federal chairs, they all chose to retain the individuals picked by their Republican predecessors. That's an example of the bipartisanship and also independence that previous presidents have extended. This president has not done that. Now, Mr. Murray, you've had a discussion with the ranking member. You have written on the subject of partisanship that the revolving door between the Fed and the executive branch brings politics into federal policy making. You wrote, quote, leadership that was traditionally regarded as technocratic has been replaced with highly qualified but highly political personnel who move freely between the White House and the Eccles building, which is the executive office building, or one of them. Oh, no, excuse me, that's the Federal Reserve. So what is your current job now?
Thank you for the question, Senator.
What is your current job?
My current job is the chairman of the Council of Economic Advisors.
In the White House, thank you. And so you're basically a living proof of the criticism that you lodged against the Federal Reserve Board, correct? You're a political partisan who works in the White House, who might be bright, but is ideologically disposed to the politics of Donald Trump.
Thank you, Senator. As I said a few moments ago, I view the act of deciding that the Federal Reserve is the institution to take on climate change as a highly political, non-technocratic act. And if I am confirmed to the Federal Reserve, I'll make it my goal to keep the Federal Reserve to its core missions.
That's an interesting concept because in my other capacity in national security, the Department of Defense is extremely sensitive to climate change because it is altering the threats that face us every day. And I'll speak for myself, but anybody who believes climate change is mythical is essentially posturing. Now, you're a member of the Council of Economic Advisors. If you're confirmed, will you resign from the council?
Thank you, Senator. I have received advice from council that what is required is an unpaid leave of absence from the Council of Economic Advisors. And so considering the term for which I'm being nominated is a little bit more than 4 months, that is what I will be taking. As long as that is the advice of council, I will follow the law.
Well, your independence has already been seriously compromised by your statement. You are going to be technically an employee of the President of the United States, but an independent member of the board of the Federal Reserve? That's ridiculous. And you also said that a Federal Reserve Board member should refrain from involvement for 4 years after he leaves office with any executive branch. Are you committed to that also?
Thank you, Senator. Look, I'm committed to the independence of the Federal Reserve. I have in the past proposed a suite of reforms to improve governance of the Federal Reserve. That suite was a package deal. It was a system of checks and balances designed to diffuse political power and isolate the Fed from political interference. It would be inappropriate to take one check or balance away from the entire suite and think about implementing.
So the answer is no. So you're going to be a consistent leader. You're going to be an employee of the President of the United States on leave. So he can call you up in his capacity as president and said, here, I want you to do this, this, and this. Well, I guess I have to do it since I'm an employee of the president. That is absolutely ridiculous. Now, finally, you noted last year, in quote, that the firing for cause protections under the law were inappropriate, and you recommended Congress remove those protections. You went on to recommend that to provide constitutional legitimacy if and when the president is allowed to fire governors at will, the president should voluntarily announce that he will refrain from removing any incumbent board members or Federal Reserve Bank leaders through their terms. If the courts grant President Trump the authority to fire federal governors for any reason at any time, will you commit to advising the president publicly to refrain from exercising this authority consistent with your recommendations in 2024?
Thank you, Senator. As I said just a few moments ago, that proposal was a package deal. It was a suite of checks and balances, and it's highly inappropriate to take one check or balance outside of the context of the overall package. Checks and balances work between the Congress and the executive and the judiciary, the two chambers of Congress, because they all work in conjunction and prevent power from being concentrated.
So the answer is no, and that you will cooperate if he tries through any means to eliminate a member of the Federal Reserve Board. Thank you very much.
Senator Kennedy.
Hey, you're listening to the Senate Banking Committee confirmation hearing for Stephen Meyer to be a member of the Federal Reserve. Right now, questioning from John Kennedy, Republican of Louisiana.
Generally appoint their enemies.
Thank you, Senator, for the question.
Don't thank me. It just takes up time.
I believe that when they nominate them,
do they generally appoint their enemies?
They don't believe they are when they're making.
Do presidents, any president, generally appoint people that they agree with on social and economic policy?
I believe that presidents appoint people whose
That's a yes, isn't it?
Yes.
Because we live in the real world, don't we?
Yes.
Are you personally responsible for everything President Trump says?
No, my role as the chairman of the...
Before President Trump says something as President of the United States, does he call you up and say, Stephen, I'm about to say this and I want your approval? Does he do that?
Never.
And after the president says something, does he call you up and say, Stephen, was that okay? Are you okay with this?
Nope, I have an advisory role.
Okay. Now, sometimes intelligent adults, reasonable people disagree. Is that true?
Very often.
Is it part of your job description when you disagree with something the president says to call a press conference and say, he's wrong about this and let me explain to you why? Is that part of your job description?
Not as CH.
Is that part of the job description of any aide that you know of to President Biden?
No.
How about for President Obama?
No.
How about for President Clinton?
No.
We don't live in La La Land, do we? Do we?
No.
Now, monetary policy is important, and the Fed is in charge of it. But monetary policy is not the only thing that's important. Fiscal policy is important, isn't it?
Fiscal policy is extremely important.
And I don't care how low the Federal Reserve lowers interest rates. If the United States Congress is profligate in its spending, if it spends money like it's pond water, if it runs up $37 trillion in debt, and deficit spends to the tune of 7% every year, that also has an impact on employment and economic growth and inflation, does it not?
Absolutely, and I think people often make a mistake by looking solely at monetary policy when fiscal policy is a huge driver.
And in fact, the Federal Reserve can lower short-term rates through the open market committee all you want. But that doesn't necessarily mean that long rates, 10 years and above, are going to go down, does it?
Not necessarily.
Right, because if the bond market counts too, doesn't it?
Of course.
If the bond, you can lower rates as low as you want to, but if the bond market thinks that inflation is on the horizon, those rates are going to keep going up or at least stay steady. Isn't that accurate?
Yes, the Federal Reserve does not control the long end of the yield curve.
Okay, so what Congress does matters, doesn't it?
Hugely.
My good friend Senator Warren says, you're Donald Trump's puppet. Are you Donald Trump's puppet?
Not at all. I'm very independently minded, as shown by my willingness to stray from consensus and have out-of-consensus views, and I believe that, I will continue to be as independent, in my thinking process, if confirmed.
We're going to hold you to that, Governor, future Governor. You need to call them like you see them. There's nothing wrong with politicians in Washington offering their opinions. You can't stop them. But we need a monetary plan that was put together by something other than vodka and darts. And that's what we had the Federal Reserve for. Now, you're going to get a lot of advice from politicians. I'm not saying they're always wrong. Even a blind chicken finds a mealworm now and then. But you've got to call them like you see them. And ignore, nothing wrong with people giving their advice, but ignore all the rhetoric from all politicians. Will you give me that commitment?
I do commit to that. Thank you.
Thank you, Mr. Chairman.
Thank you, Senator. Senator Kim.
Yeah, thank you, Chairman. Dr. Myron, I wanted to just pick up on something that you said earlier. So if I heard you correctly, if you are confirmed to this, you are not going to resign from your current position at the White House?
And you're listening to the Senate Banking Committee confirmation hearing for Stephen Myron to be a member of the Federal Reserve. Right now, he's being questioned by Senator Andy Kim, a Democrat from New Jersey.
Advisors cease my CE activities, and if counsel advises me otherwise, I will follow the law and follow counsel's advice.
I guess I just wanted to ask you, why did counsel advise you in that way? You have every right to just say, no, I'm going to resign.
Well, I'm not a lawyer, so I can't answer why they advise me that way. But
you can determine your own career. You know that, right?
No, yes, I know that. And
yeah. So you want to go back to the Council on Economic Advisors after this term? Is that correct?
Well, I don't know what will happen. The term for which I've been nominated is 4.5 months. If I am nominated and confirmed for a longer term than just a handful of months, I would absolutely resign.
So I guess, you tried to excuse this by saying that this is because, the whole package of reforms wasn't adopted. But I guess I just want to read your own words back to you. You said, short-circuiting the revolving door between the Fed and the executive branch is critical to reducing the incentives for officials to act in the short-term political interest of the president. Do you still agree with that statement?
Thank you, Senator. As I said before, I believe that reform of the Fed has to be...
I get that. I understand your excuse on that front, but do you agree with the statement I just read back to you?
I think that considerations like that need to be taken in context of an overall package of reforms and not looked at in isolation.
Okay, well, look, I think that this very clearly shows that the reason we don't want actions like what is happening before us is because you could very well be continuing to act in a way that is in the political interest of the president because he is going to be your future boss again at the White House. So it's one of those things where, like, I'm just trying to think about, why do you even want this job at the Fed for 4 months if you're just, hedging your bets and just continuing to hold your position at the White House? I wanted to just continue on a little bit here because you said something I wanted to dig into. You said excessive control by elected political actors, parentheses, like the president, interferes in good policy and results in bad economic outcomes. Is that something you said?
Senator, I believe that political interference in monetary policy in making decisions, sort of can erode the outcomes, and that it's important for the Federal Reserve to be insulated from the political cycle.
Okay, insulated from the political cycle. And here you said excessive control. What is excessive control?
Well, I don't have a precise formal definition of that in my head, Senator.
Okay, well, I guess maybe I'll walk you through a couple of things here. You were saying that you'd like to clarify that members serve at the will of the U.S. president.
Senator, I believe that members can be removed for I believe the Federal Reserve Act specifies that members can be removed for cause after they've been.
I know, I'm just looking at your list of reforms that you like, and it sounded like you said, clarify that the members serve at the will of the president. I guess I wanted to just ask you, would it be appropriate for a new president to come in, get rid of everybody on the board, and put in entirely new appointments at the beginning of each presidency? Is that appropriate?
You're referring to the reform proposal, not to current law.
I'm referring to your beliefs, yes.
Well, so as I said before, the reform proposal was a package deal with a series of checks and balances, and that was one check, but there's offset by other balances and other checks that would diffuse power throughout the Federal Reserve System. That's why we refer to it as a form of monetary federalism.
You also said, quote, political independence is inherently undemocratic. Can you explain that to me?
Yes, so if you had a Federal Reserve that was entirely, completely independent, with no ability for the president to appoint officials, no ability for the Senate to provide its advice and consent, no ability for the Senate to hold hearings where they receive answers to their questions by Federal Reserve officials, I think that would be profoundly undemocratic, and I think it's important that we have democratic oversight, as an example, when the Senate holds its hearings, getting testimony from Federal Reserve officials.
One final question here. Has anyone in the administration asked you to commit formally or informally to vote to lowering interest rates?
No.
With that, I yield back.
Thank you. Senator Ricketts.
Great. Thank you, Mr. Chairman and Ranking Member, for holding this hearing, and thank you to our panelists, our nominees, and your willingness to serve our great nation. The Ranking Member was talking about inflation. I might note that on Labor Day, the average price of gas was $3.15 a gallon, and that's the lowest it's been since 2020.
And you're listening to the Senate Banking Committee examining Stephen Myron for his appointment to be governor of the Federal Reserve. Right now, he's being questioned by Pete Ricketts. He's a Republican from Nebraska.
And that also actually rolls into another thing that's important for my state of Nebraska, which is ethanol. Actually, last time I filled up with ethanol, it was saved me 45 cents a gallon versus the regular 89 octane. So everybody can fill up on ethanol, save money at the pump, clean up the environment. It's great for our farmers and ranchers. And you may say, why are you talking about that right now? Because I'm going to roll into another topic that is of interest here, which is communist China is the threat to America. They want to supplant us as the world superpower. And they've made it clear that they are going to use every lever of power to be able to undermine our national security. Confronting this threat requires comprehensive strategy that strengthens our safety, our financial system, secures our critical assets, and closes loopholes for communist China to seek and exploit things in our system. And one of the things that includes is combating our foreign adversaries' ownership of American agricultural land, and thus the tie-in back to my state. In 2010, Communist China owned 13,720 acres of American farmland. In 2023, Communist China owned 277,000 acres of that farmland, and that is a threat to our national security. A lot of that, sometimes that farmland was located by our sensitive military installations. Mr. Pilkington, do you agree that that's a threat to our national security?
Senator, thank you very much for the question. I share your concern. In fact, the Chinese penetration in agricultural land, real estate, critical technologies is something that we all should be very concerned about from a national security perspective. If I am confirmed to lead the CFIUS committee, then I would look forward to working with you as well as the members around the including the observing member of U.S. Department of Agriculture, Secretary Brooke Rollins, who I've worked with very closely before. So I look forward to the opportunity to work with you, your staff, and this whole committee on these issues.
Well, good. I'll look forward to that. Under the Agricultural Foreign Investment Disclosure Act, AFIDA, foreign entities are required to disclose the transactions of American agricultural land to the USDA. That's your comment about working with Secretary Rollins. USDA then shares the data with CFIUS agencies so they can identify and review the transactions that pose national security risks. However, the Government Accountability Office, GAO, published a report on the AFIDA process which flagged incomplete data reporting, process errors, and delays. That's why I introduced the FIDA Improvement Act. My bill will strengthen reporting requirements and improve data sharing coordination between USDA and CFIUS so that national security risks tied to foreign land purchases are flagged immediately. I look forward to working with you on this issue and more when you are confirmed. In your view, what other enforcement gaps or vulnerabilities in the CFIUS process that pose these threats, or what poses the greatest risk or threat from our foreign adversaries? Are there other things in the CFIUS process we can improve upon?
Thank you for the question, Senator. If I had the opportunity to be confirmed, obviously CFIUS's focus is national security, and my priorities are going to be just that, including focusing on the critical technologies, artificial intelligence, quantum computing, other areas where America is and will continue and must continue to be a leader. Another priority that I have is the non-notification of covered transactions. These are transactions that should be reported that are not reported. And one of the things that I want to do, if confirmed, is sit down with the entire team, including the advising groups, the intelligence community, law enforcement community that plays a role there, and find out how we can use the different tools and authorities that CFIUS has to advance that. Finally, I'd like to focus on compliance and enforcement. Obviously, there's a front-end review of the transactions that come through CFIUS, but many times there are mitigation agreements and ongoing compliance, and we have to stay vigilant and ensure that folks are abiding by the agreements that they enter into. I'd also like to say that I think it's incredibly important because I know that CFIUS and national security is a bipartisan matter. So having that feedback loop with the executive branch, this committee, and your colleagues is going to be very critical.
Yeah, great. I look forward to working with you on this. And one other thing I'll just mention is looking at process improvement to streamline your processes to be able to do this more efficiently, and we can talk about that more of that later. Thank you, Mr. Chairman.
Thank you. Senator Smith.
Thank you, Mr. Chair. Mr. Marin, welcome to the committee. Thank you to the chair and ranking member. I just have a couple of straightforward questions for you, which will hopefully be easy to answer. So you currently work in the White House as an economic advisor to the president, correct?
You're listening to the Senate Banking Committee examining Stephen Myron for his appointment to be governor of the Federal Reserve. Right now, asking questions is Tina Smith, a Democrat from Minnesota.
Right, and so in this role, you've had a hands-on role in implementing the president's political and policy agenda. Would that be fair to say?
That is not correct, Senator. The Council of Economic Advisors is an advisory organization. I have no statutory implementation powers whatsoever.
Well, you've been described as the architect of the Trump tariffs and a vocal proponent of the One Big Beautiful Bill. So it seems to me that you've been part of the administration's policy and political agenda. Senator Kim referenced just a bit ago about the paper that you co-authored that argued that short-circuiting the revolving door between the Fed and the executive branch is critical to reducing the incentives for officials to act in the short-term political interests of the president. You wrote this, and I actually agree with it. So, I mean, here's my concern. Given the nature of your current role and your expressed concern and mine for insulating the Fed board members from the day-to-day political process, I just don't understand how your nomination doesn't break the rule or the goal that you've set out yourself. I mean, you previously said that no one can go from being a high political operative to being politically neutral. And I mean, I agree with you. When you have taken on a role of advocating, it's very hard to step away from that. And I don't know how you could be an exception to that. Last September, you criticized the Fed's decision to cut rates as the biggest policy mistake in 2021. But now, I mean, where do you stand on that? That President Trump is in office, you've done a complete 180. I mean, I don't understand what your position is on this now, and how can we expect you to be unbiased and neutral?
Thank you for the question, Senator. As I was saying to Senator Kennedy a few moments ago, I think it's a mistake to focus solely on monetary policy when thinking about the path of inflation and employment, and I think that the full suite of policies, economic and otherwise, affect those outcomes. And what the Fed ought to do is to be forward-looking in its expectations of where inflation and employment are going, because those are the mandates that Congress assigned to it. My understanding of how economics works is that a wide variety of policies that have been implemented since January are actually quite disinflationary. And let me give you one example, which is the border policy, which you might not think of an economic policy, but the truth is that if you increase the number of occupants of housing by millions in a relatively short period of time without a dramatic expansion of the number of houses, it's going to put upward pressure on rents.
So I'm sorry to interrupt you, but I know I just have a little bit of time left, and I'm not disagreeing with the fact that that the Fed has a broad portfolio and that it is a complex thing. But what I'm concerned about is because of the role that you've had in the Trump administration, and now as the president tries to move you to the Fed, that we are all so concerned about the open question about the independence of the Fed because of the things that President Trump has said. I think we can be pretty clear about what's happening here. This nomination, your nomination, is getting rushed through because the president is frustrated with the Fed for not cutting rates. And he wants loyalists on the Fed board. That's just pretty obvious, I think, to what's going on here. So I just think it's important that we not lose sight of this. We not lose sight of what's happening, and also not lose sight of why the president wants to see rate cuts go down, because the economy is in a struggle right now because of the trade war, because of everything else that he is doing, and this flailing that is happening, I think, is the result of it. So my view here, Mr. Chair and Ranking Member, is that it is extremely important for this committee to take a stand against politicizing the Fed, that is the best thing for the long-term health of our economy, and that this is not the right step to take if that is our goal. Thank you, Mr. Chair.
Thank you, Senator. Senator Britt.
Thank you so much, Mr. Chair, Ranking Member.
You're listening to Stephen Myron facing senators' questions during his Senate Banking Committee confirmation hearing. Right now, he's facing some questions from Katie Britt, Senator Britt, a Republican from Alabama.
Supporting your nomination. To all of you, we appreciate you being here. Mr. Burke, I want to start with you. The role you've been nominated for, it focuses on counter-terrorist and illicit financing. And look, this is something that we saw the last administration literally allow go to the wayside. When you look at what happened with Iran, us not using every tool in our toolbox to squeeze them dry financially, what happened was billions of dollars obviously moving into the oil regime. We now have an administration that is taking this seriously, understanding that Iran is the largest state sponsor of terrorists, and every single dollar that they have, they use to advance that goal. My question for you is, looking at President Trump's maximum pressure campaign, driving that, I think we've seen real successes here, but can you speak generally to the seriousness of this, and how critical is it that we enforce the sanctions that are on the books to the fullest extent, particularly when we're talking about the Iranian regime?
Thank you, Senator. I very much appreciate the question, and I share your concern about the need for sanctions to be effective. And I think one way to do that is to understand, and as you mentioned, President Trump has re-implemented the maximum pressure campaign on Iran. And I know from my previous time at Treasury working on that issue, what that actually means. It's a multifaceted approach. It's not just about imposing new sanctions on new targets, but it's actually complemented by extensive diplomatic engagement with partners and allies around the world, and also the private sector, to identify the risks associated with exposure to Iran so they can take action as well to curtail that Iranian activity. And we've certainly seen that in the past when there is a maximum pressure campaign, and that has an effect on Iran's ability to raise funds and move those funds through the system. We also saw just this week Secretary Bessent announce new sanctions on Iran and had a video message that explained this process. And also what's very important to complement that maximum pressure is that the world understands the United States is intent on targeting actors around the world who continue to support Iran's activity, and that's what the actions this week did. And Secretary Bessent made reference to some of the impacts that those actions have seen in terms of reducing Iran's oil revenue, but also reducing its ability and disrupting its ability to move funds and to move logistics around the world to procure or trade in oil. So if confirmed, I look forward to supporting that effort.
Excellent. I want to kind of drill down on secondary sanctions. I mean, we know, particularly in the last administration, where we had lax sanctions, where they weren't enforcing them, allowing countries in Southeast Asia to openly disregard our sanction policy and sell Iranian crude oil.
You're listening to Jonathan Burke. He's the Assistant Secretary Designate of Department of Treasury. He's being questioned right now. This is during the Senate Banking Committee confirmation hearing for Stephen Myron.
Entities from doing business with Tehran. And I'd like to know, what are your thoughts on that, and how can we better utilize the secondary sanctions available to us to use them against these nations that attempt to undermine the United States and aid Iran?
Thank you, Senator. I think it's a very important concept, and it goes to the multifaceted maximum pressure campaign approach. Secondary sanctions are intended to change behavior. And I think when you add that extensive diplomatic engagement, which has been used very successfully in the past, with the credible threat of U.S. action to those actors who would continue to support that illicit behavior, secondary sanctions would be very effective at changing that behavior.
Well, I want to stay on national security for a second, and Mr. Pinkerton, I'm going to come to you. When looking at China, the CCP is clearly looking to undermine America at every single turn, and one of the ways I feel like they've done that, obviously, is buying up American agriculture and farmland. I think many of us on this dais, particularly on this side, have been fighting against that with bills and legislation trying to push back. I know that this committee continues to be engaged, particularly in the CFIUS realm, and the ability to properly review the foreign land purchases near sensitive military sites. I can assure you that China is not allowing America to buy up land around sensitive military sites there in China, right? So my question to you is, will you commit to working with us to ensure that we actually are able to move the needle in this regard, if confirmed, to this role?
Senator, thank you very much for the question. I will absolutely commit to working with you and this committee on these really important national security matters. When it comes to farmland, I think Secretary Rollins has said food security is national security, and I completely agree
You're
with that.
listening to Christopher Pilkerton. He's Assistant Secretary Designate, Department of Treasury, answering questions right now from the Senate Banking Committee.
And working on some of the legislation that's been presented from this committee. So from a technical assistance perspective, and also meeting with you and your staff, I'd be honored to work with you on that.
Look, we need to get this done. Time is of the essence. So thank you all.
Senator Cortez Masto.
Thank you, Mr. Chairman. Congratulations to all the nominees. Won't be able to answer or get to all questions for all of you, so I'll submit most of them to the record. I only have 5 minutes. But Mr. Hobbs, let me start with you. I'm very interested in how we increase the affordable.
You're listening to the Senate Banking Committee confirmation hearing for Stephen Myron. Right now, asking questions is Catherine Cortez Masto. She's a Democrat from Nevada.
Thank you. Excuse me. Thank you, Senator, and thank you for the question. It is a priority of mine. It's a priority of Secretary Turner and President Trump to engage with our stakeholders in Indian country. I recently visited Alaska and the Napakiak tribe. I've been to Wisconsin in the United Tribe. And one of the things
and speaking right now is Ben Hobbs. He's Assistant Secretary Designate, Department of Housing and Urban Development.
On tribes. A number of them are actually coming into HUD next week at our Tribal Interagency Advisory Committee, and we'll be meeting with them. And one of their key topics is looking at NEPA, some of our radon regulations, and others that really are overly burdensome and just artificially increase the costs of them executing their Indian housing block grants.
Thank you. I look forward to hearing and working with HUD to do more to make sure that we can prioritize this in Indian country, and we are working on housing and affordable housing there. So thank you. Mr. Myron, let me talk to you. I know you've probably received some of these questions as well. My office and I suspect those of my colleagues are being inundated with calls and letters from small business owners. These small business owners say they cannot keep their doors open with prices rising 50 to 145% for toys, shoes, coffee, auto parts, fruits, and vegetables. These business owners are worried they will have to lay off their employees, or some of them already have, or close their doors and stop serving their neighbors. Yet you told me in February and I quote, "The economic burden of tariffs imposed by the United States is borne by the country whose exports are tariffed." Do you still believe that?
Thank you, Senator. So the theory of incidence in public finance and economics, which is a very well-established old literature that's not very controversial, that generally lasts upon what economists would call long-run elasticities.
I don't need an economic theory. I already went through that in finance classes at University of Navarino. I just need to know your position. Do you still believe that what your statement was, that the economic burden of tariffs imposed by the United States is borne by the country whose exports are tariffed? Do you still believe that, yes or no?
Thank you, Senator. In the long run, I 100% believe that. In the short run, I've always maintained that there could be volatility.
And does that volatility mean that individual taxpayers are actually, and businesses are paying those tariffs and having to close their doors? Is that what you are saying, is a volatility that small businesses may have to close their doors and they're just going to have to suck it up?
Thank you, Senator. I don't believe that there is any material evidence of that to date.
So let me just say, on CNN, you were interviewed about an auto parts maker in Detroit just had to lay off 100 workers and shut down a warehouse. The owner specifically blamed tariffs. And you stated it's always convenient to blame political changes when your business fails. Is that how you still believe? It's not, this business owner doesn't know what he's doing?
Thank you, Senator. I was not familiar with the circumstances of that particular business or those particular 100 workers at that time.
So then why didn't you say that at the interview? And why did you make a statement like you did? It's always convenient to blame political changes when your business fails. That seems like you're disregarding our businesses altogether. Let me ask you this. Do you believe tariffs are taxes?
Thank you, Senator. Economically speaking, any policy can be modeled as a tax. So in that sense, exactly what I said, any economic policy can be modeled.
So is that a yes?
Well, what I'm saying is that the answer to your question is that any economic policy can be modeled as a tax, whether it's a subsidy,
Okay, so that
benefit.
is, your question is a yes, tariffs or taxes?
My answer is that any economic policy can be modeled as such.
Under the last administration, we saw a surge in manufacturing jobs and construction with the U.S. economy adding over 500,000 manufacturing jobs and construction of factories doubling. Unfortunately, under this administration, we have seen the exact opposite. In August, the U.S. manufacturing sector contracted for the 6th consecutive month due to Trump's tariffs and chaotic trade policy. Earlier this year, you said that manufacturing construction will surge as a result of Trump's tariff and tax policies. Were you wrong?
Senator, I do not believe that that's the case. I believe that they will, because the uncertainty from the tax situation is resolved. I believe that just a few months ago, there was a huge amount of
So would you say it's transitory?
Well, I think people were concerned that Congress would allow the biggest tax hike in history to throw the economy into a recession, and there would be substantial disincentives for investing in the United States. Fortunately, Congress has not allowed that to happen. The One Big Beautiful Bill has become the One Big Beautiful Act, and the uncertainty around the tax situation has resolved, replaced with enormous incentives for investing in America in the form.
So you weren't wrong. We just have to wait and see.
Well,
Is
the
that
bill
what
was
you're saying?
the bill was only enacted recently.
Thank you. Mr. Chairman, I know my time is up. Thank you.
Thank you. Senator Moreno.
Thank you to all of you for being here. Congratulations on being appointed. Sit back and wonder how President Trump is getting such highly qualified nominees as you. It's always an inspiration to see all of you willing to serve your country. I'll start
And you're listening to the Senate Banking Committee examining Stephen Myron for his appointment to be governor of the Federal Reserve. Right now, asking questions is Bernie Moreno. He's a Republican from Ohio.
Around this room and see what's possible in their careers. And I give the chairman a huge props for developing quite an assortment of very qualified people. How do you balance the idea that we're spending a record amount of money to tackle homelessness, and yet homelessness continues to increase in this country?
Thank you, Senator, and it's an honor to sit before my home state senator today. Homelessness is an absolute crisis, and the HUD's budget has more than doubled in the past 4 years, and yet homelessness continues to rise and rise and rise. And that's because the solution to homelessness isn't just a house. It's also addressing mental health. It's addressing substance abuse and crime and vagrants on our city streets. And President Trump is leading on that with his recent executive order.
That's great. And we had Secretary Turner out to Columbus, Ohio, a place called Vista Village that does exactly that. So it's great to see you guys leaning in and looking for innovative solutions. Mr. Kurtz, I know that you claim to be from Georgia, but your heart is in Ohio. Is that correct?
I am quite the Browns fan, yes, Senator.
There you go. Perfect. I just want to make sure. And that's not easy, by the way. Let me just point out, that's not easy to do.
That's leading the question, the leading questions, leading questions.
So thank you for being here as well. And talk a little bit about what you think, what you're going to be doing when it comes to tackling the housing sector that you're going to be overlooking.
Yes, Senator. So thank you for the question. And again, thank you for the time that we were able to share earlier this week with you and your staff as well. Ultimately, the issue of housing availability and affordability is
and speaking now is Rodney Kurtz. He is Assistant Secretary Designate, Department of Housing and Urban Development.
On this issue, and we can provide resources to execute to that end. What we're seeing currently is the programs that we have established here at the Department of Housing and Urban Development, and specifically within my office, have a very onerous and duplicative set of requirements to draw down that money. So essentially, in order for any community in our states and localities to take money from HUD, they have to have people on staff full-time who have the expertise in how to write one of these grants. That boxes out countless communities throughout our country that are ready and willing to develop, but barely have enough people in their offices to just turn the lights on. So what I look forward to doing, if confirmed, is joining Secretary Turner's team and looking to take inventory of those programs and looking at ways to make them more effective and efficient to that end.
Well, thank you. And Mr. Bickleton and Mr. Burke, one of the things that's really been a great tool for President Trump to combat these narco-terrorists is designating these groups as foreign terrorist organizations. Are you willing to work with our office to see how we can expand that, especially in Colombia, where these terror groups are really wreaking havoc? Mr. Bickleton, I'll start with you.
Senator, thank you for the question. I certainly look forward to working with you.
This is Christopher
and providing
Pilkerton.
any
He's
support
Assistant
that I can
Secretary
from a
Designate,
CFIUS
Department of
perspective.
Treasury.
Thank you, Senator. Yes, if confirmed, I look forward to continuing that discussion with you and your staff.
Perfect. Dr. Myron, just some really quick questions for you. I know you've taken a lot of questions already. Have you ever lied on a mortgage application with the objective of getting a lower interest rate?
Thank you, Senator. I have never done that.
Well, you're already ahead of the game then. That's good news. Do you think that it's appropriate for the Federal Reserve to weigh in on DEI?
Thank you, Senator. I don't believe that is a responsibility.
About the climate cult? Do you think that's something that the Federal Reserve should be weighing in on?
It is not something the Federal Reserve should be weighing in on.
Do you think that they should have been weighing in on the wiseness of pandemic spending that set records for government spending? Do you think it was wise for the Fed to encourage that?
I don't believe it was wise for the Fed to advocate for one fiscal program over another.
Do you think it was wise to claim that inflation was transitory when it was destroying working Americans for 3 or 4 years?
I don't believe that was wise either.
And do you think it's wise for the Federal Reserve Chairman to advocate for the forgiveness of student debt?
I would not make such a recommendation myself.
So it seems like what we're talking about here, Mr. Chairman, is restoring the independence of the Fed. And to the ranking member, she's not here, but I want to congratulate her for her wisdom in voting against Jay Powell, who is an inspiration to every ineffective, inept leader in America. And hopefully we can get that Federal Reserve stronger again with independent-minded people who actually take politics out of it.
Are you finished, sir? You've got one more time. Thank you so much. Senator Moreno, Senator Warner.
Thank you, Mr. Chairman. It's good to see you all, Mr. Burke. I enjoyed our time. I will say to my friend from Ohio, I want to congratulate the nominees. They are not appointed yet. That's our job to decide whether they move from
And you're listening to questioning from Mark Warner. He's a Democrat from Virginia during the Senate Banking Committee examining Stephen Myron for his appointment to be governor of the Federal Reserve.
But in America, should everybody have due process?
Thank you, Senator. I believe...
Don't thank me, because I got a lot of questions. So it's a fairly simple answer. Do you believe that Americans should have due process?
I believe that Americans are entitled to it for criminal proceedings.
Okay. And do you believe there is a presumption of innocence?
Again, I'm not a lawyer, but that's my understanding in criminal proceedings.
Okay. So regardless of what charge has been made, I understand there's not even, maybe this morning something was open, but The idea that people, well, first of all, that the director of FHFA is suddenly going on a mortgage witch hunt, and thank goodness I've never had a mortgage, so I wonder what goes around comes around. But I think it's kind of unusual. I'm not going to reblast the whole thing, but that senior government officials aren't even decreed some level of due process and basic presumptions on innocence before any evidence has been provided. Senator Reid wanted me to follow up. He asked about federal government's Fed governance proposals. One that you said whether you would not serve in executive branch for 4 years following the end of your Fed term, and to advise President Trump to voluntarily announce to refrain from removing any incumbent board members. And you said, I understand as well, it's all part of a package deal. But in your federal reforms you proposed, you said if we can implement this in a piecemeal fashion, one policy at a time, if legislatively easier, how does that, is it package deal or we can take these one at a time?
Thank you, Senator. It is a package deal, but whether that package is one big, beautiful bill or a number of different bills would be, I think, the Senate's prerogative. Sorry, the Senate and the House's prerogative. It wouldn't be.
All right, let me keep moving on.
How to,
I'm not going to ask you to filibuster on why you think the BLS data has been going downhill or cooked, when frankly it has been the gold standard. And I am hugely concerned that BLS leaders are being fired because the numbers didn't come out the way the president wanted. How are you going to make things better when we've seen a raft of senior professionals at BLS leave those positions because of this threat of political interference?
Thank you for the question, Senator. I do believe that the data from the Bureau of Labor Statistics has deteriorated in quality and reliability over the decades.
Is that due to a political bias at the BLS?
Well, it's due to it's the root cause. There's two issues at play. One is declining response rates over time, and two is a inability, refusal to do something to correct for those declining response rates.
So and that's going to be solved by cutting professional staff?
Well, I believe that it needs an overhaul and fresh pair of eyes, and
Okay,
I'm excited for.
So are you making the accusation that the BLS data is being politically influenced? I just need to know that.
I'm making the statement that BLS leadership did nothing to arrest the deterioration in data quality.
Is it appropriate for the President of the United States to call out and fire BLS leadership simply because he doesn't like the results?
I do not make personnel decisions, nor do I have a legal training in constitutional employment law, or for that matter, any type of law. So I'm just not the right person to.
I don't know. Your answer doesn't give me a lot of confidence. I know I'm not going to relitigate all of the Fed independence issues, but if you're not willing to call out a frontal attack on the BLS, and if you're not willing, you say the rates have the information has deteriorated, and not willing to acknowledge that loss of the professional staff is not going to improve that situation, it really makes me concerned. Last question is, do you think that the Fed, by politicized and simply responding to lowering interest rates, will be able to overcome any resistance from the bond market if the bond market says, oh my gosh, we've lost the independence of the Fed? Can you speak to that for a few seconds?
I don't anticipate the bond market saying that, so I don't anticipate such a hypothetical speculative situation.
If the bond market were to respond that way, what action would you take?
Well, it's impossible to respond to a hypothetical like that without knowing lots more context about what was going on in financial markets and supply and demand in aggregate supply and demand in the economy as a whole. That's the type of sort of hypothetical about which it's impossible to speculate without a much more fulsomely specified set of conditions.
I give you credit for your ability to filibuster.
Senator.
Thank you, Mr. Chairman.
Senator Haggerty.
Thank you, Mr. Chairman.
You know, let's talk about the Fed's independence. That's been a big issue.
You're listening to Stephen Myron facing senators' questions during the Senate Banking Committee confirmation hearing right now. Asking questions, Bill Hagerty, a Republican from Tennessee.
From a party that's long sought to systematically inject its ideology into the work of the central bank. Let me get into some specifics here to make my point. President Biden once called for adding racial equity to the Fed's dual mandate. He appointed a Fed governor who sought to redirect capital from fossil fuels to green energy by using the Fed's oversight function to influence bank lending decisions. Biden even endorsed Democrats' efforts to make the Fed conduct monetary policy based on racial outcomes. Furthermore, the Fed itself has undermined its own credibility by caving to progressive pressures. The Fed joined the network of central banks and supervisors for greening the financial system. This is a group that promotes leftist climate ideology. Partisanship at the Federal Reserve Board and regional reserve banks has come at the expense of effective supervisory practices. Need look no further than the failures of the San Francisco Fed in their failure to supervise Silicon Valley Bank. As Mr. Myron's testified, quote, independence of monetary policy is a critical element for its success. This is exactly the right perspective, and it's critical to the leadership that we need to steer the Fed away from politics and back toward data-driven monetary policy. So, Mr. Myron, I'd like to start with you. At the CEA, you analyzed the impact of tariffs on inflation. And through that analysis, I think you determined that the tariffs that were being considered and imposed by President Trump would not have a substantial impact on inflation. That analysis seems to have turned out to be correct. I'd like to ask you how your analysis on inflation and tariffs will inform your perspective on monetary policy should you be confirmed.
Thank you, Senator. I do believe that there's no evidence that tariffs have had any inflationary effect in the sense of moving the aggregate price level. The Council of Economic Advisors just put out an update to a previous study where we looked at the import components of every single good, and we identified that imported goods have actually been getting cheaper relative to domestically produced goods, which is the opposite of what you'd expect to see if tariffs were inflationary. Moreover, there's no sense in which U.S. goods inflation has diverged from goods inflation internationally, which again is something you would expect to see if tariffs were inflationary because the U.S. is implementing significant tariffs, but other countries are not. Moving forward, I expect my view of inflation to be informed by the broad suite of economic policies and not just monetary policy. And indeed, I think this is a subject, which has received insufficient attention in the past. So, for example, if you consider border policies I was discussing before, moving millions of new residents into a relatively fixed supply of housing will be extremely inflationary because it pushes rents up. CE has estimated that the open border policies of the last several years resulted in a 6.5 percentage point increase in rents, which explains about 30% of the increase. 30% of the increase since 22, right? So that's hugely inflationary. So it is my view that the change to border policies is actually quite deflationary in its effects, and we're working on quantifying that.
Well, I think there are a number of other deflationary activities underway. You think about the development of AI, the implications on productivity there. You think about the deregulatory undertakings of this administration that are going to cut overhead cost and compliance cost dramatically and streamline government efficiency in a way that I think will again be deflationary. Our efforts to get back to energy dominance, which would lower the cost of energy, all again feeding into a much more deflationary cycle than an inflationary one. So I hope that the Fed gets to the right point and back to the original point. We've got to take politics out of this. And I applaud the president for nominating you. You've been very clear that you want to get out of the political arena. You want the Fed to get out of the political arena that's been operating in, whether it be racial equity, green projects, or timing of interest rate adjustments to politics. I very much appreciate that. Mr. Burke, I'd like to turn to you very quickly. You're going to go to work for, if you're confirmed, you're going to work with one of my friends, John Hurley. The undersecretary is extraordinarily competent, and he needs a great team. I'd like for you to comment, if you would. I chair the National Security, Trade, and International Finance Subcommittee of the Banking Committee. Senator Warner, who was here just a minute ago, is the ranking member. I'd like your thoughts now and later on how you could best work with our subcommittee as you undertake your role in terrorism finance.
Thank you very much, Senator, for that question. And of course, if confirmed, I look forward to working with Undersecretary Hurley.
Speaking now is Jonathan
and
Burke.
your
He's
staff
Assistant Secretary Designate,
those
Department
issues.
of
I do
Treasury.
think it's very important as we look at implementing regulatory frameworks and identifying risks that are posed to the financial system from, whether it's terrorists or criminals, and particularly in the use of new products, that we identify what those risks are, we understand how that works in the financial system, and then we can apply the appropriate mitigants to address that risk going forward. So again, if confirmed, I look forward to working with you more on that.
Well, Mr. Mitchell sitting behind you knows how to contact our office, and if you're confirmed, I expect to see you soon thereafter. Thank you very much. Thank you, Mr. Chairman.
Senator Gallego.
Thank you, Mr. Chair. Mr. Myron, who's Arthur Burns?
Thank you, Senator. I believe Arthur Burns was chairman of the Federal Reserve in...
You're listening to Stephen Myron facing Senator's question during his Senate Banking Committee confirmation hearing. He's answering questions by Ruben Gallego. He's a Democrat from Arizona.
What Arthur Burns was doing before he joined the Fed Reserve, as chairman of Federal Reserve?
Thank you, Senator. I believe that Arthur Burns, like a number of others, like Janet Yellen, Ben Bernanke, Alan Greenspan, were all chairman and chairwoman of the Council of Economic Advisors prior to becoming chairman and chairwoman of the Federal Reserve.
Actually, he went from CEA under Eisenhower and then became counselor to Richard Nixon, then became Fed Reserve chairman. And likely the reason they did that is to give some level of, at least, level of separation. At least it was on the surface. What happened during Arthur Burns' tenure while he was serving in his capacity as chairman and with Richard Nixon at the helm?
Thank you, Senator. Can you narrow the question a little bit, please?
Sure. What happened to the economy and to the independence of the Fed Reserve under Richard Nixon while Mr. Burns was the chairman of the Fed Reserve?
So, again, I think that's a bit of an open-ended question. I prefer to, if you could narrow it a bit, because a lot of things happened in that period.
Did stagflation happen in that period?
It was an outcome during that period, yes.
Was there public scrutiny about the fact that the president was trying to pressure the Fed Reserve to drop interest rates, even though all economic indicators said that was a bad idea?
There was news stories about fractious relationships between the Federal Reserve and President Nixon, I believe.
Yep. And would you say that what occurred in terms of the pressuring of the Fed Reserve by President Nixon to drop interest rates probably caused directly stagflation?
No, I wouldn't say that, Senator. I believe that the inflation of the 1970s was caused primarily by two errors of the Federal Reserve, plus unfortunate supply shocks from energy markets and geopolitics in the Middle East. But the errors the Federal Reserve made in that period was a conflation of nominal and real interest rates. And by failing to raise nominal interest rates by more than inflation went up, they actually kept real interest rates relatively steady.
So you're telling me that no matter what many, reclaim my time here, a lot of us, whether it was our basic understanding of economics, historically speaking, what everyone understands was direct pressure on the Fed Reserve to actually drop interest rates that were not matching the economic situation, had zero contribution to stagflation that really plagued America for almost 10 years.
No, I don't believe there's the consensus that you portrayed. I don't believe that consensus exists. Indeed, there were.
Take back my time. You understand why we're concerned? Because we've seen this playbook, right? Let me read something to you. The president looked wild, talked like a desperate man, fulminated with hatred against the press, took some of us to task, apparently meaning me, chairman of the Council of Economic Advisors, and Paul McCracken, or both, for not putting a gay and optimistic face on every piece of economic news, however discouraging. Propounded the theory that confidence can best be generated by appearing confident and coloring, if need be, the news. That sounds a lot like Donald Trump. That was actually Richard Nixon complaining to the Fed chairman, Arthur Burns, trying to get him to bring down interest rates. And of course, he did eventually, and the country ended up paying almost with one decade of purely bad economic news as well as stagflation. So I don't understand how you don't see why many people are worried about the fact that you're going to go into a temporary position, hold your other position within the White House, and we don't feel like the sword of Damocles is going to be hanging over your head if you don't lower interest rates, right? And so I think it's a very reasonable request that should you be nominated, that you resign as CA director. And should you want to come back later, then you go back to the nomination process. But the fact that this president, who we know is willing to hold government officials hostage, we just saw what happened with the BLS director, is going to be able to hold that over your head. And we are going to question whether or not you're going to be making the right decisions for this country, not for your personal career. I think that is something that is extremely dangerous to the bond market, it's dangerous to our economy, and could really lead us into a direction that could make some permanent damage to the reputation of the Federal Reserve. Thank you. I yield back.
Senator Lummis.
Thank you, Mr. Chairman, and thank you, Mr. Banks. Mr. Pinkerton.
Asking questions now, Cynthia Lummis. She's a Republican from Wyoming.
It's not just ag land that we need to watch out for. In 2022, in a business park about a mile from F.E. Warren Air Force Base in Cheyenne, a Chinese-owned business set up a digital asset mining business, and it was more than 2 years before a public tip pointed it out to be a Chinese-owned business. The Biden administration ordered divestment, which happened near the end of his term. How can we assure that, and what steps could you take at CFIUS to make sure that we do know when a Chinese-owned business is locating near a critical, in this case, land-based nuclear missile site?
Senator, thank you very much for that question. And I absolutely share your concern. That example is incredibly concerning. And it goes back to something that I referenced before, the idea of focusing on companies that were not notified of, where there would be, in this instance, the term is a covered transaction. We can't protect against what we don't know about.
Yeah.
So I would look forward, if confirmed, to working through all the authorities within CFIUS as it currently stands, working with the various communities who would be able to provide intelligence, information, as well as law enforcement to work on these issues. And if given the opportunity, once again, would love to work with you on this.
Thanks, Mr. Pilkerton. Dr. Mirren, I think we all want to see independence at the Fed when it comes to monetary policy. But there's more than one function at the Fed. There's monetary policy and there's bank supervision. Now, in the case of bank supervision, the bank supervision and payment regulations are clearly regulatory functions. So they're not subject to that kind of independence. They are subject to the direction of the president. Now, what I've seen in the last 4 years is the Federal Reserve Board and the reserve banks hiding behind the monetary policy independence with respect to bank supervision and payments. There's no basis in the law for bank supervision to be completely independent, just the way it is for monetary policy. Do you agree with that those are different functions?
Thank you, Senator. Yes, I do agree that they are different functions.
Now, thanks, because as I have seen it, Choke Point 2.0, which is the Federal Reserve's function as bank supervisor, debanking people, which is one of the key reasons that people are getting into digital assets, like the president's own children. When you get debanked and you have 20,000 employees that you need to make payroll for, and they're told, we're closing all your bank accounts. Where are they going to go? They're going to go to digital assets because you don't have to trust a bank and you don't have to trust the government. Well, our own Fed is driving people into digital assets because finally there's something out there you don't have to trust in order to keep your wealth. Do you think the Federal Reserve Board and reserve banks have been independent from politics in the last several years?
Thank you, Senator. I don't believe that it was a set of nonpartisan, non-political, objective technocrats that decided to that decided that the Federal Reserve should be the institution that fights climate change. I don't believe that Operation Choke Point was a non-political act either. And so if confirmed to the Federal Reserve, I intend to fully respect independence with respect to monetary policy. As you say, on regulatory work, there's a lot of work to be done, and I applaud the work this committee has done on Operation Choke Point and other matters that you mentioned.
Can you help us, as a member of the Reserve, to set up a system that clearly demarks the independence on monetary policy, but recognizes that the president, through his regulatory supervision and oversight of the executive branch, does have a role in bank supervision?
Thank you, Senator. If confirmed, it is absolutely an issue that I would greatly welcome working with you and your team on.
Thank you. I yield back.
Senator Warnock.
Thank you, Chair. On Monday, August 25th, President Trump escalated his continuing assault on the independence of the Federal Reserve by attempting to illegally fire Fed Governor Lisa Cook. Lisa Cook is a first-rate economist and a
Speaking
Georgia.
now, Raphael
We're all very
Warnock, he's a
proud of.
Democrat from Georgia.
No president
now
has
trying to ask
ever
questions to
attempted
Stephen Myron.
to fire a Fed governor before. This stems from unsubstantiated allegations that Governor Cook has denied. Everyone understands what's happening here. The president's tariffs are damaging the economy. We can all see that. The economy is struggling as he's created a 10% tax on virtually everything, making Americans poorer and poorer, all to give a tax cut to billionaires. And now he's insisting that the Fed cut interest rates to try and mask the fact that his economic policies are failing miserably. Families deserve a Fed that will work for them, not for the president. And Lisa Cook is simply being scapegoated for Trump's failed economic policies. Dr. Myron, the Fed's job is to maximize employment and keep prices stable. That's it. Not to soothe the president's ego, not to inflate his poll numbers, not to carry out his political agenda. A strong central bank serves families, investors, and the entire world by just relying on economic data and focusing on employment and prices. There's a reason why our economy, even when it struggles, is the envy of the world. There's a reason why people invest in America. And I think that the independence of the Fed has a lot to do with that. You seem to believe the opposite. For example, in this Manhattan Institute paper published last year that I would like to enter into the record, you propose reforming the Federal Reserve by explicitly tying Fed board membership to the result of elections, giving the president control over the Fed and allowing the president to have complete authority to fire Fed governors. Congress would need to implement these reforms. Is that correct?
Thank you, Senator. That is not correct. I did not recommend giving the president control over the Fed because what I recommended doing was a package of checks and balances, and one of the other checks and balances included in that package was strengthening the system of regional reserve banks and ensuring that they voted every meeting, which would then give them a majority over the Board of Governors.
I've read your paper, and I disagree with your characterization of the argument. Do you think our economy would be better off with President Trump setting interest rates unilaterally?
Thank you, Senator. I don't believe that's a situation which is currently happening.
But my question is, do you think our economy would be better off if he were able to set interest rates unilaterally, yes or no?
I think the president has had a series of excellent calls on monetary policy over the recent few years. However, I do think that independence of the central bank from political cycle is key to its long-term success in delivering superior economic outcomes.
So if a Fed governor disagrees with the president over interest rates, should the president be able to fire them based solely on that policy disagreement?
I'm afraid that I have no legal training, particularly not in constitutional employment law, so that question is not one that I am capable of answering.
Do you think the president should be able to fire someone based solely on a policy disagreement? You've been nominated to serve on the Fed.
Again, I have no means with which to evaluate that claim, lacking any form.
Do you think it's appropriate for the president to threaten to fire them as he's threatened to fire Chair Powell?
Again, it's not my prerogative to have views on such a question.
Well, I think you have opined on such questions. Here's the problem with your answer. Trust in institutions takes years, it takes decades to build. And this political assault on the Fed's independence threatens market stability, reducing investment in our country, costing jobs, and jeopardizing the retirement accounts of millions of Americans. Dr. Myron, in your view, what happens when businesses and consumers and investors lose faith in the Fed's ability to act independently from politics, whether it's from the left or the right?
Thank you, Senator. Should financial markets and households and firms come to view that the Fed is not independent, it presumably will have a material effect on bond yields and inflation expectations that would be adverse for the outcome of adverse for economic outcomes.
I think that there's a reason, again, that America's economy is the envy of the world. I think the independence of the Fed is an important part of that. And based on the statements that I have seen so far, I'm convinced that you're not going to exercise that kind of independence. I think you're conflicted in this role, that you would be a mouthpiece and a proxy vote on the Fed board for President Trump if you were confirmed. And I find that deeply alarming and concerning as I think about the retirement accounts of people of Georgia, as well as the strength of our overall economy. Thank you so very much.
I yield myself 5 minutes. Mr. Burke, Americans are dying at record rates from fentanyl. Over 74,000 overdose deaths in 2022 alone. Much of this fentanyl is trafficked into the United States through cartels with ties to Chinese precursor companies. President Trump rightfully designated these cartels as foreign terrorist organizations and signed the Halt Fentanyl Act to fight against
Speaking
it.
now, Senator Jim Banks.
How are
He's a
you going to
Republican from
enforce
Indiana.
tougher sanctions on the financial networks that enable this flow of poison into our communities?
Thank you, Senator, for that question, and I very much share your concern about the risk posed by that activity. I'm encouraged by the actions that have been taken already by this administration to target cartels with additional authorities, and indeed, as you're aware, FinCEN has implemented measures against the banks in Mexico that continue to support some of those the activities as well. I think going forward, and if I'm confirmed, I look forward to getting more information about the details. A lot of that's intelligence driven, as it should be, to understand where there are networks and nodes and typologies to move money through the system that can be vulnerable to disruption with the right tools, and developing those tools using all the range of authorities available at Treasury, and implementing that robustly, including through diplomatic engagement with other countries where we need a cooperation on pursuing that. So if confirmed, I look forward to working on that.
I look forward to that too. Thank you. Mr. Hobbs, each year HUD distributes tens of billions of dollars of housing assistance to families in poverty through programs like the Housing Choice Voucher Program in Section 8. Unfortunately, these programs punish people for working and for getting married. How will you specifically reduce these harmful penalties that discourage marriage and career advancement as they jeopardize housing support?
Thank you, Senator, for the question, and that's an issue I hold very deeply. Unfortunately, it is currently statute that we take about 30% of a low-income person's income. Whether they get married, we'll take their spouse's income, or they get a job increase, we'll take 30 cents on the dollar. And as you said, it's incredibly disincentive to work and marriage. One thing we are doing is we're exploring every opportunity and every regulatory and statutory flexibility we can to empower local public housing authorities to promote self-sufficiency. We're looking at things such as time limits. We're looking at things such as work requirements, the family self-sufficiency program, and others can be utilized towards this end. But I would love to be able to work with this body on those statutory obstacles.
Great. I look forward to working with you on that too when you're confirmed. Mr. Kurtz, last month, Senator Warner and I introduced the RESIDE Act, a bipartisan piece of legislation that was passed through this committee as part of Chairman Scott's Road to Housing package. It's a common sense proposal that directs existing funds through the Home Improvement Partnership Program to renovate blighted industrial buildings into homes for working families. When I was home for the August recess, I met with mayors, Republican and Democrat, of small and big cities all through the state of Indiana, and they very much welcome this type of solution to the housing crisis in their communities. But how else can, in your new role when you're confirmed, can you innovate proposals like this to help tackle our dire housing supply crisis?
Well, Senator, thank you for the question, and I do commend this committee for the actions that they've taken specifically in that Road to Housing Act. And it's part of what is so exciting about working in this space is that I think we all agree on what the goals are here, which is to, again, increase the amount of affordable housing and to decrease the amount of homeless Americans that we have. What you touched on is that, again, that we need to innovate in this space. So renovating old buildings, like you just mentioned, is a huge opportunity. They're looking at the HUD housing code for manufactured homes is another opportunity. And in fact, this Monday, the Department of Housing and Urban Development will be having a demonstration on the National Mall of all the new type of housing availabilities we have there. Looking at making it easier for prefabricated homes to go and be put in place in our cities. And really going back to those mayors and those local communities that you just mentioned and hearing from them what their community is yearning for and what will work for them there is a way to continue to move that ball forward.
Thank you. Look forward to working on those issues with you as well. Thank you to all of you. I support your confirmation to the important roles that you play. With that, I yield to Senator Blunt Rochester.
Thank you, Mr. Chairman, and thank you to the nominees. Dr. Myron, in your
Lisa Blunt Rochester, Democrat from Delaware, now in live questioning of Stephen Myron on Bloomberg.
You also said that the independence of monetary policy is critical. So I'd like to begin with a yes or no question as well. Do you believe the Federal Reserve should remain an independent entity? Yes or no?
Thank you, Senator. As I said in my opening statement, the independence of the Federal Reserve is critical to delivering superior long-run outcomes for the economy.
So that's a yes.
Yes.
And I'm really glad to hear this, especially since you've said on the record, quote, "I've always been clear that the independence of the Fed is of paramount importance." During this hearing, senators on both sides of the aisle have spoken to the independence and independence from political influence of the Fed. And literally almost every person, almost everyone, Democrats and Republicans, have spoken to that. So this shouldn't be a controversial opinion. Yet in the past 8 months, this administration has tried time and time again to exert more influence over the Federal Reserve, an independent agency. Here are a few headlines from news articles that I'll be submitting for the record. From Forbes, Trump might greenlight major lawsuit against Fed Chair Jerome Powell. NPR, Trump floats firing the Federal Reserve Chair as White House criticism boils. From the Wall Street Journal, uncharted waters, Trump's attempt to take charge of the Fed. From CBS News, Trump's unprecedented firing of Fed Governor Lisa Cook raises untested questions. Mr. Chair, I ask unanimous consent to submit these articles for the record. Mr. Chairman, I ask unanimous consent. The president has tried and failed to fire Chairman Powell. So now he's on to his latest target, Governor Lisa Cook. She is currently confronting what appears to be an intentional smear campaign and attempted firing. She has and has continued to serve our country admirably. Ranking Member Warren referenced Nixon, but to my knowledge, in the 111-year history of the Fed, no president has attempted to influence the Fed so blatantly and egregiously as our current president. Dr. Cook is a Truman Scholar, a Marshall Scholar, graduate of Spelman College, went on to Oxford. Her body of work is a direct rebuke of the failed promises of trickle-down economics. And it's not lost on me that she is the only and first ever Black woman to serve on the Federal Reserve Board of Governors. First Chairman Powell, now Governor Cook. Who's next? Many of my colleagues have spoken to Dr. Myron's potential conflict of still being employed by the White House and potentially serving on the Fed board. Even in the questioning about whether or not, what are some of the qualifications? What are the powers that the president has? One of the things that you said, Mr. Myron, is I have no legal training on the issue around removal of Fed governors. But that didn't prevent you from writing a 25-page document that talked about that exact topic. The bottom line, the strength of our economy relies on an independent Federal Reserve. And Americans rely on a strong economy to afford the basic goods and services needed to survive and thrive. I hope that I can count on my colleagues to voice all of the collective support for a Federal Reserve Board to stay strong and do that amongst or against any of the president's attacks on this independent operation. I, again, am very concerned for where we're going as a country when there aren't those checks and balances. And again, my colleagues across the aisle all spoke pretty much unanimously to the independence of this agency. And so I look forward to seeing us put our proverbial money where our mouth is. Thank you, and I yield back.
Senator Van Hollen.
Thank you. And I want to start by associating myself with the comments of my colleague, Senator Blunt Rochester, with respect to all her comments, especially
Senator
with
Chris Van Hollen, Democrat from Maryland, now questioning Stephen Myron, live on Bloomberg.
there. Dr. Myron, I've been following closely these proceedings and your responses. I just want to confirm that you would like to keep open the option of returning to the Council of Economic Advisors after your 4-month stint, should you be confirmed. Is that right?
Thank you, Senator. As I said before, the advice that I received from counsel was to...
I'm just asking about your personal ambitions and interests. Do you want to keep open that option?
Well, you know, 4.5 months from now is on the one hand a short time, but it's also a very long time, and I have no idea what the world is going to look like.
But the fact that, I mean, you could resign, could you not?
I could, and as I said earlier, if I were nominated to a term that's longer than 4.5 months and confirmed to that term, I would resign.
Right. So I just don't know why you have such a hard time responding to my question, which is you want to keep open the option of returning should your term be 4 months. That's what you want to do, right?
I'm following the advice of counsel, and
did the counsel advise you that you could resign if you wanted to?
Yes, counsel did advise that I could if I wanted to.
Of course you could. And so you want to keep open the option of returning to the Council of Economic Advisors. So my question here is pretty simple. It would be up to President Trump as to whether or not you were able to return to the Council of Economic Advisors, right?
Well, as the Council of Economic Advisors is a part of the president's administration, the president would be able to decide who staffs that agency.
Exactly, right? He could decide not to bring you back, right? This is a pretty straightforward.
Yeah, the president can decide who staffs that agency.
Yeah. And so do you think that President Trump would want to have you back at the Council of Economic Advisors if you defied his wishes in your votes and actions on the Federal Reserve, should you be confirmed?
I do not know, the inside of anyone else's mind. What I can tell you is that if I am confirmed to the Federal Reserve, I will act independently based on my own independent analysis of the economy and economic policy.
Well, let me help you out, and I think a couple of your boss's tweets would be reflective of his state of mind. This is a tweet from the 1st of this month. Quote, Jerome, too late Powell, a stubborn moron, must substantially lower interest rates. Now, if he continues to refuse, the board should assume control and do what everybody knows has to be done. So are you seriously telling me that if you were to vote and exercise judgment that was not consistent with what the President of the United States wants, that the president would not have you back at the Council of Economic Advisors, the job that you want to hold open for yourself?
Thank you, Senator. I actually interpret that statement as an exhortation to independent action by encouraging the members of the Federal Open Market Committee to vote their own views as opposed to taking direction from a chairman of the Federal Reserve. So I interpret those words as rather the opposite of what you do.
Have you've not seen the tweets where the president has threatened to try to fire Powell? Have you not seen those?
I've seen posts on Truth Social.
Okay. Well, I mean, he has done that repeatedly. And so for you to suggest that the president would somehow welcome you back with open arms at the Council of Economic Advisors, should you vote in a way that is opposed by the President of the United States, is just not credible in any way, given the president's repeated actions. Let me ask you about the situation over at the Bureau of Labor. Here's another tweet, actually the same day as the earlier one. Today's job numbers were rigged in order to make Republicans and me look bad. I have a very simple question, Dr. Myron. Do you think that the statistics were rigged in order to make the president look bad?
I think the statistics were allowed to deteriorate in quality steadily over the long.
That's a very different issue. We may agree or disagree on that, but that's very different than suggesting that they were intentionally rigged. Are you seriously suggesting, as the president did, that the numbers were rigged? Just a yes or no.
I believe that the numbers were allowed to deteriorate without taking corrective action.
That's non-responsive. I mean, it's non-responsive.
Senator's time has expired. Senator also Brooks.
Thank you, and good afternoon. Normally, for a nominations hearing, we use our 5 minutes to ask questions of the witnesses, and unfortunately, these are not normal times. I've been watching hearings from another part of the Senate today, and I believe that what...
Angela also Brooks, now Democrat from Maryland, as Stephen Myron testifies before the Senate Banking Committee. This is live on Bloomberg.
And so today, the nomination of Dr. Myron to be a member of the Federal Reserve's Board of Governors is an attempt to rewrite the tragic story that the Trump economy is telling the American people. This administration wants to find someone else to blame for the chaos that we're all experiencing, and that's why they are illegally attempting to fire a current member of the Federal Reserve. That's why they fired the leader responsible for providing objective economic data to the American public because they did not like the facts. Dr. Myron, who's before us today, is one of the chief architects of the Trump economy. So let's talk about that economy. The American people remember just 8 months ago when this administration took over. This president promised to end inflation on day one. He promised energy and electricity prices would be slashed. He insisted that housing prices would decrease, and he said that he would make America affordable again. 8 months later, what we know is that President Trump has no wins to celebrate. His promises have proven fraudulent. Prices have not gone down. In fact, they've gone up. The Trump tariffs, of which Dr. Myron is a strong proponent, are harming Maryland families and businesses. Prices of groceries and other goods continue to rise, and middle and working class Americans are worried. This week, a new poll found that a record low number of Americans now believe that their hard work will improve their standard of living. I believe that Dr. Myron knows the Trump economy is in fact failing, and that's why he's publicly celebrated Trump's firing of the leader of the Bureau of Labor Statistics, because you know what? He did not like the facts. It's pretty obvious to me and to everyone else paying attention, Trump's economy is an unmitigated disaster. It's harder than ever. I just met with a number of young people who came to me, and it's harder than ever for a young American to buy a home, and they know it. And the American dream is slipping further out of reach for millions of people. America's promise has always rested on the idea that its citizens can have a fair shot at the American dream. Yet President Trump's economy is destroying that foundation. This is an ugly story. The American people are struggling as a result, and this administration is searching for a scapegoat. That's why the president is now imposing political influence on the Federal Reserve, how disgusting that is, which is bound to hurt Marylanders' retirements, savings, and mortgages. The president's unprecedented illegal firing of Dr. Lisa Cook won't improve our economic outlook, and it will continue the chaos and reduce confidence from American families and businesses. This president and the administration he's assembled has made it harder for Americans to build wealth and to get ahead. It is a devastating legacy that seems only to worsen by the week. So Dr. Myron's nomination would only take us further down this disastrous economic path that this administration has set. This nomination won't make the lives of Americans better, and it will not, in fact, lower cost of inflation or fight it. It won't give 20 million Americans their health care back. It won't provide for our nation's most vulnerable, and it will not restore confidence that the Federal Reserve is safeguarding the American economy. For these reasons, I cannot support Dr. Myron's nomination, and I cannot sit back while the president injects chaos into the economy to settle political grievances. Too many Marylanders and too many Americans are suffering because of the sheer economic ignorance of this president and the cowardice of nominees who know better but refuse to speak up. So thank you so much, and I yield back.
That concludes the question and answer portion of today's hearing. Prior to adjourning, I have some final housekeeping announcements. Before I do that, though, I'd like to thank our nominees for testifying before the committee today, and thank you for your willingness to serve our country. For senators, all follow-on questions for the record must be submitted by 12 p.m. Friday, September 5th.
There you have it. Jim Banks, the senator, Republican from Indiana, wrapping things up on behalf of the chair. There aren't too many senators left in the room at this point because they all had to go vote, but that does wrap up the session for Stephen Myron that we wanted to bring you live and unfiltered here on Bloomberg Radio. Thanks for joining. It's the Thursday edition of Balance of Power, starting a little bit late today as we've all had eyes and ears on this important conversation. Senate Banking Committee and some pretty chippy Q&A, certainly with Democrats on the panel, the likes of Senator Elizabeth Warren giving Stephen Myron a real run for his money. Bloomberg's Michael McKee has been listening and watching on Capitol Hill. He came to town for this, and he joins us now for his reaction to what we just heard here. Mike, let's just start off the top. Stephen Myron could be confirmed in time for the next meeting. Will he be in the room?
That's a good question, and it really doesn't depend on what Democrats thought today or what really anybody thinks of his nomination, because the Senate Republicans are going to approve him. It's only a question of how they can fit it in on their calendar, because they have a lot of things going on, and we know they're backed up on nominations, and they're talking about ways to short-circuit that right now. So their hope is they can get him on the floor next week and get him through before the next meeting. It's kind of an irrelevant question, though, Joe, in the sense that Myron's vote won't make a difference one way or another. Either Powell and the majority will cut rates on September 17th, or they won't. And if they don't, then Myron would only be one more minority voice calling for rate cuts.
Well, I'm always good for an irrelevant question. I'd be curious to hear your thoughts on the conversation. Michael McKee, Democrats showed up to challenge Stephen Myron on his independence and what he once called the revolving door between the Fed and the executive branch. Let's bring you into the room for a moment here for our listeners and viewers. Listen to Stephen Myron on Fed independence.
I couldn't be more in agreement that independence of the central bank is of paramount importance for the economy, for financial markets, for the long-run stewardship of the country. All of those are completely, I'm in complete accord with. Look, the president nominated me because I have policy views that I suppose that he liked. If I'm confirmed to this role, I will act independently, as the Federal Reserve always does, based on my own personal analysis of economic data, my own personal analysis of the effects of economic policies upon the economy, and act based on my judgment of the best economic policy possible.
He was challenged as well on the idea that he was not resigning his current role as chair, and he plans to go back to the White House. Michael McKee, how could that fulfill the definition of independent?
It really doesn't, and that was a point that Senator Jack Reed of Rhode Island was careful to make. calling it ridiculous because the not resigning from the CEA, taking an unpaid leave, would mean he's still an employee of Donald Trump at a time when he is supposed to be representing an independent agency. And if he wants to go back to the White House, he's obviously going to have to please Donald Trump. And that's one of the things that the Democrats were focused on today, plus the idea that he can't really be independent. Elizabeth Warren, you heard, ask, did Donald Trump lose the 2020 election? And of course, Stephen Myron couldn't answer that question. He wouldn't be allowed to by the president, so he dodged and weaved on that. And the Democrats made the case he's not independent, but the Republican senators just kind of gave him a pass on that.
Yeah, the references to being Trump's puppet, I'm sure not a lot of fun for Stephen Myron to hear. How did he perform, just in general, the body language, Michael? Was he ready for this today?
I think he was ready for it. He was practiced. He tried to get in a lot of word salad answers to some of the sharp questions, and the senators cut him off on that. So he obviously prepared well, but there wasn't much he could do. I mean, the Democrats had him dead to rights on a lot of issues, but he kept going back to the idea of, I say I will be independent. And he couldn't go much beyond that, but he held his own doing that.
Michael McKee, back in Washington today for the big hearing. We thank you, Michael. Of course, we'll have more of Michael's analysis as we give this a chance to marinate. The hearing just wrapped up here, just about 2.5 hours, as expected, for Stephen Myron. We had a bit of a split screen, though. RFK Jr. testifying before a separate committee at that very same time, and we'll unpack some of what we heard. These got to be pretty chippy on both ends of things. The RFK Jr. hearing devolved into actual shouting, which is something that we'll bring you to a little bit later on. But I do want to check the markets here. We're going to talk to Tyler Kendall on the way. But, of course, Wall Street was listening and watching this hearing as well. And Lisa Mateo has the latest on the markets for us from World Headquarters in New York. How's it look, Lisa?
Right now, it's looking pretty good. We have stocks advancing. This is after the hearing, and also this is ahead of tomorrow's job report. Today, though, we had some more evidence the labor market is cooling. We had applications for U.S. unemployment benefits. They rose to the highest since June. Initial claims, they increased 8,000 to 237,000 last week. Continuing claims, little change. Other eco data, we had the U.S. trade deficit that widened in July to a four-month high. Companies raced to import goods materials before President Trump's new global tariffs. And speaking of trade, President Trump asked the Supreme Court to uphold his global levies. Stocks right now, the NASDAQ up 0.2%, 55 points. We had the Dow up 0.4%, 207 points, and the S&P 500 up 0.3%, 22 points. The two-year yield 3.58%, that's down 2 basis points. The yield on the 10-year 4.17%, and that's down about 3 basis points. The Bloomberg Dollar Spot Index up about 0.2%. To earnings we go. We'll check them with shares of Salesforce because they continue to fall. They're down at nearly 6%. Quarterly revenue outlook was on the lighter end of expectations, and that kind of suggests its AI's products, well, they're not paying off as quickly as hoped for. On the upside, shares of Hewlett-Packard Enterprise, they're up nearly 4%, posting a 54% jump in quarterly networking revenue, and that was boosted by that acquisition of Juniper Networks. Also on the move, American Eagle Outfitters, their shares are up 34%. After the close, we move on to Lululemon, Broadcom, and DocuSign. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash.
All right, Lisa, thank you so much. In Washington now, Balance of Power, the Thursday edition, the early edition on Bloomberg Radio. Satellite radio channel 121. You can always watch the radio on TV by going to YouTube. Search Bloomberg Business News Live if you aren't already watching us on Bloomberg Originals. Starting a bit late today, following the hearing for Stephen Myron, and we're looking ahead to an event at the White House that's going to unfold a little bit later on. Tim Cook is already in the building, and this is going to be a who's who of high tech in the Rose Garden, which doesn't look so much like a garden anymore because you've seen this. The president put down all the pavers, and then they put chairs and umbrellas out there, the big sound system to kind of model the look and feel of the patio at Mar-a-Lago. The question is, what are they going to be doing there? And Bloomberg's Tyler Kendall, as mentioned, is with us here in studio, our Washington correspondent. Nice to see you in the Bureau for a moment. I don't know if you're going back over there later on, but this actually is a First Lady event that draws them to Washington, right?
Right, exactly. So First Lady Melania Trump is going to be hosting what is the second gathering of the White House's AI Council. Okay. And we had heard from the First Lady earlier this year that she was launching launching this initiative, and it's geared towards really trying to educate the younger generation on artificial intelligence, the risks, but also making sure that they're fully equipped to use artificial intelligence in the correct way. It seems like this is really about a challenge, to have them take this on as a challenge, to use AI to solve everyday problems, community challenges, but also what I found interesting, to urge teachers in the classroom to start integrating AI, as we know that that could be perhaps a little controversial with some parents when it comes to how we're seeing really this AI revolution. But you hit the nail on the head at the top there, Joe. We always have our eyes on these tech titans, and there are quite a few of them who are there at the White House. You mentioned Tim Cook seems to already be arriving. Probably worth pointing out. The dinner with President Trump after is at 7 p.m. Eastern.
They're having dinner in the Rose Garden? Or is this an outdoor thing?
That's what it appears to be. These tech CEOs actually get the first event there. They're the ones that get to see the big unveiling.
The first Rose Garden. So all right, we mentioned Tim Cook. We've got Zuckerberg, Satya Nadella, Sam Altman, Sundar Pichai. Bill Gates is going to be there.
No Elon Musk.
But Elon Musk. What are we supposed to think about that?
I mean, at this point, we haven't gotten
Use your imagination.
Yeah, we
haven't.
haven't.
Is he invited, do we know? Or just...
I don't.
See what you can chase down for me on that.
I'm going to have to look into that one. But of course, it's a relationship that we follow very closely here, particularly after we saw that rift a couple of months ago, that very public divide. But perhaps we'll get an update on how this could shake out. Worth mentioning, though, that the White House AI czar David Sachs is running this event. He's expected to be there. Of course, he's a huge pillar, the pillar of the Trump administration's AI plans.
Let us know what you learn, as always. Great to see you, Tyler. Typically on the North Lawn of the White House, with us in studio today, Bloomberg's Washington correspondent, Tyler Kendall. Happy kickoff to football season. I should say that as well to my good friend, Kaylee Lyons. She must be so excited at home with the family. And I mention that because this is the preeminent season for sports gambling, right? Football brings the dollars. And there's a tie-in here, don't worry, to what's happening in Washington, because now that lawmakers are back in town, they're going to be attempting to do a little bit of a fix on the president's big, beautiful bill. Don't worry, I'm going to connect the dots here for you, because as you might have heard, and we've talked about this a bit, the bill changes the way tax deductions work for gambling losses. You're only allowed to deduct 90% of your losses. It used to be 100. And so there are big concerns about what this means for the business, whether you're on the Las Vegas Strip, you're on Fremont, whether you're gaming on your phone. This is a massive growth industry. You hear us talk about DraftKings and all the rest on here. You can't hide from sports gambling. And so there is an attempted fix here. The representative from Nevada introducing the Fair Bet Act, which would return the deduction back to 100% of losses. So we'll see where this goes in the days and weeks ahead, but it's something we wanted to talk about with a true stakeholder. Derek Stevens is the mayor, essentially, of Fremont Street. He's the CEO of Circa Resort and Circa Sports, and is known for having one of the coolest sports books in the world. You've seen pictures of the pool out there. This is where producer James goes when he's in Las Vegas. They actually get in the pool. The sports book is outdoors with this massive... Derek, it's great to see you. Am I describing this pretty well so far? Because I've been looking forward to talking with you, and I want to know if this legislative fix is going to help save your business.
Yeah, I think it's going to help. It's going to help save a lot of the industry. Our business is one of them. But I think simply when you look at what happened in the big beautiful bill, there was an element that occurred in the middle of the night that was unintended. It's simply an unintended consequence. It doesn't matter what side of the aisle you're on. Neither Republicans nor Democrats want this to occur, because effectively what it's going to do, it's going to take people that bet frequently, some of the large bettors, some of the professional bettors, and even just some of the larger recreational bettors, and you're basically forcing them to no longer bet legally. You're forcing U.S. citizens to go offshore and bet illegally. Under the current situation, the ability to deduct 100% of your losses is very, very important. Under what got passed in the big beautiful bill, you'll end up getting taxed on a substantial amount of phantom income, and people that want to want to make sure that they file an appropriate tax return are being forced to bet outside the country. And that's very unfortunate because it's going to impact, it will impact all states that have regulated gaming. It'll impact a lot of Americans that just don't want to do that.
How much time do you have to fix it? And by the way, I should mention that Derek Stevens also owns the D in the Golden Gate. He's got a couple of major businesses here. How much time do you have to fix that before it actually potentially impacts business, or is that happening already?
Well, I think everyone's working on it behind the scenes, but I think there's going to be a reconciliation bill that's going to have to come in December. The big beautiful bill does not go into effect until January 1st, and I think the elimination of this 90% deductibility and going back to where we were with the 100% deductibility, that's going to be one of many things that comes into this reconciliation bill that will have to take place at some point in December. U.S. House Representative Titus has, as you had mentioned, has implemented this proposal for the Fair Bet Act. It's gotten bipartisan support. Also, in the Senate, we've got bipartisan support from senators as well. This is just something that needs to be put into a bill so that we can go back to where we were. The impact, I think, is a bit misunderstood from a political perspective because it would have a big impact on the handle within every state that has legalized sports wagering in the country.
Interesting. Wow. Well, there's a lot at play here, and I'm assuming that you're talking to Representative Titus and the senators that you mentioned. Have you been lobbying actively with your representatives here in Washington?
Sure, we've been talking with Representative Reschenthaler. We've been talking with Representative Titus. We've talked to a number of senators, Senator Ted Cruz, Senator Masto, and I feel very comfortable that I think people are now getting to the point where there's enough awareness that people are raising their eyes and saying, "Oh my, this is not good." I think everyone understands that. It also impacts the number of recreational individuals that happen to go to casinos. The only ones that win out of this deal are the illegal bookmakers. Every state loses in this deal. Every state and every legalized sports book, as well as the U.S. consumer. So this is one that just needs to be fixed. It's very black and white. It needs to be fixed.
You make a pretty good case, and it sounds like you're not too nervous, I have to admit. There's something else, Derek, I'd love to ask you about, a couple things while you're here. It's a pleasure to spend time with you on Bloomberg. There's something else in that big, beautiful bill. It's no tax on tips. What does that mean for your employees and just for service workers throughout Las Vegas? Was this a good idea?
Yeah, I mean, it was a good idea. I think that I think the implementation, there's going to be a few hiccups on the implementation, but certainly I could tell you, Las Vegas is a very good representative area, within the country to talk about no tax on tips because it's the highest percentage of tip compensation of any city in the country. I can certainly tell you for our employees, they're very excited about it. As the details came out with the $25,000 maximum, that's still very, very impactful. I could tell you, I mean, I think this is something that's going to help spur the economy on because this money is going to get spent or it's going to get reinvested. Our employees are excited about this thing kicking in. They actually initially thought it went in. It went in about a month ago and got real aggressive and started asking about why were they still being taxed on tips. But after going through an explanation saying no, this is gonna happen on January 1st, I can tell you there are hundreds of thousands of people that are excited about this, and I think it's going to make a big impact in their daily lives.
Mm-hmm. What's going on with business in Las Vegas right now, Derek? We've seen a drop in visitors for 6 straight months. I was just there in April, as a matter of fact, and it was packed. I was in line for everything that I tried to do, and I wonder if there's a difference between the Strip and Fremont, or if you're just seeing a different story than the narrative out there. Is business on the upswing or not?
Well, it's interesting question. When you see the headlines and saying that visitation's down, that's true.
Right.
Visitation's been down, anywhere from 3% to 10% month over month. but that's by bodies. When you take a look at revenue within this, let's say, for example, the state of Nevada, with the Gaming Control Board, revenue is up. The month of June, the numbers came out, and in the month of June, overall revenues in downtown Las Vegas up double digits. Overall revenue on the Strip up 3%. So revenues are up, yet visitation's down. So this is kind of where I think you're seeing a little bit of a bifurcation in the U.S. economy. Right now, I would say the middle high to high end not impacted. It seems to be very, very strong. It's down at the lower middle that's being impacted, where the cost of inflation's taking their toll. The cost of transportation, the cost of a flight, cost of hotels. And I think that's the segment that we're missing in Las Vegas, but really in tourism in general. I mean, it's the same situation when you take a look at the tourism board in Hawaii. Take a look at how tourism is impacting New York, Miami, and such. It's really the lower end that's kind of getting hurt. And the one thing I would say, though, is I'm a bit hopeful going forward, because as of right now, it looks as if interest rates are coming down, and these interest rates are hurting that low end. I mean, right now, I believe we're looking at least 125 basis points, maybe 100. The market's indicating about 140 basis points of where the interest rates would come down, and I think that's going to really create a situation where by lowering adjustable rate mortgages, by lowering costs on financing your car, lowering a number of other expenses, that's going to help bring the economy back in a more broad sense as opposed to just a top-end sense.
Listen to you, Derek Stevens. You need to join us on our next Fed special. This is actually fascinating to hear you cut this all up. Lastly, I'm just curious, what's going to happen tonight? You got a big night here, Eagles, Cowboys. I'm guessing that the pool's going to be full. Circa Swim, by the way, if you haven't, this is what I was referring to. This is a massive swimming pool. They have like a 40-foot tall HD screen that somehow, Derek, you can see in the light of day. I still don't understand how that possibly works. But you've got an incredible amount of money here in the Circa Survivor pool. It's over $16 million. What's the crowd going to be like tonight, and how important is football season for your business?
Oh, it's going to be crazy. This is a great day. Stadium Swim is our rooftop location. It's a 143-foot diagonal screen, jointly developed with Daktronics, publicly traded company. They did a great job, and with their help, we make sure that there's no glare and you can always see it clearly, whether it's day or night. We'll have about 5,000 people out at Stadium Swim, and it's completely sold out. It's been sold out for weeks now. And then within the casino, within Circa, we've got the world's largest sports book. That's an inside venue, and that's completely sold out as well. So we're very excited about that. When you talk about our football contests, I just can't believe how much demand there are for football contests. Last year, we had 2 football contests, and we had a total of $20 million worth of entries. They were $1,000 to enter. They were called Circa Million and Circa Survivor, and we had $20 million of entries. We still have 2 days to go. Those 2 contests, plus our new contest called Circa Grandissimo, which is a $100,000 entry fee contest. These numbers are going crazy. We may have in excess of $30 million of entries into our football contest. And the way it works is you have to show up in Nevada. So that just adds to a little bit of Nevada tourism.
Well, this is why we're talking about this legislation. This is big business, big money. And Derek Stevens is right in the middle of it. From Circa, the D, and the Golden Gate, it's really a pleasure to have you with us here. When producer James comes out there, you got to help him get one of those couches at the stadium.
I will. Oh, no question about it. We, you know a guy. We'll be able to help out. No problem. Good to talk.
Come back again. It's great to talk to you, Derek. When the Fed meets, we're calling you back. And good luck in Las Vegas. I'll tell you what. I wish I was in Las Vegas right now. Now James really Made me want to get on an airplane. Let's check Wall Street, see who's making money in the markets today. Lisa Mateo is in for Charlie Pellet. We'll assemble our panel on the other side. Lisa, how's it look?
You got it. Right now, things are looking pretty good. We have stocks on the rise, and this is after investors received a lineup of data that reinforced a cooling labor market, increasing bets for Fed rate cuts, money markets almost fully priced at a Fed move in September, and a total of at least 2 reductions in 2025. So let's get right to it. We'll start with the NASDAQ. It's up 0.3%, the Dow up 0.4%, and the S&P 500 rising 0.3%. In the yield space, we have the 2-year 3.59%. That's down 2 basis points. The yield on the 10-year 4.17%. That's down about 4 basis points. The Bloomberg Dollar Spot Index up about 0.2%. We have the Japanese yen down 0.3% at 148.63 against a dollar. Bitcoin down nearly 2.5% at just above 109,000. Sanofi, their shares fell the most in almost 2 years in Paris. This is after its experimental drug for a skin condition kind of disappointed in a late-stage trial. Its shares are down nearly 8%. Novo Nordisk testing its GLP-1 drug semaglutide. This is on Alzheimer's patients. Results due this fall. The company's really hoping to revolutionize dementia treatment, but also potentially generate about $15 billion in annual sales. And Techtember continues. Samsung Electronics unveiled their $650 version of its premium S25 smartphone, and a pair of new tablets, and Huawei Technologies introduce an update to its trifold phone. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. I'm Lisa Mateo. That is your Bloomberg Business Flash.
All right, Lisa Mateo, great to have you on board this week on Balance of Power, and great to have you with us as well. It's the Thursday edition. I'm Joe Matthew in Washington as we talk politics here, not just gambling in Las Vegas. Although, did you see how the crossover? That was pretty good. Producer James is looking out for you. That's the kind of conversation you're only going to hear on this program, which is why we love coming to work every day and meeting you here on Bloomberg Radio, satellite radio channel 121. On YouTube, search Bloomberg Business News Live, and we'll welcome our global television audience to the program coming up at the top of the hour. With this in mind, and our great conversation with Derek Stevens, I want to mention that Bloomberg Business Week Daily will be live at Bloomberg Power Players, New York, from Bloomberg World Headquarters today, 3 to 5 this afternoon Eastern Time. Sports is now a multi-trillion-dollar global industry. If you didn't get a sense of that from Derek, we're bringing you influential voices from the business behind sports to help you identify what's coming next. Catch it today, as I mentioned, 3 p.m. Wall Street Time, Bloomberg Radio, and on the Bloomberg Podcast channel on YouTube. I'm guessing you're listening to me or watching me on one or the other, which is what we do every day here. RFK Jr. in testimony, we've barely touched it yet, not just Stephen Myron, the Fed nominee, but RFK Jr., the Secretary of Health and Human Services, before a Senate panel to answer some tough questions about the firings and the dismissals, not to mention resignations that have come from the CDC, as well as his own agency at HHS. And there was some chippy talk here, specifically about vaccines and about his view of medicine in general. Senator Bill Cassidy, a doctor himself, a physician who was key in RFK Jr. being confirmed as the new Secretary of Health, had his moment earlier today. Let's listen.
You also told Senator Wyden at the outset that you didn't want to take vaccines away from people. And as I conclude, I would like to say this. Because of the conflicting recommendations made about COVID. This is from Eric Erickson, good conservative out of Atlanta, Georgia. Occasionally gives me help. My wife has stage 4 lung cancer. She is one of the people the COVID vaccine actually helps. Thanks to the current mess at HHS, CVS is unable to get her vaccine. Secondly, an email from a physician friend of mine. Hey, Bill, I'm not even sure what I'm asking you, but we're all confused and concerned about who can get the COVID vaccine. We are having our attorney try and render an opinion, but there's no firm guidance and concern about liability if vaccines are given to a patient who requests it, but not on the current CDC list. Pharmacists are requiring a prescription now even for patients over 65, creating a huge headache. I submit these for the record.
Without objection.
I would say effectively we're denying people vaccine.
Senator Cantwell.
You're wrong. You're wrong. That got pretty chippy with RFK. In fact, it devolved into outright shouting when he spoke with Michael Bennett. Maria Cantwell called him a charlatan. And Senator Warner of Virginia, who's going to join us on the late edition of Balance of Power, got into a full-blown shouting match with him as well over any number of issues, including his stand on vaccines. Let's assemble our political panel for their take on this. Rick Davis is here, Bloomberg Politics contributor, a Republican strategist and partner at Stone Court Capital, joined today by Aisha Mills, principal at Community Asset Management, our Democratic strategist. Aisha, it's always great to have you as part of our conversation. Rick, I'll start with you here. The job for RFK Jr., you would kind of assume, is to not make news in a setting like this, but he went for broke. He was shouting right back at senators, telling them they were wrong, telling them that their questions were not based on fact, and he even tried to ask them questions, which really devolved into a bit of a mess. Did we learn anything today that will help to affect the health policy in this country?
I don't know if we're going to learn anything today about the future aspects of the U.S. health policy, but it was one of the most disrespectful hearings on both sides that I've ever witnessed. You mentioned Senator Warner. What did he say? How can you be that ignorant? I mean, that's an incredible statement from a guy who usually is pretty respectful on the dais. And I would say the biggest thing that I took from this hearing was how many Republicans went after him. These are people who were crucial to his confirmation, who he made many promises to respect the vaccine policy of the United States. And Senator Cassie was a very good example, but it was also echoed by Senator Tillis and Senator Barrasso. I mean, these are senior-ranking Republicans, Senate Finance Committee, and he gets into arguments with them, which pays no benefit to a member of Trump's cabinet to start getting into fights with senators. So there's going to be a lot of damage control from today. And I would say is not exactly the storyline that the White House would have wanted out there. But it was clear that Secretary Kennedy came there in an effort to brandish his Maha credentials and build his base, not to talk about health policy.
It's interesting because RFK Jr. says the CDC failed miserably during COVID. But Aisha, he was not able to say how many Americans died in the pandemic or whether the vaccine helped to save anyone. What did you make of that?
Well, here's the thing. This entire ordeal that we're seeing play out in front of us, we could have predicted. In fact, most of us did predict this. When these same Republican senators who now are clutching their pearls and trying to interrogate this guy that, were the ones who essentially brought him into this role when he has absolutely no background in medicine. He is not a doctor. He is not a scientist. He just runs around spreading conspiracy theories. And 8 months ago, these same senators thought it was a good idea to put him at the helm of our public health system. I mean, we know that everything that he has said is bearing out now, right? Like the idea that COVID didn't help anyone and that this administration would have anyone, including the president, claiming that the COVID vaccine didn't matter and now trying to disabuse themselves of it is also just a contradiction to what was actually happening during that time. Let's all remember that it was the Trump administration, Donald Trump himself, who bragged about the $18 billion that he, through his role as president, made sure that the federal government invested in expediting a vaccine to treat COVID-19. It was actually that Operation Warp Speed that was one of the signature, I would say, accomplishments of the first Trump administration. It really showed government in action in an amazing way, investing in innovation, making sure that science was at the forefront, and doing all that it could to embolden doctors, scientists, researchers, and others to find solutions to our actual public health crisis. The fact that they are running away from that now, pretending like it didn't matter and didn't exist, is shocking to me because it was one of the monumental things that Trump had actually done. So the moral of this story, what you all just saw, was hypocrisy continuing to play out in front of us. And unfortunately, our health is literally at risk while these folks play political games.
Well, it's interesting to hear from the president on this as well, Rick. As Aisha reminds us, he was, of course, the force behind Operation Warp Speed, at least the political force, and he posted on Truth Social just a couple of days ago, it is very important that drug companies justify the success of their various COVID drugs. Many people think they are a miracle that save millions of lives. Others disagree. I want the answer, and I want it now. He seems to be questioning his own impact on all of this. We have just about a minute left, Rick. Where's Donald Trump's head on RFK Jr.?
Yeah, I hope Susie Wiles reminded him this was one of the hallmark accomplishments of his first term in office. I doubt if we'll see a repeat tweet on that one. But look, I mean, this was a question that a lot of Republican members asked Secretary Kennedy today. Yeah, they used it basically as to try and create separation between what he's doing and President Trump by saying, you know, wasn't this a great success?
Rick Davis and Aisha Mills will have a lot more time with our political panel in hour 2 of Balance of Power. They'll be back just a short time from now as we welcome our global television audience to the program. And Kriti Gupta joins me here in Washington. Stay with us with a lot more ahead, including our conversation with economist Claudia Sahm. We're going to get back to the Stephen Myron testimony. Tandem hearings today, and we've got them both covered for you here on Bloomberg.
from Washington, D.C., this is Balance of Power with Joe Matthew.
Good day for grilling in Washington. Welcome to the Thursday edition of Balance of Power with the Capitol transfixed today on dueling hearings, one for Fed nominee Stephen Myron, the other for RFK Jr., both devolving into a split screen of shouting matches. We'll unpack them both this hour. I'm Joe Matthew alongside Kriti Gupta in Washington. Thanks for being with us here on Bloomberg TV and radio. Things got pretty chippy in both of these sessions, Kriti, especially RFK Jr., with actual screaming into microphones. Stephen Myron, not so much yelling, but definitely a big disagreement with most Democrats on the panel.
Absolutely. This idea of Fed independence, which he says he really stands behind. The question is, he's still very supportive of Donald Trump's policies. You've seen him time and time again in almost every question back them.
That's right. We're going to go through this and unpack some of this with Bloomberg's Michael McKee. Also, insights from economist Claudia Saul. I'll be curious to hear what she thinks about the way forward here, with questions about whether he'll be at the next Fed meeting.
Well, and absolutely. And I'm going to put some of these theories, these economic theories, forward to her. Has she heard of them before, or is this the Myron Doctrine?
The Myron Doctrine. I like that. Later this hour, Dr. Leslie Cantor will be joining us from Rutgers University School of Public Health to get into this RFK debate. A lot of talk and yelling about vaccines, about health policy, and in some cases coming from Republicans. That was a pretty tough conversation with Bill Cassidy. We'll have to get back to that too.
It was a tough with Bill Cassidy, but Elizabeth Warren as well. I mean, always likes to steal the show.
That one we saw coming, as she told us last evening.
She told us last evening. We were warned. Plenty of heads up. I wasn't expecting the screaming match in return, though. She made some crucial points that some would say even move the markets.
Well, let's get into all of that. In fact, we're going to start with the markets. Lisa Mateo is in for Charlie Pellet at World Headquarters in New York. Lisa, how's it look?
Well, right now we have stocks on the rise. Bond yields falling. This says traders increase bets on a faster pace of rate cuts by the Fed. Now, the S&P 500 pointing to a back-to-back advance. Right now, it's up about 0.3%, 24 points. We have the Dow up 0.4%, 195 points, and the Nasdaq up 0.3%, or 79 points. Over to the yield space. The 2-year, 3.59%. That's down 2 basis points. The yield on the 10-year, 4.17%, and that's down about 4 basis points. To currencies, we have the Bloomberg Dollar Spot Index up about 0.2%. Japanese yen down 0.3% at 148.63 against the dollar. A few stocks on the move. American Eagle Outfitters, their shares soaring up nearly 35%. They said it expects a sales boost from marketing campaigns. You know them, featuring Sydney Sweeney and also Travis Kelce. Now, on the downside, newly listed software company Figma, their shares taking a hit, down 18%. Posted a double-digit rise in quarterly revenue, but profit missed expectations, and those shares are feeling the pain for it. And shares of GitLab, they are down about 9%, just about 9%. The provider of software development tools swung to a loss, but it raised its annual profit outlook. In other news for the company, its CFO, Brian Robbins, is leaving to join Snowflake. After the close, we have some more action from Lululemon, chipmaker Broadcom, also e-signature software company DocuSign. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash.
Lisa Mateo, live from New York. Thank you so much for the update here, watching Wall Street as we watch the aftermath of the hearings. And the headline on the terminal says it all. Trump's Fed pick draws Democratic fire at confirmation hearing. Of course, we're talking about Stephen Myron, someone we've spoken with more than once on this program as chair of the Council of Economic Advisors in the White House. A lot of questions about Fed independence and the idea that this revolving door would keep swinging. One, by the way, that Myron himself criticized before, the revolving door between the Federal Reserve and the executive branch, knowing this is just a 4.5-month term that he's up for here, and he's not resigning his chairmanship. He'll be returning to the political position at the White House after this is done. So there are a lot of questions by Democrats, namely about Fed independence. And Senator Elizabeth Warren, who we just mentioned, she joined us last evening to give us a sense of where she was going in this conversation, went straight for Myron and his relationship with Donald Trump. Let's listen.
So let me ask you the question for the third time. We want to understand your independence. Donald Trump stated that the BLS faked the job numbers before the election to try and boost Kamala's chances of victory. Do you agree with that, yes or no?
The Bureau of Labor Statistics did not take corrective action to improve the quality of steadily
Do you
deteriorating
agree
data.
with the statement that they faked numbers?
I believe that they were complacently allowing the data to
Do
continue
you
to
have
deteriorate
any
in quality.
evidence that they faked numbers?
Well, as I said moments ago, the data have steadily deteriorated in quality, and I'm happy.
Okay.
This, by the way, this approach was tried by several senators, several Democratic senators, including Chris Van Hollen. I'm pretty sure they never got an answer. Bloomberg's Michael McKee is in Washington to cover this hearing for us, our international policy and economics correspondent, and joins us live now from Capitol Hill. Did we ever get an answer to that question, Michael?
We never got an answer to that question, nor did we get an answer to the question of who won the 2020 presidential race, because Myron dodged that question as well from Elizabeth Warren. But basically, the Democrats pointed out the inconsistencies in his testimony and the inconsistencies with the paper he wrote last year that suggested major reforms at the Fed, including a 4-year prohibition on anyone going from the Fed back to a presidential administration. And obviously, he wants to go back after a 4-month hiatus at the Fed. He had no explanation other than it's a short term. So I would go back. But it was an effort by the Democrats to hold him accountable, and they probably did if the court of public opinion mattered. But in this case, it's the Republican senators on the committee who matter, and they basically gave Myron a pass on everything, and it looks like he will be reported out of committee to the Senate floor.
Mike, when it comes to that question of Fed independence, this kind of drum that Myron has been banging for quite some time, how does he suggest he can ensure independence?
Well, he sort of, he made the case that he would use his own economic training and his own beliefs to come to the conclusions he needed to about what monetary policy should be. He didn't separate what his own beliefs were from what the president's were. He was asked specifically if he believed in the president's views that he articulates so often on Truth Social about cutting interest rates, and he just also danced around that question. So it's pretty obvious that Myron would go to the Fed as a reliable vote for the president, but one could make the case that there are reasons to vote for a rate cut, as Chris Waller and Mickey Bowman have said, and so it's kind of hard for Democrats to score too many points in that regard.
Well, so give us the real take, Michael McKee, the purpose of this exercise, knowing that we have a Republican majority. Was this just about getting the poison out? Or will anything come from these clashes with Democrats? Is he as good as confirmed?
He's probably as good as confirmed. It's hard to believe that the Senate wouldn't vote for him, given that most of the members of the committee expressed their support, gave him softball questions, didn't seem to really care about anything that the Democrats raised. There were no follow-up questions from the Republican side. And the president has basically ordered the Senate to get him on the Federal Reserve Board by the time they meet September 17th. There are going to be calendar issues for the Senate floor action because they have a lot of nominations backed up. But if the president wants it, the Senate has shown they will give him what he wants.
Mike, you know me. You've known me for a while. You know I'm a markets girl at heart. So naturally, my favorite part of the testimony was when he was asked whether the bond market is pricing in or reacting to or considering the Fed independence is really at risk. Myron saying it's not, and that's not a real kind of scenario that would even show up. The natural follow would be, isn't that a done deal? Isn't Wall Street already saying Fed independence is not a thing anymore?
Well, it depends on whether you're in the administration or not. For Myron, he can say it's a theoretical question and I can't answer these hypotheticals because that hasn't happened. There are people on Wall Street who think Fed independence has been compromised, but we haven't seen a huge reaction in the markets. We've seen what may be the beginning of that, but right now it seems that the markets have made their peace with the idea of a 25 basis point cut, and that's keeping the long end pinned, the short end pinned down rather. The long end is exhibiting some concern, but not what you'd expect if they thought that the Fed had gone completely off the rails. That may still be out there.
Michael, it's great to have you in Washington, as always. Michael McKee, live from Capitol Hill. As we add the voice now of Claudia Sahm, we've been looking forward to this conversation in the wake of the hearing. Chief economist, New Century Advisors. Claudia, it's great to have you back with us here on Bloomberg TV and radio. What were your thoughts listening to this back and forth over Fed independence? Would confirming Stephen Myron for the board actually change the story here, knowing that he plans to go back to the White House?
So it was a pretty wild hearing. It lived up to expectations. This really wasn't about Stephen Myron and his ability to serve as a Fed governor. It was about Federal Reserve independence. And very specifically what that means is who is in control of the interest rate decisions. Is it the president or is it the Federal Open Market Committee? Right? We're at, and that's this big question mark. And we've seen a whole series of events that have kind of pushed us in the direction of this White House really trying to exert a lot of control over interest rates. And to me, in Myron's hearing today, it is absolutely the case, and he said this as well, presidents, when they nominate someone to the Fed board, it's someone whose views they agree with, right? Like that, the president does have an influence on the Fed. This is not some pure, totally devoid of any political contact. But there was more to this confirmation. And what to me was the real shocker was the idea that the White House is going to send him to the Fed and keep him on staff at the White House, which, a pretty clear reading of the Federal Reserve Act says that is not okay, but it just fits within a series of actions that really are pushing us towards a Fed that's under the control of the president. And that to me, that action was one that really caused concern, not the back and forth about, he's been in politics and he'll be independent. Those are words. That's it.
Well, Claudia, if we can dive into perhaps some of the policy and some of the kind of proposals that he was suggesting that very much have aligned with what we've heard from the White House broadly. The one that stuck out to me is the fact that he said there is no inflationary effect when it comes to tariffs. He was pushed about whether tariffs are taxes. His response was any policy can be modeled as a tax on Americans. As an economist, is that true?
Yeah, see, this was part of the hearing that was really complicated in that, Myron right now is the chairman of the Council of Economic Advisors. He's part of the White House. Part of his job is to defend those tariffs, right? That is not, when he would be at the Fed board, that is not his deal. It's how do you react to these tariffs? It's not selling them. He got questioning time and again about these tariffs, and he got really very few questions, if any, about his views on monetary policy. What do you think the neutral interest rate is? What do you think? You're not going to have a political official stand before Congress and throw under the bus the president's key proposals, right? That was, Democrats were asking these yes/no questions to get him to, he's not going to do it. He's in the administration, and he's also a presidential appointee, right? So I think, fine, whatever. He did a lot of hedging. He, tiptoed around issues. I didn't appreciate when he tiptoed around some that I thought were very directly about the Federal Reserve, but it was a strange hearing.
Well, Claudia, we are less than 24 hours away from a jobs report tomorrow. And I feel like the closest he got to discussing the labor market and even discussing those dynamics was talking about immigration. And he connected the dots between the immigration policy, the White House's border policy, and inflation when it comes to housing. Can you just connect those dots for our global and our political audience, frankly, about how that relationship should work in theory?
Right. So I think absolutely going into tomorrow's employment report, we should be thinking a lot about how much immigration policy has changed in the United States in just the last few years, because these big declines in immigration in the country, a rise in deportations, that should be showing up in terms of slower job growth because we have less labor supply. There can be other things going on, but that will almost certainly be present in tomorrow's numbers that we can't read it out easily. Myron was talking about the inflation effects, and here, he was highlighting the how fewer people coming into the country. There's less household formation. There's less demand for housing, so that'll help push down house price inflation. Totally fine. What he didn't mention is it's also the case that immigrants come, they work, they help deal with labor shortages, and keep wages from really exploding, and then potentially have that passed on to consumers. So my read and what I think the different Fed officials have talked about is on inflation, it's kind of a mixed bag in terms of exactly how immigration sorts itself out. In the labor market, it's a pretty clear it's going to slow things down in terms of our workforce, which means it's pretty clear it's going to slow things down in terms of our growth as a country.
So Claudia, from your perspective, we've heard from folks on both sides of the aisle. We heard from Elizabeth Warren on the show last night. We've heard from plenty of Republicans in the White House as well. Everyone's saying the economy is receding, things are slowing down, recession is right around the corner. From your perspective, where are we?
So I would agree that things are slowing down. I do not see a recession right around the corner. I am watching very carefully what's happening in the labor market, because that will be decisive and, whether things really start to go south quickly. There were several policies that, as we could expect to have slower growth from. I mean, those tariffs, they are a tax. And that slows things down, at least in the near term. Maybe far in the future they create production, but they're going to slow things down. It's a tax. We've had less immigration. That slows things down. We've had a lot of uncertainty. That slows things down. So it's just a question of where do we go from here? Are these very temporary effects? Are they ones that deepen? So I think that's the question we're in right now. I see much slower growth than we've had in recent years. But I don't see the falling off the cliff, but I think it is appropriate for the Fed and everyone else to be watching that risk carefully.
Tomorrow's the first jobs report since President Trump fired the head of BLS. There was a lot of talk about the quality of data in this hearing today. Stephen Myron would not acknowledge questions, refused to answer questions about the political motivations that President Trump had ascribed to the head of the BLS. How are you going to look at the data tomorrow now that this has taken place, and will the markets second guess the number they see?
I'm going to look at the data like I always look at the data. This is the absolute best read that we have on the U.S. labor market. We have world-class statistics. Yes, they can be better. Anything can be better. But they will give us a good read. It's going to be complicated, but it is not complicated because our data are falling apart. It's complicated because the economy is complicated. When we have these moments where labor supply is moving one direction, labor demand's moving in, it's really hard to read the data. And so I think tomorrow I'm just going to be looking at lots of pieces, keeping an eye on the jobs numbers, keeping an eye on the unemployment rate, looking at wage growth. You really have to look at all these pieces, and you never take one number and run with it. That's just how it works in terms of measurement. But I have no qualms about spending a lot of time sifting through the data and trying to answer the question of where are we headed? What's going on?
Well, you wonder in the coming months, we'll see how the Trump administration handles the data. If this sends more people to private research, if ADP starts to rise on your list of credibility here versus government data. I know it's already a cottage industry, but are more economists going to be looking at private research because of this?
The using other data sources has been a growing trend for a very long time. And that's not necessarily about data quality coming out of the federal statistics. It's also sometimes you want a more granular approach. You want more timely approaches. Those are just not things the government statistics have been able to offer because, frankly, they're cost prohibitive the way that they do their work. And so I have no problem with the going out. But the idea that we're going to be, I don't think we're not there yet, but any time that is spent trying to figure out or the government data fabricated or somehow that's just going to be such a waste of time. And like I said, we're not there yet. There's no reason to do that. But we really should recognize for what this is. This is going to undermine the federal statistics that we have that, while could be improved, are really very valuable. So I don't know. We're not in a good place. This is pretty risky.
Yeah. Keep this in mind at 8:30 tomorrow morning. Claudia Sahm, what a pleasure to have you always on Bloomberg TV and radio. Thanks for the insights today following the Stephen Myron hearing. Chief Economist, New Century Advisors, and some food for thought ahead of tomorrow's jobs data. Of course, we'll have that live for you when it breaks at 8:30 a.m. I'm Joe Matthew in Washington alongside Kriti Gupta, the Thursday edition of Balance of Power. Our panel's up next on Bloomberg TV and radio.
It's 1:21 on Wall Street. I'm Lisa Mateo. We have stocks advancing as President Trump pushes for greater influence over the Federal Reserve with a Senate hearing wrapped up to confirm Stephen Myron. Now, Wall Street strategists weighing in, JP Morgan and Goldman, they're warning of growing concerns over the Fed's independence with the president's push for Myron and rate cuts. And meantime, the Justice Department, well, it opened a criminal investigation into whether Fed Governor Lisa Cook committed mortgage fraud. We go to the NASDAQ up 0.4%, the Dow up about 0.5%, and the S&P 500 rising 0.4%. The two-year yield 3.58%. That's down 2 basis points. The yield on the 10-year 4.18%, and that's down 3 basis points. The Bloomberg Dollar Spot Index up about 0.2%. In the news this afternoon, Northwestern's president has resigned as the school continues its fight with the White House. And also in the headlines, it's Tesla on a few fronts. First, the company said it's going to open its robotaxi app to the general public. And second, the Trump administration taking steps to make it easier for automakers like Tesla to push out self-driving cars. You're going to be removing some requirements designed for humans like windshield wipers. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash.
All right, Lisa, thank you so much. Live from World Headquarters in New York. We're in Washington, of course, where it's all going to happen in the Rose Garden a little bit later on today. We've got our eyes on the White House for a who's who gathering of high-tech executives, including Tim Cook, who's apparently already in the building from what we understand. First Lady Melania Trump holding an event about AI, and then they're going to stay for dinner with the boss, the likes of Mark Zuckerberg, Tim Cook, Sam Altman, all at the White House this evening talking about AI, and I'll be deeply curious to see if we get any other investment announcements following that conversation. It's the hearings, though, that we're spending time on here on Balance of Power. RFK Jr. before one Senate panel, Stephen Myron before another. Of course, the president's pick to hold a temporary role, a 4.5-month-long stint on the Federal Reserve Board. President talked about this and the idea of gaining a majority, as he put it, on the Fed, which is not exactly how this was designed, to, of course, affect his hopes to see lower interest rates. Here's how the president put it in the Oval Office.
We just put a very good man in one position. We might switch him to the other. It's a longer term and pick somebody else, but we're very happy with the person we have in there. And we'll have a majority very shortly, so that'll be great.
That was at the cabinet meeting, actually, that, by the way, stretched over 3 hours. Kriti Gupta, the idea of a majority, as if this is a legislative body, rubbing some people the wrong way at the Fed and in investment circles. That's not the way this was supposed to be.
Absolutely not. This questions the independence. The irony of the timing of all of this is that actually both sides of the aisle are actually aligned on the need for the actual policy changes. It's Jay Powell and some of his colleagues that are the holdout.
Interesting. Yeah.
And yet this has brought up this question of independence.
Well, that's true. Let's play it to the panel. Rick Davis is back with us, Bloomberg Politics contributor, our Republican strategist and partner at Stone Court Capital, joined today by Aisha Mills, our Democratic strategist, principal at Community Asset Management. Great to have you both with us here. Aisha, I don't know if this is something that moves the needle for you. A lot of people say, hey, who cares? It's Donald Trump. He says a lot of things. But this rhetoric does make some investors nervous, just about slowly chipping away the independence of the Fed, as he refers to having a majority as if it's the House of Representatives. What do you make of that?
Well, I think that everybody should be alarmed. I mean, we've been saying this since Donald Trump was elected, that he really does believe that he is the king of the United States as opposed to the head of a democracy. And that's a real challenge. I think that the markets, so far have been kind of, anxious, but holding a bit still, not sure how his tariffs, how his ultimate takeover and purging of the government was going to land, and how his unilateral decision-making with his executive orders and otherwise were going to land. But we're ultimately going to see how problematic it is that he thinks that he can move his own agenda unilaterally by installing his people as if he is the only one in this country that is supposed to have control without, one, any common sense or real input from the experts who are tracking and following these issues all day long, every day, but then also really thwarting Congress most of the time, doing whatever he wants. It is a problem. We are in a democracy for a reason, because we need those checks and balances. And so, I hope that people start to put pressure on him to stop this craziness.
Rick, weigh in here, because not only are we keeping an eye on Stephen Meyer and Philly on Adriana Kugler's seat, we also have one eye on the proceedings with Lisa Cook as well and the legality around her firing. What kind of precedent does the testimony today set for what we might be able to expect from Lisa Cook and the fallout there?
Yeah, I think the two of those things are quite different, and I would suggest that the Lisa Cook matter is much more disturbing to sort of official Washington than anything that's happening on the appointment side. I mean, the appointment side is running the track that you would expect it to be, right? I mean, the president has a vacancy; he's putting one of his own people in there. It's a little messy because nobody can tell. You know, is he still working in the White House? Is he going to work at the Fed? But you're unhappy with it? Vote against him. You get the Senate gets to work their wisdom and will on this nomination, and otherwise, it's not a real shocking thing. What's shocking is that the president's taken extraordinary measures to remove a Fed governor, and that is very unusual. And so, first time it's ever happened, and I think more people are watching that to say, is this going to become a standard? If he gets away with this, that's real pressure on Fed governors, both at the Fed level and also in all these regionals. So the reality is that's much more a precedent-setting event. And of course, sure, that'll all be worked out in the courts. But even that process could give the president, if he wins on this, extraordinarily new powers to govern the Fed with an iron fist.
Realizing that delineation that you just made, Rick, do you have a problem with the idea that Myron's going to take an unpaid leave of absence as chair of the White House Council of Economic Advisors and then go back to that job after 4.5 months? He's still going to have to answer to Donald Trump following whatever decisions he makes as a Fed board member.
Yeah, everybody I've talked to is sort of cynical about it. The Open Market Committee is going to do what they're going to do, and his presence on it is not going to likely change the outcome. So his entire tenure will see one Open Market Committee meeting, and then he'll go back to the White House. So, you know, people in Washington shrug their shoulders and say, so what? Yeah, it's an odd thing. It doesn't look good. If you're uncomfortable with it, vote against his confirmation. But the reality is he's a temporary, you know, and as much as you got to go through this process, just like you were going to be given a full tenure on the Fed, he's not, and he's not likely to be the president's pick, although he retains the option of leaving him there and extending his term. So to a lot of people in Washington, I think this one's much to do about nothing.
Aisha, weigh in here. What can Democrats do? We had Elizabeth Warren on the show yesterday. We were saying, what can you do to block any sort of moves here? And she said, look, I know I'm in the minority. What can Democrats do here to make even more of a stand?
Yeah, I mean, this is the reality of process, and the way that the legislative process works is that the Democrats are in the minority here. And so, you know, what they can do is they continue to do what they're doing, which all summer they were riling up their constituents and reminding the American public what is happening. That language of Donald Trump ruling with an iron fist, I mean, just that in and of itself should frighten everyone about what's happening in America right now. What Democrats can do is they continue to tell people that we have a president who is literally usurping any type of precedent, any type of norm, and certainly breaking the law in a lot of ways, and just kind of assuming that he has stacked the Supreme Court enough that they're going to let him get away with it. And we need to remind voters of that. Let's remember that midterms are coming up. Democrats are in the minority now, but Democrats need not be in the minority forever. And so what they need to be doing is reminding people what's happening, how horrific it is, the detriment to their lives. We're watching the healthcare conversation, or debacle, I should say, happen right now with Secretary Kennedy. And we're also seeing places like Texas and now Missouri try to rig the game with redistricting by calling a random off-cycle change in the way that the lines are drawn for representation so that they could try to stack Congress to keep Republicans in power. I mean, they're cheating at every pass. And that is the thing that Democrats have been talking about, and it's what they have to keep talking about while they're in the minority, and they don't necessarily have power to legislatively maneuver. They can absolutely change public perception about all that's happening and win back that power through the electoral cycle.
big questions, Rick and Aisha, about President Trump's relationship with big business. And there's going to be an event that takes place a little bit later on today at the White House that everyone's watching. We're going to be trying to peer over the wall into the Rose Garden. Mark Zuckerberg, Tim Cook, Bill Gates, Sam Altman, Sundar Pichai. I could keep going, although Elon Musk is not on the list. Rick Davis. They're in town for an event that's being held by the First Lady focused on AI policy, but they're going to be having dinner with the boss later on. Will we get a flurry of investment announcements following this sit down with Donald Trump?
I wouldn't be surprised. We know that this president is sort of working the system to see where the United States government can take shares. And everyone there is either susceptible, vulnerable, or want to encourage that kind of behavior. I would say I just see this much more as a fundraising initiative. The president is a voracious fundraiser. He's raised almost $1 billion in the first year of his office. I don't know what records he was going to want to set, but he could set one tonight. So, you know, if I were looking at this, I would say probably much less to do with government policy on AI, probably much less to do with picking off shares in these companies, and much more to do with looking across the expanse of the billionaires seated at tonight's dinner and saying all these guys should be donors before the end of the month.
Aisha, talk to us a little bit about maybe the other side of the announcements we can expect here. Rick, they're talking about the investment piece. I'm more concerned about the tariffs that may or may not come in terms of the announcements. We're awaiting chip directions when it comes to chip tariffs, which a lot of these companies are, of course, exposed to, is a key pillar of the Biden administration's policy as well. Walk us through the risks here, but also maybe what some of these tech CEOs can offer to maybe offset the impact of any sort of tariff policy coming down the pike.
The fact that we're even having this conversation about fraud, frankly, and abuse, and about tech CEOs currying favor in the White House with the president is such a problem. Guys, this is not a normal conversation. This is not the way that business as usual should flow in a democracy, and certainly not in the United States of America. The idea that the president is trying to, or I'm not going to say trying to, he's actually finding ways for the U.S. federal government to own shares and buy stock in these companies starts to reek a little bit like all of the things that we're upset about with China. Right? Because it's a state, these companies are owned by the state, and the state control, you know, China owns and controls what direction these companies go. Well, now we're having these conversations as if they're, you know, one-offs or set-asides about like the United States now having an actual equity stake in these companies. This is all really alarming to me because you've got a group of really, really wealthy people who are going to sit in a room and figure out ways to do more for themselves, to pad their pockets, to expand their businesses, to kind of compete globally in ways that, you know, aren't really fair.
Aisha, I'm sorry we're out of time, but we're going to look forward to discussing this with you once we learn more about what the heck happened in this meeting. Aisha Mills, Rick Davis, our great panel, only here on...
1:40 on Wall Street. I'm Lisa Mateo. We've got stocks on the rise. This is after investors received a lineup of data that reinforced a cooling labor market, increasing bets for Fed rate cuts. We have the Fed's John Williams saying it will become appropriate to cut interest rates over time. And then Beth Hammack reiterated that she doesn't see the case for lowering interest rates this month. We'll start with the NASDAQ right now. It's up 0.4%, 99 points. The S&P 500 up 0.4%, and the Dow rising 0.5%. In the yield space, the 2-year 3.59%. That's down 2 basis points. And the yield on the 10-year 4.18%, and that's down 4 basis points. To commodities, well, that record-setting rally in gold starting to cool after a 7-day surge. Right now, COMEX gold down about 0.8%, $3,604 an ounce. Oil extending its losses. We have WTI crude at $63 a barrel. The Bloomberg Dollar Spot Index up about 0.2%. In other news this afternoon, Goldman Sachs will invest as much as $1 billion in T. Rowe Price Group and also team up with the asset managers to sell private market products to retail investors. We take a look at T. Rowe Price. Their shares are up about 6%. And J.P. Morgan will start offering retail banking services in Germany next year, and that's under the Chase brand. And finally, another sign, the first family profiting from the digital asset industry. Eric Trump's stake and crypto company created this year, now worth about $548 million. According to Bloomberg calculations, he owns about 7.5% of American Bitcoin. The company began trading on the NASDAQ exchange yesterday. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash.
Lisa, thank you so much. Live from New York. And Lisa, we'll have another look at Wall Street coming up at the top of the hour as we cover a dramatic day here in Washington. Welcome to the Thursday edition of Balance of Power. I'm Joe Matthew alongside Kriti Gupta in Washington. Dueling hearings. We've been dealing so far with the hearing for Fed nominee Stephen Miron, but in a separate hearing room in the United States Senate today, the Senate Finance Committee, we found RFK Jr., the Secretary of Health and Human Services, in what was a very chippy conversation. In fact, downright confrontational, with yelling by some Democratic members and the Secretary himself. If you look at some of the back and forths with the likes of Senator Elizabeth Warren, Mark Warner, who incidentally is going to join us in the late edition of Balance of Power, you'll know what I mean. But even some Republicans had words with Secretary Kennedy, including Bill Cassidy, a doctor, of course, from Louisiana. Shouldn't be a big surprise, but even John Barrasso, Wyoming senator, part of the leadership, got into this idea of vaccine policy and keeping promises that were made during his confirmation hearings. Let's listen.
Secretary Kennedy, in your confirmation hearings, you promised to uphold the highest standards for vaccines. Since then, I've grown deeply concerned. The public has seen measles outbreaks, leadership at the National Institute of Health questioning the use of mRNA vaccines, the recently confirmed director of Centers for Disease Control and Prevention fired. Americans don't know who to rely on.
Pretty important to be coming from that Republican in particular. We're going to be getting some insights from Dr. Leslie Cantor from Rutgers School of Public Health in just a moment, but we want to set the baseline and stay on Capitol Hill in a quick conversation with Bloomberg's health reporter Jessica Nix, who's in the Capitol for this hearing, which, by the way, just concluded about a half an hour ago. Jessica, it's great to have you on the beat for us here today. This was a bipartisan affair in questioning RFK Jr. Did he dispel any concerns about his approach to health?
That's a really great question. It didn't really seem like he did dispel any of those concerns from the Democratic side or even on the Republican side. One of the most interesting points of the entire almost 3-hour-long hearing was different Republicans who brought up Operation Warp Speed. Kennedy obviously has cut different contracts for mRNA vaccines, has said that he doesn't really trust mRNA vaccines in the past. Even Cassidy brought up, how would you even consider Operation Warp Speed a success for Donald Trump if you're saying this about mRNA vaccines? So we saw that rift within Republicans and Kennedy for one of the first times since Kennedy has taken on HHS Secretary.
Well, just to clarify for our audience, at the end of the day, does this policy or do these recommendations or views that he's making clear in Washington actually show up when it comes to when someone goes to a pharmacy and ultimately asks for a vaccine? Have we seen that trickle through just yet?
Yes, we have, specifically with COVID vaccines. If you remember a few weeks ago, the Food and Drug Administration changed COVID recommendations to just people who are 65 and older, or if you have an underlying condition. Unless you have a prescription from a doctor, then you're able to go to a pharmacy and possibly get that vaccine. But it's created a ton of confusion about where you can get the vaccine, if you can get the vaccine, if you can just go to your pharmacy like normal. And a lot of his decisions have also trickled down to important vaccine panels, specifically the one with CDC called the Advisory Committee on Immunization Practices, or ACIP. They kind of set the tone for what insurance companies cover vaccines and also whether vaccines would be offered for free under different federally mandated vaccine programs. They're changing vaccinations as well and policy with vaccines too. They've got a meeting, very highly anticipated meeting coming up in literally 2 weeks, also to discuss the COVID vaccine, RSV vaccines, MMRV is also on the schedule, and then of course COVID, which is the one that everyone's very confused about right now.
Yeah, I know Senator Bill Cassidy was urging them to postpone that meeting. Jessica, it's great to have you. Many thanks. Jessica Nix, Bloomberg Health reporter, live on Capitol Hill as we add the voice of Dr. Leslie Cantor, chair and professor at the Department of Urban Global Public Health at Rutgers University School of Public Health. Doctor, welcome back to Bloomberg TV and radio. It's been some time, and it's good to have you back as part of our conversation. It feels to me like more questions were raised than answered in this hearing today. Do you agree?
I agree that it was a very contentious hearing. I think the thing that is very clear and very concerning for those of us who care about public health and the health of the American public is that we have essentially an HHS secretary who is decimating their own agency. What we know beyond the confusion that is being sown about vaccines is that thousands of CDC employees, even if we just stick with the Centers for Disease Control for a moment, thousands of people have been fired. We now do not have a director who is qualified at the head of the CDC, and we've had several high-level resignations of key scientists and leaders. So that is something that has certainly happened and was not resolved by today's hearing.
Doctor, can you just explore the hypothetical for me here? In the case of another pandemic or another wave or another variation of the COVID infection, what is the actual policy here? As you suggest, with the scientists, with the heads of these departments gone, what actually happens operationally to deal with a situation like that?
Yeah, well, you didn't have me here to terrify people, and I don't want to speculate too much on what another pandemic could look like. Obviously, that would be an extreme situation. And frankly, in terms of COVID, we got lucky because, in fact, the mortality rate was relatively low. If we did get hit with a disease that had a higher mortality rate, we know we lost millions of lives in the United States. It could be worse. But let's stick with what's happening right now, which is frankly bad enough, which is that we are losing in many communities what we used to call herd immunity, but we try to call community immunity for things like the measles. So we've had more than 2 times the number of measles outbreaks this year as we had even just a year ago. And 1 in 5 kids under the age of 5 who got the measles ended up in the hospital. So that is something that's happening right now without any further changes in policy. So I think we have to be very worried about a committee of now wildly unqualified people changing the vaccination schedule even more.
I want to ask you about Susan Monterez, who, of course, was at the head of the CDC and was fired by RFK Jr. There was a conversation in this hearing today about why. And I first want to mention the fact that ahead of this hearing, Monterez wrote an op-ed in the Wall Street Journal. Those seeking to undermine vaccines, she writes, use a familiar playbook, discredit research, weaken advisory committees, and use manipulated outcomes to unravel protections that generations of families have relied on to keep deadly diseases at bay. Once trusted experts are removed and advisory bodies are stacked, she writes, the results are predetermined. That is not reform, it is sabotage. RFK Jr. today talked about the need to fire Susan Monterez because she lied to Americans when she said she was fired for refusing to adopt or endorse vaccine recommendations that were not supported by science. Did she deserve to be fired?
Of course not. And what's ironic here is that for the first time in our history, the director of the CDC actually went through a Senate confirmation. And many people were skeptical about Dr. Monterez and whether she would just rubber stamp some of these unscientific changes to particularly vaccination policy. When she would not do that, RFK tried to fire her. He's not actually authorized to do that, and the White House followed up. You have multiple high-level career scientists who are saying the exact same thing. There's absolutely no reason to doubt Dr. Monterez's explanation, and I think that she is pointing toward exactly what has happened here. Secretary Kennedy has started an organization and has been a vaccine skeptic and underminer for a long time now. And he now has a much larger bully pulpit and, in fact, is overseeing, ironically, the organizations that make vaccine policy for this country. I think, like most of my public health and healthcare colleagues, 20 leading organizations today asked for him to step down, including the American Public Health Association, and I am certainly in agreement with that being what would be most appropriate given the actions of the last couple of weeks.
Dr. Cantor, we've seen that skepticism manifest most realistically and in real time when it comes to the COVID vaccines, but can you just walk us through the other places of the healthcare policy that is in the United States right now where you are starting to see that show up?
Sure. I mean, I mentioned one already, which is in the measles outbreaks and the worries that people have about the measles, mumps, and rubella vaccine. I think COVID is a very important place that we know that many people do remain vulnerable, including people like healthy pregnant women. And the American Academy of Pediatrics actually has now broken with the new guidelines from the federal government and said that children up to age 2 absolutely need to be vaccinated. So that is another place. And I think more and more we are hearing about parents who've heard a lot of this rhetoric opting their children out of certain vaccines. I think the most concerning public policy development was out of Florida yesterday when they announced that for any vaccines over which the Florida Health Commissioner has jurisdiction, which is not all of them, they will no longer be required for schools. So I just want to remind people that vaccines are not just about individual immunity. We need a large proportion of people to get them, or else a disease can take hold in a community.
But Dr. Cantor, if I went to a CVS or a Walgreens across the street, would I be able to get a vaccine if I asked for it?
Depends what state you're in. So, for example, I'm coming to you from New Jersey, where I'm very proud to say that many pharmacies are continuing to make COVID vaccines available to anybody who is eligible and without a prescription. In some states, they are requiring people to have a doctor prescription. Some states are working to make sure that their head of the State Department of Health can act as that sign-off doctor. But then there are sets of states where pharmacies believe that they're going to have trouble getting reimbursements, and they've announced that they are not going to make COVID vaccines as available. So this is becoming not just 2 Americas, but potentially 50 Americas, where your access to the vaccine may depend on your own state and their ability to develop workarounds.
50 Americas. We could invoke that vision on so many days here on this program. Doctor, thank you for being with us. Dr. Leslie Cantor, Chair Professor, the Department of Urban Global Public Health at Rutgers University's School of Public Health. Really interesting conversation. We're going to continue to unpack this hearing with RFK Jr. on the late edition of Balance of Power, in a conversation you will not want to miss with Senator Mark Warner. The Democrat from Virginia loomed large in that conversation as voices were raised specifically over the COVID-19 vaccine warp speed and the number of people who died in this country. The secretary refused to give the senator a number. Preeti Gupta will be with us as well, right here on the fastest show in politics. We'll meet you 5 p.m. Eastern time for much more from the nation's capital. I'm Joe Matthew. This is Bloomberg.
Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Carol Masser, Tim Stenivek, live here at Bloomberg headquarters in New York City. Kind of have a theme today. It's all about keeping score, whether it has to do with the U.S. economy and the jobs market, what's going on in terms of the composition of the U.S. Federal Reserve. And then we've got our own keeping score here, courtesy of Power Players New York.
Yeah, more on all that in just a moment. On the program this hour, we got Max Levchin, the co-founder and CEO at the Buy Now, Pay Later firm Affirm, joining us in a few minutes. Also, we're going to hear from John Malone. You know him, chairman of Liberty Media, an absolute legend when it comes to the media industry.
It's a C-suite palooza. I'm going to just put it out there. Scott Cutler, president and CEO of Health Equity. So we're going to talk about that, the health space, certainly working with a lot of employers. And then we are going to tee up the Bloomberg Power Players New York that's underway. It's going on a couple floors above us. It's all about the multi-billion-dollar world of sports, the business people who are in it, the players, the team owners. We're going to have a few over the next 3 hours, so we're going to tee that up for you as well. First up, though, we do want to get a check on the trade today. We've got a bit of a rally underway. Here's Lisa Mateo in for Charlie Pallett.
You got it. And yeah, the latest readings on hiring, unemployment claims, it pointed to a cooling labor market, and that is driving stocks and bonds higher. So applications for U.S. unemployment benefits, they rose to the highest since June. Private sector payrolls, they increased by 54,000. Trailing estimates, it all comes ahead of tomorrow's jobs report. So we check in with the NASDAQ. It's up about 0.5%, 118 points. The S&P 500 up 0.5%, and we have the Dow up 0.7%. In the yield space, we have the 2-year 3.59%, and that's down about 4 basis points. The yield on the 10-year 4.18%, and that's down about 3 basis points. The Bloomberg Dollar Spot Index is up about 0.2%. Few stocks on the move. On the downside, we have software company Salesforce. Shares are still taking a hit. They're down about 5%. Its quarterly revenue outlook, it was on the lighter end of expectations. And then you have newly listed software company Figma. Their shares are down 18%, posted a double-digit rise in quarterly revenue, but here's the thing, profit missed expectations. On the upside, American Eagle Outfitters, their shares up 32%. They said it expects sales boost from marketing campaigns featuring, yes, Sydney Sweeney, but also Travis Kelce. And since we mentioned retailer Gap, it says it plans to test a broader range of beauty products and accessories. Yes, starting at its Old Navy stores this fall. Gap shares, they're up about 4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash.
It's all about those beauty products, man, Lisa.
Yes.
It's all about
You
massive
need
margins.
them.
Wait, are you saying I need them? Wait, what about Tim?
I am wearing a healthy dose of makeup right now. Is that what you say, a dose? I don't even know. Application? I don't know. Help me out, Carol, please.
We need to move on. We need to move on. All right, Lisa, thanks so much. Hey, listen, we got a big drop of economic news on the U.S. economy today. Applications for U.S. unemployment benefits rising to the highest since June, adding to evidence that the labor market here in the U.S. is cooling, yet hiring plans falling to the weakest level for any August on record in data from outplacement firm Challenger Gray and Christmas going all the way back to 2009, while intended job cuts rose. And then, Tim, we also got to read on the service side of the U.S. sectors. U.S. service providers provided expansion in August at the fastest pace in 6 months, on the sharpest acceleration in orders in nearly a year. That wasn't the only thing going on.
No, it wasn't. President Trump's pick for Fed Governor Stephen Myron up on Capitol Hill today, taking questions from members of Congress, including when it comes to Fed independence.
I couldn't be more in agreement that independence of the central bank is of paramount importance for the economy, for financial markets, for the long-run stewardship of the country. All of those are completely in complete accord with. Look, the president nominated me because I have policy views that I suppose that he liked. If I'm confirmed to this role, I will act independently, as the Federal Reserve always does, based on my own personal analysis of economic data, my own personal analysis of the effects of economic policies upon the economy, and act based on my judgment of the best economic policy possible.
All right, that was President Trump's pick for Fed Governor Stephen Myron up on Capitol Hill today. Bloomberg's Michael McKee is also in the nation's capital there for the hearing. He's Bloomberg TV and Radio international economics and policy correspondent, joining us from that said news bureau by Bloomberg News in D.C. Hey, Mike, I got to ask you, at a moment where it feels like there's a lot that feels so important for the economist in you, for the monetary policy person in you, we got readings on the labor market, on the U.S. economy, the hearing of Stephen Myron. We've got pressure on Lisa Cook continuing over at the Fed. What's really so important right now when it comes to the kind of economy and the monetary policy outlook?
Well, it depends on whether you're talking short-term or long-term. Short-term, the question is, what is the Fed going to do on September 17th? And today's ADP number, which you didn't mention yet, 54,000, lower than anticipated, is a suggestion that the Fed is going to be on track to cut rates because they've been concerned that low employment and any rising unemployment would be a sign the economy is slowing down that they'd want to get ahead of by cutting rates. ADP hasn't always been completely reliable, but the Fed, several Fed officials have said they're looking at that more closely these days because of the questions about the revisions to the prior NFP reports. So on a short-term basis, I would say that, and the fact that in the ISM services number, the employment numbers were still very weak. Longer term, it's the Lisa Cook situation that worries people, because if the judge, in her effort to try to stay on the Fed, says she can be fired, or if an appeals court says she can be fired, and Trump immediately moves to replace her, even though her case has not been adjudicated yet, then there's going to be some concern on Wall Street about politicization of the Fed. We got the latest filing from the government in the Cook case today. The judge could decide tonight, could decide tomorrow, and that'll be the next important step for the longer run.
Is she working right now at the Federal Reserve, Mike? Do we know that? I know there was some confusion about this last week and even early this week.
It's our understanding that until the judge rules otherwise, she is still employed by the Fed, and she is still working, although working from home, we understand. But she hasn't had her job or her electronics taken away, so she can still participate. And if the judge lets her, she would be attending the September 17th meeting and voting it.
If she doesn't attend it, can she still vote for policy that day?
No, you have to be there to vote. And the thing about the Fed governors is there's no alternate. If a voting regional Fed president can't make it, then there's an alternate voter for them. But that would just be one fewer vote. And the question is Stephen Myron going to be confirmed? Because that would be one fewer vote as well if he's not confirmed in time.
All right, so let's go there. I mean, do you think Myron's going to be confirmed? And what will that mean in terms of the composition of the Fed?
He'll be confirmed. The president has said he wants him confirmed, and Senate Republicans generally do what the president wants. The only question is sort of technical. Can they get him through on the through the floor, given the calendar that they have? They have a lot of nominations backed up, and they'd have to move some things around. But it probably is going to happen. Now, the question is, what kind of reception would he receive, and what impact would he have? He was not well received at all by Democrats today, who pointed out the contradictions in his testimony, that he said he's going to stay on the CEA, even though he's said nobody should go back to their government job for 4 years after leaving the Fed, and after he criticized Lael Brainerd and Austin Goolsbee for going from a Democratic administration to the Fed and called that sinister. On the Democratic side, he hasn't got any friends. And then in his report on reforms that should be made to the Fed, he not only criticized Brainerd, but he criticized Mary Daly and Austin Goolsbee. And so will they be very friendly when he shows up?
Can't wait for Thanksgiving dinner when they all get together around the table. Should be warm and cozy.
It's just like I don't even know where to go from there. I do want to talk a little bit more about this hearing, though, Mike, and the idea of independence of the Federal Reserve. It was certainly dominant in the hearing today. And I'm wondering what the contradiction is, or maybe you can explain the contradiction in saying that, like, being independent on a body while retaining a job at the White House. How is that actually possible?
I think that's a question that answers itself, Tim. There's no real way to separate the two things. And I don't think anybody, even if he didn't say he was going to keep the job, was going to think that he would be an independent voice. As he noted, the president picked him because he has views that he likes, and while he will bring his own views and be independent in making his decisions, his views align with the president's. So he's going to be a reliable vote for a rate cut. It's really just that the idea that he would stay on, even in an unpaid role as an employee of Donald Trump while he's on the Fed, it's just kind of a blatant hypocrisy, but that's kind of the way Washington's been working lately.
Mike, what did you make around the question and answer portion that focused on the former Federal Reserve Chair Arthur Burns, and the idea of Fed independence and stagflation and presidential involvement during Arthur Burns' tenure, and the way that Myron handled that line of questioning.
Well, they were obviously trying to trap him into admitting that because the Fed was influenced by Richard Nixon in 1972 and they kept rates too low for too long, that would happen again. And of course, after 72, we got the great inflation of the 1970s. Myron tried to tap dance around it. I wonder how much relevance it has anymore because a lot of the people who were on that Senate committee probably weren't born then and so don't remember it. So at this point, it's ancient history. It is a cautionary history that Fed officials are very aware of, but I'm not sure it scores a lot of political points.
All right, we're going to leave it on that note. Hey, Michael McKay, thank you so much. I really appreciate it as we get ready for that monthly jobs report out at 8:30 a.m. Wall Street time tomorrow. Mike, of course, will be all over it with the team. He is international economics and policy correspondent at Bloomberg TV and radio. I should point out that Fed Bank of New York President John Williams has said his forecast is that it will become appropriate to cut interest rates over time without clarifying the timing or pace of such moves. We know as head of the New York Fed, that voice is certainly an important one. All right, now let's get to a Bloomberg exclusive.
Bloomberg News correspondent and host of the Big Take podcast, David Gura, caught up in an exclusive interview with John Malone, chairman of Liberty Global, earlier today to talk about his new book, Born to be Wired. It was released on Tuesday, September 2nd. Here to tell us more about that conversation, we've got Bloomberg News entertainment team leader Chris Palmieri joining us from LA. Chris, John Malone, an icon for anyone who has followed the cable industry, the development of it, the growth of it, and of course also the decline of it in recent years. Known for his outsized role in creative deal structures. Just give a quick overview for people who might not be familiar with the impact that he's had.
Well, so joined this tiny, struggling Denver cable TV company, Telecommunications Inc. in 1972, 3, I think. And, this is even, before all the cable channels that we know as household names now existed. Built it into the largest player in the business, helped launch CNN, Fox News, BET, you name it. Sold it to $48 billion to AT&T. In a way, kind of bought it back again later. Now still controls Charter, the largest cable company in the U.S., Liberty Global, the largest in Europe. Architected the merger of Warner Brothers and Discovery that they're now splitting up. So just a huge player in the business for 50 years now.
All right, and he does have a new book out, as we mentioned. It is called
Born to be Wired.
Born to be Wired, which is like a perfect title for him. Let's get to some of the conversation that John Malone had with Bloomberg's David Gura about his journey in the world of media.
I had a great mentor early, Moses Shapiro at General Electric. He was the chairman, and he was a tough old bird. But he would teach me about the Talmud, okay? And he said, one of the things the Talmud teaches you is ask yourself the question, if not. If not. If not. So if your model, if your business plan works, great. But ask yourself the question, well, what if it doesn't? What if your assumptions are wrong? What if this doesn't work or that doesn't work? Where are you at that point? What's the downside? How much risk are you really taking? So you really try and look risk very hard in terms of how you finance something. Do you have partners in it? The government's always your partner from a tax perspective, so don't forget that you can deduct your failures from your successes. Don't ever get to where you can't. You're going to have lenders. If they have risk, they're going to help you make sure that you're not taking too much risk. So they become good partners in assessing risk. And if you structure it properly, if you do get in trouble, they're by and large, you're not, right? Kind of an attitude. Don't ever count on anything being for sure. And so that has colored the structure of the organizations that I've put together over time. So a typical thing for me would be no debt at the parent. Subsidiaries would be levered rationally but substantially, particularly if there's tax or other advantages. And so the parent was always in a position to rescue the subsidiary, but never in jeopardy of a single torpedo, a single bad thing, taking it all down. So risk avoidance coming out of the TCI survival, I think, was the #1 lesson that I learned. Diversify, never cross-guarantee, never consolidate liabilities unless you're really, really comfortable. Just to get an 1/8 of a point better deal on your financing, don't go there. You know, try and isolate your risk. We even came up with a strategy called the outhouse theory. If you're going to do what you regard as an uncertain acquisition, buy it into a standalone capital structure. Be willing to pay whatever the debt risk represents. Make sure you can refinance it timely if it works. And if it doesn't work, structure it so it doesn't poison the whole barrel of apples.
All right, that, of course, is John Malone of Liberty Global. He is there with Bloomberg's David Gore, and it is the subject of a new Big Take, Bloomberg Big Take podcast. Keep in mind, Malone's book just out this week, Born to be Wired. I feel like, you know, we're talking with Chris Palmieri, who follows the media and entertainment space. He's entertainment team leaders out there on the West Coast, where there is so much going on in terms of content, but the world has changed so much. Chris, since John came into it, you know, what about this conversation, you know, kind of caught your attention?
The conversation and the book, it's very interesting. So Malone is very hands-on when he's describing, for example, then how he built up the company using all these partnerships and you know, sort of the divisions that were collateralized with the parent company, and that fascinating stuff from a business standpoint. But, you know, when he gets into kind of the macro picture about how the cable TV industry raised prices so much and didn't let customers choose which channels they wanted to watch, and how he engineered the Warner Brothers Discovery merger that is, by all accounts, a disappointment, and they're now splitting it up. All these things he kind of takes in as sort of as an observer, as like he wasn't really in the thick of it then, and orchestrating these deals and running the largest cable operator in the country and continuing to do so. So it's a fascinating view of the world. At least he agrees that the cable industry kind of cooked its own goose and just didn't adapt to the times and give people the streaming options that they now choose from others.
Yeah, it feels like there was a moment in time, right, that nothing could be done in the media space without kind of a blessing from John Malone. There wasn't any media conversation without us, you know, Tim touching on John Malone.
Yeah, I think that's certainly fair to say. And for many years, it was the idea that live sports would keep the cable bundle intact. And look what ESPN did last month. You can now buy ESPN direct to consumer. You can bypass your cable system to do that. That is a very big deal.
Like, who'd have thunk, right?
Yeah.
In terms of how times have changed. Chris, thank you so much for walking us through all of that. He is Bloomberg News entertainment leader, Chris Palmieri, out there on the West Coast. Check out David Gore's entire interview with John Malone. It'll air on the Big Take podcast. Coming up next, a double dose of the C-suite. We've got Max Levchin, co-founder and CEO at Affirm, and Scott Cutler, president and CEO of Health Equity. That's all coming your way on Bloomberg Business Week Daily.
is 2:21 on Wall Street. I'm Lisa Mateo. Stocks are advancing. This is as President Trump pushes for greater influence over the Federal Reserve with the Senate hearing wrapped up to confirm Stephen Myron. Now, Wall Street strategists, they're starting to weigh in. You have JP Morgan and Goldman. They're warning of growing concerns over the Fed's independence with the president's push for Myron and rate cuts. And then meantime, the Justice Department, well, it opened a criminal investigation into whether Fed Governor Lisa Cook committed mortgage fraud. We have the NASDAQ. That's up about 0.5%. The S&P 500 up about 0.5% as well, and the Dow rising 0.7%. Heading over to the yield space, we'll start with the 2-year, 3.59%. That's down 2 basis points. The yield on the 10-year, 4.18%, and that's down about 4 basis points. The Bloomberg Dollar Spot Index, that's up about 0.1%. Some of the biggest names in tech, well, they're attending an AI event. It's hosted by First Lady Melania Trump in Washington. That's going to be followed by a reception over at the Rose Garden with the president, the leaders of Meta, Apple, Alphabet, OpenAI, Microsoft. Those are some of the big names there, as well as Microsoft co-founder Bill Gates. And DeepSeek, they're stepping up the competition against rivals like OpenAI. Sources say it's building an AI model with advanced agent features with a release planned before the end of the year. And Techtember continues. I got that from Tim. Yes, Samsung Electronics unveiled their $650 version of its premium S25 smartphone and a pair of new tablets. For on-demand news 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash.
We're making it stick, Carol. Techtember.
See?
Mark,
There you
Mark
go.
Gurman said it's okay.
I said when Mark Gurman says, yeah, it's a thing, we can kind of run with it in a big way.
Thank you, Lisa. Appreciate that.
All right, well, people running with Techtember, they're also running with Buy Now, Pay Later. It seems to be everywhere nowadays. Companies, including Affirm, Afterpay, Klarna, have all brought installment payments into everyday life, while big banks and tech firms are also now racing into the space. It's getting a little crowded. So with the market growing so rapidly, there are obvious concerns over whether BNPL is adding a new layer of hidden leverage to the economy, giving online shoppers an alternative to more traditional financing, such as credit cards and bank loans. Data about BNPL usage, it's kind of limited. And those firms have so far resisted sharing a lot of information, but we wanted to know more. And this person, our next guest, knows a lot about the space. Here to talk about all of this, great to have with us the founder and chief executive officer of the $29 billion market cap company, Affirm, Max Levchin, joining us today, I believe from San Francisco. How are you?
I'm great. Enjoying this nice warm Techtember.
It's a thing. It's a thing. Talk to us about, first of all, just big and broad, especially on a day when we're getting a lot of economic data. We're waiting for the monthly jobs report, trying to figure out what's next in terms of the U.S. economy. You see a lot when it comes to what consumers are up to. How would you describe the consumer today?
The Affirm consumer, that is the folks that we approve for transactions, and each transaction is separately underwritten. So we do have a very discerning eye as we underwrite these loans. They're doing great. They are shopping. Demand for our product is accelerating. We just posted another accelerating fourth in a row quarter of gross merchandise sales. They're doing really well. Repayment is really strong. Credit is steady to improving. And so we lend to a huge percentage of U.S. population, so you could infer from that U.S. consumer writ large is doing well as well. So I think the rumors of the American demise are greatly exaggerated. That said, we continue to watch every metric we can all the time because that's what our job is.
Are those metrics stronger now, Max, than they were, say, a year ago?
Again, from a firm's point of view, we really are firing on all pistons. Our ability to serve folks has improved about 20% year over year. That's measured in transaction frequency. Our user base grew about just north of 20% as well. So consumers are joining us. Our user active acquisition has accelerated for the 6th quarter in a row. So there is a meaningful secular shift from credit cards to Affirm. So I think, again, within our ecosystem, every metric looks very good and better than last year.
Can you talk a little bit about what transactions Affirm customers are using the payment system for? Are they using it like they would use a credit card right now? What's the typical transaction? What's the transaction size?
That's a great question. And It's a little bit differentiated between players, so I can only speak to us. The average ticket for us is just under $300. That should tell you a lot. So everything from a truly considered purchase, like a nice bicycle, maybe a couple $100, all the way down to a large party supply, and maybe a couple $100. Those are sort of the bookends. We tend to believe that really, really low ticket items, $20 is just too small of an amount to finance with a firm. So we have a notion of, where we start trying to tell our consumers, hey, this seems like a good idea to be a cash transaction. But generally speaking, because the product we offer is just so much better than credit cards for the end borrower, we're very pro idea that a firm should be used in place of credit cards, full stop. If you think of it very quickly, it is an obvious idea. So we don't charge late fees, we don't compound interest, we don't do deferral or any of the sort of gimmicky things that look too good to be true because they are too good to be true. So it is an honest financial product that really helps the end borrower get full grip on their finances and not get into trouble, not get over their skis. So directionally, the more they use a firm for everything, I think the better off the consumer is going to be. That said, the current average is $297, I think.
How often does somebody though miss a payment or they're late? And then what happens as a result? What kicks in? I'll be honest, I'm not a huge user.
Well, I mean, have you ever used it?
I think I've used one of them, and I can't remember once because I was curious about it, and I set it up so things just got paid, and it was like 3 payments or something because I was curious about it because we talk about it all the time here. Grew up where you could put stuff away, stuff on layaway. So it's interesting to see the evolution, but I am curious, Max, how often is it that somebody is late and then the terms start to change? And, this is a business, right?
So that's actually, thank you for that prompt. That is, let me try to make if there's one thing I can make clear in this conversation, I just really want to hammer this one home. Nothing will change. Terms will not change. Fees will not appear. Interest will not change. No dollar amounts will change if something happens and you can't make your bill on time. The fundamental promise of a firm is what you see is what you get. When you're borrowing $500 and you're committing to paying, let's say, another $25 of interest, if you cannot make it on time, it will still be $525. There will not be a penny more. If you prepay and pay us early, that interest amount will come down. So it is a profoundly pro-consumer product. That said, I just wanted to make that very, very clear. We are a better financial product. About 98% of our consumers are never late, never in default. And so it's fundamentally extremely, extremely high probability of none of that will ever happen to you if you're within the Affirm ecosystem. When folks are delinquent, which is a fancy term for late with their payment, we'll reach out to them. We use all sorts of digital channels to get in touch with them. We'll remind them. Vast majority of folks that are late are actually what's called sloppy payers in the industry, where they say, oh my God, I forgot to set the auto pay. Thank you for using that feature if you did. And they cure it, and so it goes. And so that the reason we don't charge late fees is because for folks where they really cannot, something happened and they lost their job or something happened, they're not going to pay you any faster if they have no means of paying you back. The ones that are just stumbled somehow and forgot, the reminder is the most you need to do. You don't want to penalize them for being forgetful.
So what is the default rate?
It's on the order of 2% plus or minus.
That's remarkable.
Well, I think
it's meaningfully lower. It's meaningfully lower than credit cards. By the way, our lower ticket items, that trends below 1%. So just to give you a sense, like the rumors of this being a bad financial product creating hidden leverage in a system is like bad math and ridiculousness.
So push back on that a little bit, but do it through the explanation of the business model here, because I think a lot of people approach this product with being informed about how credit cards work and the idea that high interest if you miss a payment, fees if you miss a payment. In a sense, the risk is somehow put on a different party here, Max. And there's also buy-in from the retailer who partners with a firm. Just explain how this whole transaction works.
Yeah, very simple. You typically find a firm at a point of sale on any online and now progressively more offline merchants. you will ask to use the product. So it's always an explicit request to borrow. And we take great pride and put a lot of technical emphasis on underwriting every transaction individually so that we have the discretion to say, hey, you're overextending yourself. These 2% through 2.5% default rates don't come for nothing. It would do an enormous amount of work in this underwriting engines that we've built. So as you get approved, whereas what happens, we pay the merchant and you commit to paying us back over time. And we always give you a menu of choices, could be anything as short as 4 payments every 2 weeks, could be as long as 36 months, once every month. The rest of it happens more or less automatically if you opt into the auto pay feature. If you don't, we will send you a reminder and then you arrange for repayment from your bank account typically. And that is it. In our case, there is no compounding. The interest is the interest expressed in dollars, and that is what you commit to. It will not go up independent of any modifications to the schedule. There are no late fees. In our case, again, we are unique, or almost unique, I think, at this point in the industry by just not charging any incremental fees at all, and so on. So this really is the product where the cornerstone value is transparency. We are entirely transparent with every participant in the ecosystem, from merchants to consumers. Everyone knows what they're getting into. You get your bicycle or your couch or your putty supply today, and you pay for it over time, and you know exactly when the payment plan stops, and then you're no longer in debt. It is a better alternative to credit cards because when you use credit cards, which are very convenient, you don't have this extra approval step, so just drop the plastic and on you go. You're adding to this giant bucket of debt that just sits there and revolves. The interest compounds into principal every month, every week. Whatever it is you've accrued in interest becomes a part of the base that accrues interest on interest on interest. That is why credit cards are so expensive. The reason APR matters as a measure is because it doesn't just measure interest you'll pay on a principal, it's the interest you'll pay on the interest, and so on. The model we invented, the reason we are so important, the reason people are coming to us, frankly, is they don't have to understand exponential mathematics to figure out what is the true endpoint of interest will be. Whatever it is we promise them, that's exactly what they pay.
We're speaking with Max Levchin. He's the founder and CEO of Affirm, the $29 billion market cap fintech company. Also, you'll notice Carolee keeps talking about bikes. He's a big cyclist, too, so spends a lot of time on the bike.
So is Tim, by the way, Max. Hey,
oh, we know. We follow each other.
I know you guys do. hey, listen, one of the things I want to ask you, your stock is on a tear. It's up 50% year to date. It's surged as much as 25% intraday in response to your earnings, which you've been talking about. That came out late August. You had analysts, several of them raising the price targets on the stock. What's the path to sustainable profitability? What do you need to see happen to kind of keep the momentum going?
We just need to keep doing exactly what we've been doing. The joke I make all the time is we are an overnight success 15 years in the making. Profitability is not an accident. We gave this date exactly a year ago where we said, look, 12 months from now, we'll be GAAP profitable. 2 years ago, we said, hey, 24 months from now, we expect to be GAAP profitable. And so we've been on a journey that we've planned years ago to deliver on all these milestones. And so the celebration isn't of some clever overnight idea that we've had and finally just poked our head from the unprofitable side of the fence. We've been planning to be profitable. We've delivered on this plan. We have said publicly we intend to be GAAP profitable from this point on. That is not a thing you can decide last week and deliver tomorrow. It's something that you build over a long period of time. It takes discipline, takes execution, takes a great team, which I'm lucky to have. And so I'm not worried about that whatsoever. Whatever we commit to, we tend to deliver on.
Well, speaking of time, it's been a long time coming for Klarna and its IPO, and it does plan that here in the United States. Competition in the space is definitely, Max, picking up. They are specifically rapidly expanding here in the U.S. You've got Sezzle. That stock is up about 7,000% in less than 2 years. There's a lot going on. So how are you seeing the competitive landscape evolve, and what does that mean for you guys specifically at Affirm?
We're very happy doing our thing. As I just extolled for a little while, we are different. We do our thing a little bit differently than the rest of the industry. We have a very strong point of view on what is and isn't moral, what is and isn't right for the consumer, for the merchant partners that we have. And it's paid great dividends for us and our shareholders. So in that sense, we intend to change absolutely nothing. part of why maybe I spend less time looking at the competition than one does in a competitive industry, and this one is certainly very competitive, is in aggregate, buy now, pay later is still just under 1% of total US retail, and it's a worldwide phenomenon. And US is actually quite behind. If you look at markets like Australia and the Nordics, where buy now, pay later is more mature, there the penetration into e-commerce is on the order of 20-25%, I think. In the US, it's a much more polite 7% maybe. And if you expand it into offline, which there's no reason why this doesn't work offline. In fact, we have a card that's been growing extremely well, better than 100% year over year, just in the last quarter's report. We're a fraction of a fraction. So the opportunity to provide more honest financial products is, I said it in my shareholder letter, sort of tongue in cheek, it rounds up to infinity. And so for now, we're not really running into each other in the hallways, fighting for that last same customer or merchant. I'm sure one day we'll get to a point where it's so significant as a part of the U.S. economy where it becomes, a zero-sum game. But even in that world, there's a Visa to a MasterCard. And for now, I think we're all just experiencing really good growth. And frankly, the fact that the market now will support a couple of large publicly traded companies, it's probably a good thing. That just gives shareholders a sense for this has a long way to go in terms of growth.
Hey, Max, before we let you go, just 30 seconds on crypto and stablecoins. An opinion piece this week coming from Paul Davies of Bloomberg Opinion. He wrote that stablecoins are an opportunity for merchants and airlines to recover costs from big banks and networks like Visa and MasterCard. Is there a use for digital assets at Affirm?
I think there are interesting opportunities around merchant settlement, which is sort of, I'm echoing what this piece is saying. I'm not yet seeing consumers spending stable coins they have acquired in droves. And so as a back-end mechanism, stable coins are very interesting, and we're certainly looking at the opportunities there. On the consumer side, I think folks are thinking in dollars and probably will continue to do so.
All right, got to leave it there. Hey, Max, thanks for carving out some time for us. Max Levchin, founder and chief executive officer of Affirm. Max, of course, just a great voice when it comes to what's going on in the fintech space. We're going to
also have PayPal fame.
PayPal fame as well.
Part of the mafia,
yes,
as they say.
We're going to have more from the C-suite in just a moment. We're going to catch up with the CEO of Health Equity. That's coming your way in just a moment.
First up, though, a check of the day's trade and top business stories. Here she is, Lisa Mateo, in for Charlie Pellet. Hey, Lisa.
You got it, and stocks are on the rise. Investors received a lineup of data that really gave some more proof of a cooling labor market, and that's increasing those bets for Fed rate cuts. Speaking of which, we had the Fed's John Williams say it'll become more appropriate to cut interest rates over time, and Beth Hammack repeating her views that she doesn't see the case for lowering interest rates this month. Now we head to the NASDAQ, up 0.6%. The Dow rising 0.6%. And the S&P 500 up about 0.5%. Over to the yield space, we have the 2-year, 3.59%. That's down 2 basis points. The yield on the 10-year, 4.18%, and that's down 3 basis points. Strong advances in Europe, where the stock 600 strengthened, up 0.6%. To commodities, a record-setting rally in gold. Well, it's starting to cool. We have COMEX gold down about 0.8%, $3,604 an ounce. And over to WTI crude at $63 a barrel, so extending the losses there. The Bloomberg Dollar Spot Index up about 0.1%. Tesla in the headlines on a few fronts. First, the company said it opened its robo-taxi app to the general public. And then second, the Trump administration taking steps to make it easier for automakers like Tesla to push out self-driving cars. What they're doing? Well, they're removing some requirements designed for human drivers, like windshield wipers. I like my windshield wipers. Tesla shares right now, they are up just a fraction, about 0.5%. And Reuters reporting BYD cut its annual sales target by 16% as it faces increasing competition in China. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is the Bloomberg Business Flash.
Wait, does that mean that our Waymo doesn't need windshield wipers, Tim?
I don't know.
What does that mean? I love
You're not going to see BYDs here anytime soon.
I don't know. Oh, okay, crazy.
I think Ed saw a lot of BYDs in London.
Of BYD.
Yeah.
But I'm just thinking.
Yeah, Chinese EVs.
All right. We are ready. We want to talk a little bit about, as we mentioned, some more voices from the C-suite. So let's get to it. Health Equity, shares of that company rallying for a second day as analysts raise price targets on the stock following earnings late Tuesday. The company administers health saving accounts and flexible spending accounts, and it did boost its adjusted profit forecast for the full year. It also reported revenue and adjusted earnings per share for the fiscal second quarter that beat the average analyst estimate. So here to talk about the quarter, the outlook in the business is the company's president and CEO. He's Scott Cutler. And the company, if you're not familiar, $8.4 billion market cap. Scott joining us right here in studio. And full disclosure, we have health equity cards, FSAs, here at Bloomberg. Full disclosure. I got to tell you, like, we all take these things for granted. We use them and so on and so forth. Lay out your business, though. How do you guys make money on all of this?
So we cover about a quarter of working Americans today would have an account with us. And I think the little known fact about health savings account is that they are the most tax advantaged savings vehicle that you could have.
Is that different from an FSA?
It is different than an FSA because an FSA is use it or lose it. An HSA is an asset that you should be saving in. You should be contributing at the max for a family is about $8,500 a year. And then you should be helping that invest and grow over time because you can have it grow tax-free and then ultimately you can spend it tax-free as well for healthcare related expenditures. So it's a great account to have, but it's also great to be able to connect it to your healthcare, your wellness, and it's obviously a benefit that's provided by employers.
But it's not provided by every employer. I've been hearing about health savings account my entire career. I've never had one. I've never had the opportunity to have one. Is it because I've never had a high deductible health plan?
It's always associated with a plan, and I'll maybe talk a little bit about how it's expanding now under the new legislation. But it's first initially tied to a high deductible health plan, and the challenge is only about a third of people, when offered the choice, will select a high deductible health plan. The reality is a high deductible health plan, in terms of overall out-of-pocket costs, is typically no more expensive than a low deductible plan, particularly when you combine it with an HSA. And so you've got to select that plan
because
first.
Because of the tax benefit, you're saying? Or?
Yeah, that's how it was set up. And so you've got to select that plan, and then you can have an HSA that's associated with it. And so we look at adoption of high deductible health plans as one step, and then once you have one, you should be contributing and then using that.
Does it put the onus on the employee to make these financial decisions rather than the company? In that sense, like, you have to actually go out. If you are offered a range of health plans where you work, which oftentimes people are doing, you don't necessarily have the information always to go and make that choice.
It's two things. One, as an employer, the challenge that you have is how do you manage your healthcare costs that are growing at 3 times that of wages?
Yeah.
And one of those things is plan construction. So plan construction around how many of your employees do you want and can you encourage to be in a high deductible health plan? Our best-in-class employers actually only offer a high deductible health plan. That's what we do as well. But we also match and we contribute and we tie that to great wellness behaviors. And so from an enterprise, this is a great way to control your healthcare costs. For an individual, this is to help you prepare for the healthcare costs that will come to you in retirement or in any health event. And you're preparing for that future. So it works both sides.
The Trump administration, first term as well as second term, has certainly expanded HSA eligibility for some plans and for telehealth services. Talked about those changes and what it's meant in terms of the activity you are seeing in the growth.
We have a whole new class of Americans now, following the passage of the bill, that now qualify to be able and are eligible for an HSA. So if you have and signed up part of a ACA marketplace plan, a bronze plan, you can now enroll in an HSA where before you were not eligible. And so that's true with the new legislation. So we're bringing in the largest expansion of the HSA eligibility in the last 20 years. So we think it's a big opportunity, but it's also an opportunity to educate individuals about why should I have an HSA and what can be used for.
You know, you guys have a really interesting view of the economy because you see directly how many employees are being added to plans. We're getting some light data when it comes to employment in the U.S. We'll get a payrolls report tomorrow that might clear things up. ADP came in a little light today. What can you tell us about what you're seeing from customers right now in terms of labor?
So when you think about us, yes, we would see job churn, both hiring as well as people moving, as a tailwind for our business. Early in the year, we saw it. We said this market feels a little weaker. We were communicating that out to the street early in the year, And then obviously with the BLS revising down the labor statistics over the last couple of quarters, that's been very true. We still see that. And so it's a weaker job market overall. But also I think from employers, it's sort of this other thing, which is also healthcare costs overall are unaffordable for many people and even companies. And so how is it that you deal with both? And so we have visibility, I guess, into both of those trends.
Who's the typical person who opens up an HSA? I'm just curious, is there a specific demographic or no, all over the place?
No, it's as broad as the U.S. workforce would be.
Old,
young,
all over the place.
old, yeah. And actually what excited me about joining Health Equity was seeing my son, who entered the workforce, his firm provided an HSA, how he was using it in a digital app, think of it as a stored value, using it in healthcare related expenditures, an integrated part of his health decisions, he and his wife. And I was like, this is a very cool company, great app, and was one of the reasons I joined.
You know, it's interesting. As Carol mentioned, we use, full disclosure, we use Health Equity here. And also, it's not like we have a choice. I mean, this is what we are offered as employees. And I think that's the case for all employers who use services such as yours. They are given, this is the option when they sign up or when you start working somewhere. But I use it less for health stuff. I use it more for non-health stuff like transportation benefits, dependent care reimbursement, lifestyle stuff that we get reimbursement in that sense. Is that a tiny part of your business compared to the healthcare side?
So we have HSAs, and then we have other reimbursement accounts, as well as commuter and COBRA. So your commuter benefits would be through a different type of account. COBRA would be for unemployment, and then you have FSAs, lifestyle savings accounts. So all sorts of different accounts. Most of our business is in HSAs, but as we go to employers, Bloomberg being one, there's a host of products that employers like to offer as part of their benefit plan. And so we offer the host of those CDB products overall.
So, Scott, when you look at kind of the macro stuff that's going on and coming at us nonstop today, a lot of it coming out of D.C., I mean, what's top of mind? Is it just regulatory in terms of changes coming out of Washington that is most important for your world? Or is it also kind of where the economy is?
Well, in the healthcare space this year, we have a very active year on the legislative front, things changing. The one big beautiful bill was one of the fastest pieces of legislation that moved through both. And I think as you look at other things, expiring tax credits at the end of the year in healthcare are pretty significant. There's potentially big changes that could come if those tax credits do expire. And so, Washington, D.C., the regulatory front creates a lot of uncertainty around what's going to happen around legislative change. And then overall, some of the impact on policies, for a CEO makes you take a step back and say, hey, where do I want to take risk? Where do I see that risk? What can I control and manage? And, I think we see that. I see that as a leader as well.
What do you actively push for in Washington if you do have lobbyists? What do you want?
Yeah, I mean, we're actively lobbying in Washington. Our agenda has really been, how do you address the affordability crisis of healthcare? And how do you prepare more Americans for that healthcare expense? We do believe that access to an HSA is one way. We want to better connect people to saving and spending to their healthcare. We want employers to think about their role in that. And, I think if we're all involved in that aspect and we're connected to the healthcare decisions, we can drive costs overall of healthcare in the system down. And it's 20% of U.S. GDP. And those costs are rising faster. And so I think we all have an active role to play.
And not always with great outcomes, certainly here in the United States, despite all that spending. Scott, thank you so much. Really appreciate it.
Thank you.
Soon. Scott Cutler, President and CEO of Health Equity, joining us here on Bloomberg Business Week Daily. We've got a rally underway, folks, and you are looking at most names in the S&P 500 higher right now. We're up on the S&P, a gain of about 0.6%, 6487. Dow Jones Industrial Average, a gain of about 0.7%, more than 300 points to the upside. NASDAQ 100, some outperformance there just by a hair, up about 0.7%. Tim, a gain of 164 points.
Yeah, the latest readings that we got on hiring and unemployment claims, talked about those a little bit with Scott, come on the eve of what economists expect to be the weakest stretch, Carol, of U.S. job growth since the pandemic. On the fixed income side, Treasury 2-year yields dropping toward the lowest in almost a year. The S&P 500, though, seeing that back-to-back advance.
All right, so right now, just about 2 floors above us is a big event here at Bloomberg. It's called Power Players New York, and it's all about the sports world. And it comes on a day where we've got one really big story that caught our attention. The New York Giants agreeing to sell a minority stake in their storied franchise to Julia Koch and members of the billionaire Koch family. According to people with knowledge of the matter, it is one of the stories that's being talked about upstairs at Bloomberg Power Players New York. Let's get to it. With it is Bloomberg News U.S. Business and Sports reporter Randall Williams, who's been upstairs, I'm assuming,
Thanks
today.
for taking a break to hang out with us.
Of course. Anything for you all. Anything for you all.
Well, first of all, tell us about the New York Giants. I am a big Giant fan, grew up,
Okay.
we had my dad, as we all got older and we didn't cost so much, he had season tickets and he would take one of our kids, I'm one of 7, so we'd all get a turn to go and my mom and dad would go. So I grew up loving the Giants.
And they had the same owner that they had now.
Forever.
Yes. Yeah.
I am shocked about this.
Look, the valuation is huge. We're talking about over $10 billion. They haven't put an official number on it just yet because it'll get approved in October. But $10 billion team now. And I mean, Julia Coach makes a lot of sense because she bought a piece of the net some time ago. It seems like she's going to buy anything in this
And
market.
the Koch family definitely has money to play around with.
Oh, absolutely. I think in some regards, if you were trying to buy this piece of the Giants that was up for sale, hearing that she was involved is like, oh, man.
Because close to $80 billion fortune.
Exactly.
Yeah.
Exactly.
Piece of cake, piece of cake.
Were you surprised to see a piece of the Giants sold off?
Absolutely. I mean, the Giants have been owned by the Maras and Tisch family. The Tisch families in 1991. The Maras go back 100 years. And the oldest, when you think about the oldest NFL families, they often don't sell stakes to the team. Now, I was not surprised that it was a limited partner and not private equity.
Which means what? That they don't get to make a lot of decisions?
Well, I think the nature of these minority investments is that both private equity firms and limited partners don't have a lot of say in the front office, in business decisions.
But it's an individual rather than a pooling of money.
Correct. And with that,
that's what surprised you.
Right.
Or
Right.
not surprised you.
No, it did not surprise me that it was a family or an individual because the Maras, I mean, this is their billion-dollar business.
Yeah.
And bringing in a firm when you have a stadium built, you have the #1 market in the U.S., it just doesn't make a lot of sense. So the Coach family is great.
The limited partnership, it's all about getting better seats. I know what it's about. You know, that's what it's all about.
Whatever seat you want, whether you're on the team or not.
Great seats upstairs right now at
Absolutely.
Power Players New York. Tell us, it's been going on for a few hours now. What have you been hearing? Who you've been talking to?
We had just had Carl Anthony Towns that was in. He had a great panel with my colleague Ira Boudouet. I spoke to the WNBPA executive director alongside recent retiree Sylvia Fowles. We had Maria Sharapova. We'll have the commissioners of the MLS and NHL. There's a lot. It's been a lot of fun.
Are people upbeat? Like, you know, we're always trying to figure out for the, different statistics in terms of what it says about the U.S. economy and the outlook. I mean, I don't know. When you see the valuations of these teams, you feel like everything's fine. Is there enthusiasm? Is there uncertainty? Is there any kind of cautiousness that you're hearing?
I think
upstairs?
there's a lot of enthusiasm, especially at Power Players. You feel it. Otherwise, the room wouldn't be full, quite frankly. I think if the business of sports was on a downturn, that these events, whether it would be Bloomberg or another rival of ours, CNBC, Front Office Sports Business Journal, Sportico, if the business wasn't booming, the people wouldn't be there.
Yeah.
And you wouldn't see a $10 billion deal the day before. So
How do people in an economy that might be losing a little bit of steam feel about discretionary spending on athletics?
I think it really depends on what you're trying to go to, because the reality is, yes, you might not be able to go to a New York Giants and New York Jets game, but the Liberty are over there and their tickets are a lot cheaper. Now, the Knicks aren't, and the Nets will be a little bit lower than that depending on who they're playing. But there are events you can go to. Now, look, sports are luxury experiences now. That's the bottom line. They're not what they used to be, where in specific markets you could walk in and pay for a ticket. It's not that way anymore. It's a booming business.
20 seconds. Is there a major theme? Sometimes it's been women's sports. Sometimes it's media rights. Is there a major theme? Or you could say no.
Let's go college sports. There's a lot going on in college sports, and Janet Lauren has been incredible, so tune into her.
We're going to be talking about college sports over the next 2 hours.
Yeah, she's going to be joining us along with the athletic director over at Dartmouth, Mike Harity, joining us.
All right, great stuff. You teed us up so well. Randall Williams, thank you so much. U.S. sports business reporter at Bloomberg News, joining us in studio.
I'm Tim Stenovec along with Carol Master. Let's take a look at some stocks on the move. Today, joining us now is Bloomberg News cross-asset reporter Emily Griffeo. She joins us here in the studio. Emily, companies still reporting earnings, and that's causing stocks to make some pretty big moves.
Yeah, that's usually what tends to happen.
But I said still because it's like really the tail end of earnings season.
Captain Obvious.
Wow. Just surrounded by people who are so kind. I love it.
Yeah, it's been a pretty good
With
earnings
friends like
season
these.
for most of the S&P 500 companies, companies beating on EPS. But Salesforce is a stock that's not doing too well. The ticker is CRM. It's down about 5%, biggest drop since April, and it was down as much as about 8.5%. They projected lackluster quarterly sales growth. They see revenue $10.2 billion to about $10.29 billion, which was the estimate. So they didn't miss that much, but the talk on Wall Street now is that this is kind of sparking a little bit of an AI anxiety. They're an incumbent software provider, and so there's this fear that maybe newer up-and-coming AI companies are going to be able to kind of beat out these incumbent
Exactly,
SaaS
like maybe we providers.
won't
won't need all their services, right?
Yeah.
AI will be doing it, which is kind of wild. You have good genes. Tim has good genes. I have good genes.
You gotta.
This is the talk.
Carol.
It's just an ad.
Yeah.
It's never just an ad in
I think
2025.
what we're learning,
Carol.
what the market is telling us, is that it is just an ad, and perhaps this is a lesson in, all publicity is
I
good
know.
publicity at the end of the day.
Exactly.
Of course, we're talking about American Eagle, a record jump in the stock ticker AEO. It's up 35%. It's actually the highest level since 2024 because the stock had been going down. It had been a rough ride for this retailer that's kind of known for like middle school clothes. At least that's how I think of it. But yeah, they came out. They said that they reported better than expected second quarter revenue, and they did attribute it to some success following the Sydney Sweeney ad campaign. Everyone was talking about it.
And Travis Kelce ad campaign.
Yes, and Travis
Even
Kelce
the president
as
was
well.
talking about it.
Yeah.
Yeah, well, the president was talking about Cracker Barrel too, and that wasn't a good thing for the company.
You just have all these people on how much social media momentum over this. Like, thank you. It's incredible advertising.
Yeah, it feels a little bit like meme stocky. It definitely has some hallmarks of that when you see a jump of this magnitude. But yeah, a record high in American Eagle right now.
All right. I love that you're going to go to this next one because it's among the most read story on the Bloomberg terminal. T. Rowe Price, just got about 30 seconds.
Yeah, T. Rowe Price, ticker TROW. It's up about 6% right now. It was up over 12% on a partnership with Goldman Sachs. Goldman is going to be investing as much as $1 billion in T. Rowe, and they're basically partnering up to sell private market products to retail investors. This is the theme of 2025. Everyone on Wall Street trying to package up private markets and sell it to anyone who's willing to buy. So even if that means teaming up with kind of someone who's a competitor, it's a move that Wall Street.
How's it going to end, Carol?
Strange bedfellow. I know, John Tucker this morning. What could go wrong? What could go wrong? Just, a perspective. Emily Graffeo, thank you so much. Check out our Stock Movers podcast, 5-minute episodes, biggest winners, losers, find it on Apple, Spotify, or anywhere you get your podcasts. The close coming your way on TV, but we, over the next 2 hours, mega highlights from the Power Players Summit. Who do we have, Tim?
Derek Sprague, CEO of PGA Americas, and also A-Rod joining us on the show. That's next on Bloomberg Business Week Daily.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. Health Secretary Robert F. Kennedy Jr. was before lawmakers today defending the ouster of CDC officials and the administration's vaccine policies. The questions were heated. Washington Democratic Senator Maria Cantwell.
You canceled $500 million of research because the mRNA technology is about continuing the research to be ready for the next flu, influenza, the next pandemic, and you have to do the research.
I'm happy to have a detailed discussion with you about it. You're so wrong on your facts.
You're interrupting me, and sir, you're a charlatan.
President Trump's nominee to join the Federal Reserve Board faced some tough questions about his independence. Senator Elizabeth Warren.
Dr. Myron, you have made clear that you will do or say whatever Donald Trump wants you to do or say, and that may work in a political position, but it takes an axe to Fed independence and will make life far more expensive for American families.
CBS's Jake Rosen reports Washington, D.C. has filed suit over the administration's deployment of National Guard troops.
This tees up another legal battle. The D.C. Attorney General is citing this Los Angeles decision, saying that the way that the National Guard have been deployed here is inappropriate. Obviously, it took a couple of months to get that decision out of Los Angeles, but as the Trump administration teases sending the National Guard into places like Baltimore, New Orleans, Chicago, certainly something to keep an eye on, setting up yet another high-stakes battle about what President Trump's authority is in using the National Guard and how they're used once they're officially rolled out on the ground.
Northwestern University President Michael Schill says he will resign. The Trump administration froze federal funding over the university's response to campus protests. Schill says it's critical that the university's research mission be protected, as well as its academic independence. In Paris, European leaders met to discuss Ukraine security after a ceasefire deal. CBS's Natalie Brand reports.
Zelensky on social media, in speaking about this meeting, said that they discussed in detail each country's readiness to make a contribution to ensuring security on land, at sea, in the air, and in cyberspace. And he also said that the leaders share the same view that Russia is making every effort to drag out the negotiation process and prolong the war. European leaders saying Putin cannot be trusted.
Fashion designer Giorgio Armani has died. He was 91 years old. He dressed some of the biggest celebrities in the world for red carpet appearances. On Wall Street at this hour, stocks are higher, the Dow up nearly 300. This is CBS News. A woman's hand signal helped save her from a domestic violence suspect in Los Angeles. CBS's Michael Wallace reports.
The woman was at a convenience store in Alhambra when she tucked her thumb into her palm and trapped her thumb with her fingers. Someone noticed and called 911. Police questioned the man the woman was with.
You're under arrest. Can you stand up for me, please?
He tried to run, but was quickly caught. Police say he had a stun gun. Carmen McDonald with the Survivor Justice Center is so glad the hand signal worked.
And the fact that someone understood what the message was is amazing to me.
The suspect has a long rap sheet. He's being held without bail. Michael Wallace, CBS News.
A Moroccan court has sentenced a feminist activist to 2.5 years in prison for blasphemy. The case stems from a T-shirt she wore in a selfie that was posted online. She insists she never meant to offend Islam, and the T-shirt slogan, she says, has long been used to fight violence toward women. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily, with Carol Masser and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are back here on Bloomberg Business Week Daily. We're 1 hour away from the closing bell on Wall Street. We have moved up one floor, gone from 5 to 6. We're here because we really want to highlight everything that's going on at Power Players New York. It is, as you know, sports, a mega industry, a multi-trillion-dollar global industry. And we're bringing you some of the influential voices from the business behind sports to really help you identify the next trends, like what's coming next.
Yeah, we got a great group of people, not just here in the building, but also coming on our program a little later. Over the next 2 hours, not just highlights from the event, but also some of those folks joining us here on set, including Michael Ariadne, co-founder and of Ares Management, and Tom Garfinkel, Vice Chair, President, CEO of the Miami Dolphins, joining us in just a few minutes.
Yeah, and we're going to be dipping into...
Hear from that panel.
Yeah, we're going to be dipping into some of those panels. Derek Sprague, CEO of PGA of America, he's going to be here, so we'll be talking to him about what's going on in the world of golf. Alex Rodriguez, also Chairman CEO of A-Rod Corp and co-host of The Deal with Jason Kelly. He's going to be stopping by as well.
Again, he's also a baseball player, I guess, right?
He's done fairly well there as well. We're going to talk baseball. We're going to talk hockey. We're going to talk soccer. We're going to talk golf. We're going to talk a lot of things over the next couple of hours. This as we are seeing quite a rally on Wall Street. So let's get you caught up on the trade on this Thursday. Let's toss things over to Lisa Mateo. She's in for Charlie Pellet.
Yes, and you are right. Stocks advancing. Traders gearing up for tomorrow's jobs report. And today we received, well, some more evidence that the labor market is cooling. Applications for U.S. unemployment benefits, they rose to the highest since June. Initial claims, well, they increased by 8,000 to 237,000 last week. Continuing claims, they were little change. In other eco data, you had the U.S. trade deficit. It widened in July to a 4-month high. And speaking of trade, we had President Trump. He's asked the Supreme Court to uphold his global levies. To the markets we go. We'll start with the NASDAQ. It's up about 0.6%, 147 points. The S&P 500 up 0.6%, 41 points, and the Dow rising 0.7%, 327 points. The 2-year yield 3.59%. That's up 2 basis points. The yield on the 10-year 4.17%, and that's up about 4 basis points. The Bloomberg Dollar Spot Index up about 0.1%. A few companies making news. We'll start with Goldman Sachs investing as much as $1 billion in T. Rowe Price Group and team up with the firm to sell private market products to retail investors. Because of that, you have shares of T. Rowe Price. They're rising this morning. They're up about 6%. And J.P. Morgan will start offering retail banking services in Germany next year under the Chase brand. Sanofi shares, they fell the most in almost 2 years in Paris. This is after an experimental drug for a skin condition. Well, it disappointed in a late-stage trial. Its shares are down 8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash.
All right, Lisa, thank you so much. Carol Masser, along with Tim Stanovic, live here on Bloomberg Business Week Daily. Bloomberg Power Players New York, it's underway up on stage right now. We want to head there. A discussion on the NFL's next play, and they're talking about an innovation, expansion, investment. Up there is Michael Ariadne. He's co-founder and CEO of Ares Management, and also Tom Garfinkel, Vice Chairman, President, and CEO of the Miami Dolphins and Hard Rock Stadium. He's managing partner, Formula One, Crypto.com, Miami Grand Prix. It's a great twosome. They are moderated by Bloomberg Originals Chief Correspondent, our own Jason Kelly. Let's listen in.
Reportedly a $10 billion valuation.
I love that. I think the fact that some of the owners are waiting, I think they're expecting values to continue to rise, and I think they're right.
What do you think about valuations? I mean, having done the underwriting here and done all this diligence, where are valuations right now? Where are they going?
When the first investment came into the league at a $5.5 billion valuation, I think people were shocked. The median value in the NFL now is about $7.1 billion. And with every successive investment, you're seeing those values go up. Some of that is the presence of institutional equity. So if you just look at sports team valuations in general, you'll see an inflection. NBA saw it. NHL saw it when institutional capital comes in, because you're dealing with asset scarcity. And when you start to open up new channels for investment, valuations will naturally go up. So I think you're beginning to see that scarcity value thesis play out. And then the media rights, continue to go up. And so sports franchises have compounded at 10 to 15% per year for the last 15 years. And then they get these periodic inflections whenever you up tier the media rights. But I think they'll continue to go up.
And Tom, do you agree? Like, how fast will they go up? I mean, how soon are we going to see a $20 billion team? I mean, I know it's hard to project, but
I think that's going to happen sooner than people expect. Look, I think I look at it maybe more simplistically. I just think that it's fundamentally supply and demand. You've got a lot of demand for these assets. They don't go for sale. There's a scarcity supply of them. The NFL is a fantastic business model. It's also a group of owners that's sort of a club some people want to be in. But from an investment standpoint, you know, Miami, for example, in some of these markets, you get a chance to, you know, host. I mean, we'll have the World Cup, we'll have the national championship game, the Formula One race, the Miami Open tennis tournament, all in the next, you know, in the first 6 months of 2026
on your campus.
On our campus, and so, you know, when you get an opportunity to host, you know, we had, you know, the level of celebrity and power and the people that come to these events. You know, there's meaningful business that's conducted in those environments. There's a lot of different value levers, and I think fundamentally, again, supply and demand, as people who can afford to purchase these teams get more wealthy, the valuation's going to go up, the scarcity's there, and I think for institutional investors, that's part of, I'm not speaking for Mike or Aries, but I think part of the calculus has to be the health of the business model. I mean, the NFL is the most relevant cultural phenomenon in the United States, as evidenced by viewership and everything else. And that's going to continue. So the valuation should continue to go up.
And Mike, you alluded to this, and Tom has too, this notion that you guys are now a global sports investor. I think it's fair to say. But that's, I mean, you were doing some of it, but now you're doing it, I would argue, at scale as much as anyone. When did you make that decision and why?
So it's interesting. We, at Aries, we pivoted to that at the beginning of COVID. And the catalyst was, for a lot of leagues, they were looking at an ownership group that was asset-rich, cash-poor in many respects. They were going to be facing acute liquidity challenges. And you had live events with no spectators.
Right.
So it became pretty obvious to us that if we could actually go in as a creative liquidity provider, that we would be able to do something special. So it actually started off as an idea that we would effectively build a bridge through the pandemic to leagues and team owners. By moving early, we were able to develop some pretty trusting relationships, I think, at the league level, within the ownership groups and within the broader ecosystem, that we were there not to take advantage, but to really help people through it. And then, as everybody knows, through the pandemic, I think we really learned how much we just love sports and how much we miss them. And so in the back end of the pandemic, the valuations accelerated, and we find ourselves where we are today. But that head start that we got by building that trust as a solution provider, I think, went a long way to putting us where we are now.
And Jason, think, you know, back to the relevance of the NFL. The Hall of Fame game, which is the first preseason game that was played this year, and this is consistent for the past few years, pulled higher television ratings. Now, keep in mind, there's nothing but third, fourth string players that probably aren't going to make the team playing in that game. That game pulled higher television ratings than the average NBA playoff game. So you're talking about a preseason game with no starters playing.
Alex Rodriguez is backstage going, oh, good.
No, and the NBA is great properties. They're great businesses. They're you know, I'm not saying anything negative about the NBA. The NBA is a great property, and Alex made a great investment, and I would be bullish about his investment. But I think when you just comparatively speaking, when you talk about the relevance of the NFL and the power of the NFL culture in this country, I think that speaks volumes.
Average viewership is 5 times the next nearest league in the NFL, 17 to 18 million per game. So nothing even comes close. And I think, you correct me if I'm wrong, 29 of the 30 most watched televised events of all time were Super Bowls. I think bested only maybe by the moon landing.
And year to year, it's anywhere between 92 to 96 of the top 100 most watched television programs are NFL games.
Right. Well, and then we spent a lot of time on college sports earlier, a very good amount of time, an appropriate amount of time, talking about college sports earlier this morning, and clearly the money that's going in, the viewership that's there. I mean, you essentially have NFL Junior being created at the college level. Is that investable, Mike?
Yeah, absolutely. And we've talked about this. We try to approach the whole sports investment business is understanding the sports ecosystem. So that's what's so unique about what Tom and his team have is the stadium asset has now created an ecosystem around the stadium asset that they get to build other things into. And as Tom alluded to, you then have the ecosystem of Miami, which is actually one of the fastest growing, most favorable demographics in the country. And when you have that level of impact, you start to see other things come out. So I think when you start to see development of NIL and rejiggering of college leagues, all of that starts to become investable with innovative financial product. And so, you know, we're always looking for those markets as they open up, but absolutely college sports, stadium assets, NIL support, media rights, et cetera, those are all going to become big investments.
I mean, you're going to have the college football national championship, right?
We are. I mean, every year we have Orange Bowl, we have semi, or this year we have the national championship. Last weekend we had Notre Dame, Miami.
Right.
The governor of Florida, the Secretary of State of the United States, and a nameless, one of the top 5 wealthiest people in the world were all in the suite at the same time. It's just, and the electricity in Hard Rock Stadium for that event, it felt like a national championship game. So, you know, the relevance of Miami as a market, the relevance of sort of the investment that Steve's put into the stadium, the private investment, the fact that, you know, we own the stadium and grounds, we're able to do these things. But these events, whether it's college football, international soccer, Miami Open tennis, Formula One, we had several, you know, starting last October, we had Taylor Swift. We've had this summer, Morgan Wallen, The Weeknd, Coldplay. The concert series this summer has been huge. So, you know, it's just, it just continues from there. The number of events, I think we had 48 major events this year with 2 million people coming through the gates, which both of those are about twice what they were 5 years ago.
I mean, I remember being there for the F1 race this year, and I remember people literally being like, all right, we got to take this down, get ready for Shakira, right? Was that right? So, I mean, how many times have we all said that? So let's talk about F1.
All right, everybody, you are listening to Power Players New York. Up on the big stage there right now, our own Jason Kelly of Bloomberg Originals. He's also co-host of The Deal. He's there with Michael Arrighetti, co-founder and CEO of Ares Management, along with Tom Garfinkel, vice chairman, president, and CEO of Miami Dolphins. Anything you missed, be sure to check out Bloomberg.com and get the full conversation. So we're going to go now from the NFL and football. We're going to talk a little bit about golf.
Yeah, I mean, big picture, we're thinking about sports as a multi-trillion-dollar global industry. We're bringing you influential voices from the business behind sports to help you identify what is coming next, and that's why our coverage of Power Players continues. Joining us for guests right here on set.
All right, let's get to it. Derek Sprague is with us. He's CEO of PGA of Americas and Bloomberg News Texas Bureau Chief Julie Fine. They're just off their discussion up on the big stage, both of us here at Power Players. I am curious, in that conversation, what was it that, like, I don't know, maybe surprised you in your conversation with Derek?
I think the part that touched me the most is when I asked him the most unique round of golf he ever played, not on a financial standpoint, but the most unique round of golf he ever played was with his kids.
Yeah, it's always fun playing with your kids, and you know, I don't get to do it as often as I like, but it's always special when it happens.
I have to say, I'm one of 7 kids, 4 brothers, and a rite of passage was my brothers learning to play golf, and I'm so sad that I never learned to play with my dad, and it's
never too late, Carol, never too late.
I know. Talk to us about the golf landscape. It continues to evolve and change, and whether it's foreign investment, a lot of things going on, new formats. Where do you guys fit into the overall ecosystem?
Yeah, so we're the PGA of America, so commonly known as the coaches of the game, the administrators of the game, the club professionals, right? There's 16,000 clubs in this country, and we have PGA professionals at nearly 10,000 of those clubs. So you'll see a PGA professional if you go to a golf course, whether that's a public facility or a private facility. You'll take lessons from our PGA members versus the PGA Tour, which that's what you see on television every week. The elite part of the game is the PGA Tour. However, we work very closely with them because a lot of our PGA members are coaches of their tour players.
Right.
You know, during the pandemic, golf really exploded because it was one of those sports that early on people realized they could do, and it was low or no risk. Have you seen that growth continue?
Yeah, it's been incredible. You know, we haven't used social distancing word in a long time, but golf, PGA of America actually went to bat during the pandemic to say, because as states were shutting down, we said, hey, golf is a safe sport. And I think what we're seeing today, you know, 5 years after the pandemic, is that growth continuing because, as I told Julia earlier, families got together, right? They were all living together. They got to play the sport together. You got to play with your kids and your grandkids in a safe environment, outdoors in small groups, all the things that social distancing lend itself to. And we've seen that retention today. We have more golfers in the game. We're up to like 28 million in this country. 550 million rounds of golf were played in 2024. It's just incredible growth since the pandemic.
I mean, I think in terms of the financial aspect of this game, what surprised me a little bit that we discussed earlier is the global impact of it and what a difference global sponsors are making, the biggest changes you've seen in Ryder Cup in that aspect.
Yeah, this year at the Ryder Cup here in a few weeks in New York City's backyard out in Long Island at Bethpage is we have about 280 corporate partners, and 30 of those are from around the world. We certainly have our worldwide partners at the PGA of America for the Ryder Cup, but we have 30 partners from Australia and Japan coming in. They're not even, those countries aren't involved with the Ryder Cup, but they're investing in the Ryder Cup because it's a live sporting event, one of the most epic sporting events in all of sports, not just golf.
How do you think of the role of the Ryder Cup in the midst of what feels like a divided golf world right now? How important is that?
Yeah, I mean, I think we're past that a little bit, Carol, but it's certainly divided when you talk about the Ryder Cup because, you know, it's going to be loud and ruckus on Long Island. The Europeans are coming into our home court, so to speak. And as Keegan calls it, our captain calls it, America's course now. It used to be New York's public course, but it's America's course that week. So, yeah, it'll be divided that way. The crowds will be divided. But I think the investment in golf is now global, like I just mentioned. And so many people, golf is booming not only in this country, it's booming globally now. More golf courses are being built around the world because of more golfers from around the world playing that are playing over here in America. They go back to their hometown and home countries and help start the game there.
Since the inception of the LIV Tour, what we've also seen boom is the purses. I mean, these players are making a lot more money because of this really competing tour. What do you see the future of all this?
Yeah, I see it plateauing a little bit. You know, we saw, you know, that was, again, we're different than the PGA Tour, but it certainly increased our purses at our majors. You know, all three of our majors, the KPMG Women's PGA, the Senior PGA, and the Men's PGA, which will be holding at our home course at Frisco, Texas there. So, yeah, the purses have grown, but I don't think they're going to continue to grow at the rate they have in the last few years.
Might you see the Ryder Cup grow beyond the United States?
Yeah, I mean, we play it every other year, so it's only in this country, and I think that's why the demand is so high for this year's Ryder Cup, one being in New York City metro market.
It's a great market to hold an event.
It sure is, and then we'll play it. It'll be in Ireland in 2027, okay. So it goes back and forth every 2 years. Just to show you the magnitude, 500,000 people registered for tickets for this year's Ryder Cup. Only 50,000 a day will be coming to it, but 500,000, right? And then we had 30,000 on the list to volunteer. 30,000 say, hey, we'll come and work. We'll buy a uniform. We'll come out there and work. We'll have about 4,000 volunteers out there.
But do you expand it beyond the U.S. and Europe?
No, I don't think so, because this event goes back to 1927. We're coming up on our 100th anniversary in Ireland in 2 years, and I don't see that changing at all.
I'm wondering about accessibility to the sport here in the U.S. and how you grow that pipeline, especially for U.S. players. We just went to the U.S. Open last week. We broadcast from there every year, and every year we hear from the USTA about their efforts to increase the ability for kids to go out and play tennis, a sport that oftentimes is associated with country clubs, similar to golf. What needs to be done in the U.S. to increase that pipeline for young Americans?
Well, the PGA of America has been doing it now for over 10 years, and we have a program under our PGA Reach Foundation umbrella called PGA Junior League. We put these kids in jerseys with their names and numbers on their backs. We'll have them out here at Ryder Cup, so you'll see a sprinkle of that, cheering on their favorite players or whatever. But we had last year in 2024, we had 77,000 juniors play. Oh, wow. So our PGA of America golf professionals, they form these teams at their facilities. They compete against other teams from nearby facilities, and then we'll have a national championship actually in Frisco here in a few weeks. So I mean, and that'll be televised on ESPN. So even junior sports are seeing the big time on television, right? So again, our PGA professionals are hard at growing the game, and PGA Junior League is just one of those great programs. Probably the most successful program we've ever had for growing the game.
You have some really big names in golf right now. You look at like a Scotty Scheffler from our neck of the woods. Texas really actually is becoming home to a lot of pro golfers now. But you look at him, you look at Bryson DeChambeau. Overall, you've got a lot of younger players. They're really appealing to people via social media and different means, and you've got a traditional base as well. So how do you marry that?
Yeah, well, I think the younger generation, they're getting, they grew up, a lot of them, in this video game world. So now technology has helped them get in there. They got range finders and they're checking the yardage on their watches and stuff. I mean, it just connects them to the game. And then when you look at the alternative off-course things like Top Golf in those type of venues, and you got some right here in the city, right? You can go play golf inside the city here at some of the venues here. So I think that's transferring to whether you play 9 holes or play a short course or play 18 holes. All these alternative forms of golf have helped elevate the game, especially with that demographic. And when they go all in on something, and I think other CEOs would tell you this, whether it's a certain product or a certain sport, they're all in. That demographic, they're not doing the mile wide and inch deep. They're going a mile deep and an inch wide. So if they get on the sport, a certain sport, they're staying with it.
But Derek, like everyone is competing for our eyeballs right now. There's so much content out there, and certainly just even sports content. There's so many different choices. So how do you guys kind of figure out how to expand your audiences in a way and then still stay kind of true to the traditional aspects of the game?
Yeah, well, I think that's what the sport does, the multi-generational part of our sport, where you have, right here at Bloomberg, you'll have some folks that have worked here for a number of years. They're mentoring the younger generation. They're taking them out to play golf. A lot of business deals are done on the golf course. So that's just one.
Is it still or is that just a stereotype?
No, it is. And when you think about it, as much as technology is in this environment now, at a lot of the golf courses, it's great to put your phone down and actually talk with someone and just think about having a meeting for 4 or 5 hours. So on a golf course to play 18 holes, you're playing for 4.5 hours. You could be with your boss for 4.5 hours. You could be with a client for 4. You get to know these people, and it's a great human interaction. That's another beautiful part of our sport, is that, it's not only traditional, but you have the technology infused with it, but then you get to spend time. And that's why I said earlier, just being able to play with my kids and spend 4 or 5 hours with them is great.
Is it still a lot of guys, though, playing?
No,
have we seen an increase in women?
Women's is the fastest growth of the sport. Okay. Since the pandemic, more women have gotten into the sport, not only for recreational. Again, I think when the families were at home and they were shuttered at home, they said, hey, I want to go out and play too. A lot of women took up the sport in the last 5 years. They've stayed in the game, which is great. And then I got a lot of nieces, and they're taking up the sport because they know it's an important part, not only for business, but for family. So it's wonderful to see, and that's one of our proudest moments, is to see the sport grow with the youth and with women and other people of underserved populations. Yeah. We have a PGA Works part of our foundation, which really helps grow the game for underserved communities. And we're trying to make PGA of America is the entity that's trying to make the game look like more like America.
You just talked about the human aspect of this. I'm now going to the not human aspect of this. Great segue. AI, changes in the game and technology. PGA of America, of course, in Frisco, Texas. That's how we know each other. The technology is, you take a shot and it tells you everything that's wrong with it and what's right with it. But I mean, anything to dissect your game, that is there. What is the future of technology in the game?
It's just going to continue to grow. In fact, that's one of the first things I did as the CEO when I got there. I talked to our head of education, and I said, what are we doing? We have all our associates that go through our headquarters there, and they learn the trade and become a PGA professional there. And I said, what are we doing to teach them AI? Okay, not only with the launch monitors and all that, that'll have AI all factored in there with the algorithms and all that. But we're teaching our young associates how to use AI in running their golf facilities. So whether that's doing a flyer that's generated in a couple minutes rather than a couple hours, or doing rounds forecasting for their budgets, or doing newsletters for their club, and using that AI technology to save them time, make it more efficient. Hopefully it'll look better and then impress their bosses and their boards and their members.
One thing that we talked about, again, tennis fresh on our mind as the U.S. Open continues here in New York, and as we broadcast from there last week, the average age of a tennis coach here in the U.S. is relatively old. And I'm wondering if you're seeing similar challenges when it comes to coaching with golf. Are you able to get those younger coaches in there who can spend their entire lifetime essentially teaching the game to others?
Yeah, we have three career tracks, really, that sort of like when they want to become a PGA member, which direction you want to go. So we have club operations, we have coaching, and we have executive management. The highest growth is coaching. So we're not seeing that challenge. We're seeing more young professionals want to get into coaching. And I think it's...
Why is that?
Well, I think, one, is a good lifestyle, right? You're not... Club operations can be challenging, right? You're coming to the club at 5 in the morning. You might be closing it at 11 o'clock at night. Where teaching, generally is done in daylight hours. And I think, we've had such great success teaching players. Randy Smith is one of our PGA members, and he's teaching the #1 player in the game, Scotty Scheffler, and we've done a lot of great segments on that. And I think that just inspires our young professionals to say, I want to be like Randy Smith, and I want to be one of the best teachers in the game.
We're talking with Derek Sprague. He's CEO of PGA of America. Also with us is our Julie Fine, Texas Bureau Chief here at Bloomberg News. Things evolve, things change, and things are questioned about. I do remember these conversations we were having that, like, a younger generation isn't playing golf. Is it just the pandemic that you think got people more interested? Like, where
that was probably the jump started. Yeah. But this sounds self-serving, but I look at some of the programs that we're doing, Carol, like PGA Junior League. We've been doing that for 10 years.
Yeah.
And it's grown every year for 10 years, right? And you're getting 70. So what happens, again, when you look at the multi-generational part of our sport, these kids play, okay, and then their parents, again, what's beautiful about the sport is they don't have to sit on the sidelines like some other youth sports. They don't have to be up in the stands. They can participate with their kids. So all of a sudden you take a couple children and then a couple parents start, and the game of golf grows. So, it's just, I think programs like that, and then we got another great program on our foundation for our veterans of this country called PGA Hope. And these veterans that they're trying to reassimilate back into civilian life, and our PGA coaches are helping them take up the game, building community, and now they're starting to play the sport. So I think all these programs that we do at the national level at the PGA America, plus we have close to 33,000 PGA professionals, one of the largest working sports organizations in the world, PGA of America is. So those members working at these, 15,000 clubs nationwide are helping grow the game day in and day out.
Starting to pay it off. We've got one last question. We're going to let you, Julie, wrap it up for us.
Perfect timing. The last question is, 10 years, where are we in the game of golf?
Yeah, well, today we're a $102 billion industry. I see that growing probably by another $20 or $30 billion. I think the retention rate is going to continue, and I think we're going to see, instead of 550 million rounds of golf being played, we'll probably see 600 million rounds of golf in 10 years and just continue to grow this sport. Instead of 28 million golfers, you'll probably have 32, 34 million golfers in 10 years' time. So, again, all these programs are continuing to develop golfers, and our 33,000 PGA professionals are growing the game nationwide. And I think all these programs will just continue to add to the numbers economically in golf.
Well, I got to say, I loved hitting golf balls at the driving range. Like, it was just so much fun. It's just such a part of us growing up. Thank you so much.
You're welcome.
Both of
you.
And
when are you guys doing the show from Texas?
Hey, anytime you invite us.
I'm on all the time. Let's just do it from Texas.
Bring us down. I have lots of family in Texas.
We'd
love
to
the
have
state.
you.
Derek Sprague, thank you so much
You're
again.
welcome,
CEO of PGA of America, and of course, our thanks to our own Julie Fine, Texas Bureau Chief at Bloomberg News. We're going to put on a cowboy hat. We're going to come down.
I'm waiting.
Come across.
Bring your boots, too. Bring your boots.
And maybe bring your golf clubs, too.
Yes, for sure. I know somebody, so.
We'll head on out to Frisco. Hey, we are about less than a half hour to go for equity markets here until they close. Fortunately, we got Lisa Mateo holding down the fort in the Bloomberg Interactive Brokers studio for Charlie Pellet. Lisa.
You got it. Yeah, stock's still advancing right now. This is President Trump. He pushes for greater influence over the Federal Reserve after a Senate hearing to confirm Stephen Myron. Now you have JP Morgan, Goldman strategists. They're warning of growing concerns over the Fed's independence with the president's push for Myron and also rate cuts. Taking a look at the markets, the NASDAQ down up 0.7%, 157 points. The Dow rising 0.7%, and we have the S&P 500 up about 0.6%. Heading over to the yield space, the 2-year 3.58%. That's down 3 basis points. The yield on the 10-year 4.16%, and that's down about 5 basis points. A record-setting rally in gold. Well, starting to cool. We have COMEX gold at $3,605 an ounce, and WTI crude is at $63 a barrel. Few stocks on the move. It's American Eagle Outfitters. Their shares are up 35%. Said they expect a sales boost from marketing campaigns from Sydney Sweeney. Also, Travis Kelce. On the downside, you have New newly listed software company Figma. They're down 19%, posted a double-digit rise in quarterly revenue, but profit missed expectations. And finally, Salesforce, their shares down about 5% after its quarterly revenue outlook was on the lighter end of expectations. That is your Bloomberg Business Flash. I'm Lisa Mateo.
Hey, Lisa, thank you so much for that update. Tim Stenevec along with Carol Massar. We're live just outside of the Bloomberg Interactive Brokers Studio in New York. I'm not going to tell you exactly where we are. Bloomberg headquarters. Let's just say that.
Bloomberg headquarters.
Yeah.
Midtown Manhattan, kind of ish.
You got to be on the list, though.
So we've heard about football. We've heard about golf. Now we're going to talk a little bit about what's going on in the NFL. Up on the big stage right now, we've got a panel underway. Gary Bettman, commissioner of the National Hockey League, and Ted Leone says he's founder, chairman, managing partner, and CEO of Monumental Sports and Entertainment. Bloomberg by the one and only Scarlett Fu of Bloomberg TV and Radio. Let's listen in.
Choose the imagination. It gives people a chance to focus on things that are superhuman. You know, Alex broke a record that nobody thought was possible to break. And it's a testament to him, his physical prowess, his skill, his endurance, his ability to not get injured, and the support that he got from his organization in terms of the players they surrounded him with and everything they've done off the ice. So what do is you look for big events, for big stories, and you use every platform imaginable, whether it's linear, streaming platform, social media, and no different than what we did in February with the Four Nations tournament. I mean, we created something that even if you weren't a hockey fan, even if you weren't a sports fan, you felt compelled to tune in because it was so topical and so intriguing, people wanted to know more.
Well, geopolitics helped a little bit there too, right?
Well, a little bit, but yes.
We're on national TV the most of any team next year. So there's still, Alex is still a very popular player, but it's also, we finished first in the East last year. We had a really, really good team. We weren't out of context because hockey, at the end of the day, is the most competitive of sports. The playoffs, obviously, are the showcase of that. And, you know, we've been able to build hockey in our community. People would say that D.C. was a basketball town. It is, but now it's a hockey town. And, you know, we're heading towards $1 billion in revenue. Monumental Sports and Entertainment. My goal is to make it the most valuable regional sports and entertainment company. We have currency, we have great investors, we have one platform, and you know, right now we're being valued $7-8 billion. 2 years, because our business is very predictable, we'll hit $1 billion. Maybe it's worth $10 billion, which would mean Gary would be CEO of a $300 billion company. I don't think you've treated the commissioners with the respect that they deserve, right? No, I'm serious. When you look at it, they're running a global branded business with billions of fans, hundreds and hundreds of millions of customers, fans. The fan avidity in this business is off the chart. We say we're not public companies. Go, yeah, well, he gets booed at every Stanley Cup, right? You hear from the fans. They're voting every single day. That's why the renewals are so important.
Yeah.
We average, what are we averaging as a league in our renewals?
Over 90%.
Over 90%.
Because our fans, most people don't focus on it, our fans tend to be the most avid, the most affluent, the youngest, and the best educated, and the most tech savvy.
So let me pick up on that idea.
By the way, I have to negotiate my next contract with you.
Ted will be your agent. Let's pick up on that idea of having the youngest audience and the most tech-savvy audience, because your partnerships matter. As the CEO of a $300 billion company, as Ted put it, partnerships like TikTok on the Capitals away jerseys, Roblox to create a metaverse experience to reach that younger Gen Z audience. I'm sorry?
Just announced yesterday, Coupang is going to be one of our
There you go. So that idea of teaming up with brands that matter to a younger audience that perhaps isn't trained to watch TV the same way we are.
There are two parts to answering that question. One is the authenticity and the game itself. And the good news for us, and I never like to talk about other sports, but when it comes to pace of play, there's more action. You can't be on your phone if you're watching.
You'll miss something.
You'll miss something because it happens fast and furious. So the amount of action to the amount of length of a game works very well for us, and it's compelling for younger people. The second thing is you've got to reach your fans and your would-be fans on their terms now, particularly now. You got to give them, as everybody says, what they want, when they want it, how they want it. It didn't get a lot of attention, but when the old deal in Canada with Rogers 12 years ago included a streaming component, it was really the first national sports league deal to do that. And our deal, most recent deal with ESPN, and we have Amazon in Canada, we've always looked to see how can we use technology, not to change the game, but to take essential elements of the game and make them more fan or consumer friendly so that we can bring people inside the game. And that's where, because the game is so fast, using technology, puck and player tracking, does a couple of things for us. One, we're creating millions of data points a minute, and that's enabled fans to get inside the game and understand it better if they didn't grow up as hockey fans. And using the metaverse, we actually use the puck and player tracking to use animated versions of our game so that young people can get attracted to watching it using their favorite cartoon characters.
Yeah. And reimagining the game, especially on a global basis. We're the largest investor. I'm chairman of Team Liquid. And Team Liquid is the #1 esports in North America. We just came in second place in Saudi Arabia. It was $30 million in prize money that was awarded there. And we play on 11 different platforms. And you'll read, it's a winter, nuclear winter for esports. That's like saying the web, this was bad. In the mid-90s, the web blew up. Don't make any investments in web companies. I think 25 years ago, the company I helped to create, AOL, we had a $200 billion market cap. Microsoft had a $400 billion market cap. It's 25 years later, AOL doesn't exist. Microsoft has a $4 trillion market cap. And they've had to reinvent themselves. They're now an AI and cloud computing company. So Team Liquid, we play in 11 different platforms. And the people in Saudi Arabia, which are building a whole city and infrastructure for tourism, for their young people around esports.
You're listening to Ted Leonsis, founder, chairman, and managing partner and CEO of Monumental Sports and Entertainment. Also, Gary Bettman, commissioner of the NHL. They're going to be joining us in just a few minutes when they do wrap up that panel.
All right, they're up on the stage. Soon to be up on the stage are our next two guests, Alex Rodriguez, chairman and CEO of A-Rod Corporation, Bloomberg Originals chief correspondent Jason Kelly, joining us right now on the newest season of The Deal, and also just to talk about power players. But first of all, Alex, I have to tell you, this is my former co-host.
Yeah.
Before this one.
Okay.
So I feel your pain.
From good to great.
Oh my gosh! Wow.
From good to great.
Wow. Oh my! I mean,
they're beating you up. You have home field advantage here. It's not working.
How many seasons did you last with Jason?
Long. 4 or 5?
No, like 2.5 years.
All right, it's a third season.
It felt like 5.
Right.
It's a third season. The deal. So Alex is already.
Oh my
made
God!
it
Now
longer.
Alex and I's marriage has lasted longer than my marriage to Carol. This is amazing.
Wait, okay, now my world's turned
Yeah,
upside down.
yeah.
Well, tell us about the third season. You guys have been working together for a while.
Yeah.
How it kind of has evolved and how you think about who you want to be talking about in this world.
I mean, it has evolved. I mean, we've had a really fun week this week. This is teasing ahead to later in the season, but, later on, we're going to sit down upstairs with Justin Tuck, obviously former New York Giant, won 2 Super Bowls. He now works, he's a managing director at Goldman Sachs,
I know.
which is
Incredible.
amazing. But we've had a crazy last couple days because and you're going to love this one, Carol, because I know you're a fan of this person. The first was Erica Badon, who is former Erica Nardini. She ran Barstool. She had some incredible stories. And then yesterday, Robin Arzon from Peloton, who you and I interviewed way back in the day.
Ago, yeah.
I mean, Alex, that was unbelievable.
I mean, she's a force of nature. And what a story, right? To be a litigator lawyer, one of the top firms in New York. And then around 2011 says, you know what? I'm going to do a radical pivot. And she cold emails Peloton, gets the job. And one of the most things, I mean, there's so much to admire, but the fact they've been to the moon with their stock, right? Over $30 billion market cap. And now is, obviously a lot less than that. And she has stuck it through. And we asked her about it, and she gave a fantastic answer. That's my tease for
yeah.
For
the other thing that she said, which is so funny. So this is how, I'm going to tell a little bit behind the scenes
Inside
story.
baseball?
Inside baseball about the deal. And this is how I know that I think the show is really working is we literally sent each other voice memos this morning saying, independent of each other, saying, my favorite part of the interview with Robin Arzon was this thing that she said. And you'll have to wait to listen to what it is, but that was kind of a cool moment where we basically, in this 45-minute conversation, there was one thing that we were both like, I'm going to use that in my day-to-day life. And I do think one of the things that we've started to achieve with this show is sort of a level of intimacy with our guests. They tend to open up. We had in this most recent season, we had Bill Belichick on, a pretty rare business side interview. I think he told us stuff that, he hadn't really talked about before and really talked about his approach to coaching, what it's like to sort of take this new job in college sports. And so, I mean, we're having a ton of fun. I mean, this is fun.
Another fun one, timely-wise, because you mentioned time, is Mark Shapiro's. The day they rang the bell and they took TKO public. And he gave us some fascinating stories going back to the Bob Iger days and what he was doing at ESPN and how he was a rising star. And now he's obviously the president of TKO and Endeavor. So many great stories. Yeah. And now people are starting to reach out to us and saying, hey, can we be a guest?
That's what I was going to ask, Alex. I mean, now that it is the third season, you're not necessarily having to knock down doors the way you guys did just 2 or 3 years ago in order to do this. How are you thinking differently about the conversations and who you want on the program?
Well, I think Jason reminded me yesterday that we've done around 50 shows. Wow. So we're getting some reps. We're getting out there. We're dropping one every week, which is the consistency is key in podcasting and anything, just like your job here. And I think we're thinking bigger. And we're thinking, how do we think outside the box? How do we storytell? But I think Robin from Peloton was like the epitome of everything, right? You have a lawyer who's now in fitness, who's now, one of the most influential fitness people in sports in the country.
Well, and I think, to build on what Alex is saying, I think one of the key things that we think about with our show and honestly, infuses everything we're doing today with Power Players is, from the beginning, and this is why I think, Alex really bought into our shared vision of this is we're talking about the intersection of business, sports, and culture. And I think, there's a fair amount that's being done around business and sports. It's undeniable what's happening there. But I think, and we just literally talked about this on a panel that I moderated with Tom Garfinkel from the Dolphins and Mike Arrighetti, the CEO of Aries, this amazing cultural impact that sports has on everybody's lives at a time when we're so polarized, we're so divided. Alex is, very involved on the board of University of Miami. University of Miami beating Notre Dame at Hard Rock Stadium last weekend was an unbelievable moment, in the broad culture. I mean, it really was incredible.
Yeah, and it had a huge number, around 13 million people.
Right.
And that is a huge number, right? And it's one of these things, especially after COVID, I think, and Tom talked about it in your last panel, that people still want to come together in a stadium. To have 75,000 people cheering on, remember the old history, bringing the old days back for the University of Miami, convicts versus Catholics, right? It's pretty awesome. And the fact that we won, I'm very, very happy about that.
We're speaking, of course, with Alex Rodriguez, chairman and CEO of A-Rod Corp. Also, Bloomberg Originals chief correspondent Jason Kelly, talking about the newest season of The Deal and more. Is that culture around sport today, is that a lot different than it was when you played?
Oh, there's no question about it. I mean, I think Michael Arrighetti was talking about, 10, 15 years ago, the ownership landscape looked a lot different. A little bit, his words, a little bit more sleepy, and I'm paraphrasing. And the sophistication with the newer owners that have come in, with the ability and the appetite to take risk, while still being disciplined, but it takes a certain amount of a cowboy or a bit of a poker player to innovate and keep pushing the envelope and making these assets a moat. But then there's all the businesses around, whether that's a stadium, networks. What the Atlanta Braves have done is incredible. They did $75 million of extra cash flow for the team. I think that's the new model moving forward.
Thank you for mentioning the Braves. That was very nice. But like one
Atlanta person here. We should know it for everybody who doesn't know already.
But one thing,
smart co-host.
So smart, so thoughtful. But I'll sort of toss it right back in the sense that I do think, to answer your question, Tim, one of the things that's also changed is in these years that we've been doing this, Alex has become the majority owner of an NBA and a WNBA team, and I do think being able to, we talk a lot about, in our partnership, sort of the roles that we play in the conversations that we have with our guests. And I think Alex's now ability and curiosity and willingness to essentially say to people, whether it's Robin, whether it's Erica, whether it's Ted Leonsis, who's been on our show, whether it's Belichick, to be like, hey, listen, I'm doing something new. We had Sue Bird on our show, WNBA legend. To be able to say, like, listen, I'm doing something new. Help me understand this new job. I mean, that I do think that sort of unlocks something. Yeah. Do you agree?
For sure, and especially, like, they just handed us the keys about, call it a few months ago. And it's fun for us to think we just brought in a new CEO in Matthew Caldwell, who was formerly at the Florida Panthers, worked for my great friend, mentor, Vinny Viola, who's won 2 titles back-to-back. No, it's just really the other thing that has changed, Jason, I think, is now we've brought institutional capital into the game. And if you think about the 92 professional sports team, when you include the 4 major leagues, NBA, NFL, NHL, and then Major League Baseball, that changes the whole landscape of the ability to find some liquidity, put that money to work, and keep growing these assets.
I think there was always the worry, though, and I posed this question to both of you, of a lot of money coming in, gambling coming in, what that does to the sport. Let me start with you, Alex, has it changed sports overall, all this money in?
There's no question. There's a new data point that came out that blowout games in the fourth quarter in the NFL were doing better numbers in the second and first quarter. And that's because of fantasy football and the interest level that is no longer about the score. Yeah. The NFL has found another hook to, like, if they needed one, to bring in more fan base and become even stickier. I thought that was fascinating because most people in the fourth quarter, if it's a blowout, they're done.
Net good?
Yeah.
Well, it depends.
It's complicated.
It is complicated. Look, and there's regulations, and you have to obviously put guardrails around everything.
Right.
But, I mean...
Or money in college sports.
So I think,
like,
so that's the one. So that's the one
different.
that I think is probably, it was funny. I was talking with the athletic director of Ohio State, who was here on a panel earlier.
And we have Dartmouth's athletic director joining us in just a few.
And what I said to him, which he did not disagree with, is what has happened in the business of college sports over the past 5 years is the most radical thing that has happened in any sport in the past 100 to 200 years. I mean, there's no question.
Yeah.
Because the entire business model has changed. The amount of money coming in has changed. I mean, even the idea. So let's use University of Miami. University of Miami, the reason they won that game, almost, I mean, not completely, but a huge part of it is because the former quarterback of the University of Georgia was done playing at Georgia. He was headed for the NFL, got a call from the University of Miami and said, hey, bro, hey, Carson Beck, we'll pay you $4 million to come to University of Miami, which was probably 4x what he would have made his first season in the NFL if he got drafted. And then he goes down, plays in front of a bigger crowd, in front of a, in a higher profile game, higher viewership, than he would have gotten if he had even been on the field in the NFL. That's a radical different. Like, that's complete.
It's a game changer. Is it a good one, though?
Game changer.
Is it like, or who knows?
I mean, listen, I think if you, it depends. If you're an investor, there is certainly a lot of investing to be done around it. I think to Alex's point about guardrails, there need to be new guardrails. One of the things the athletic director said was, like, we are literally making this up as we go along, which is crazy. I mean, like, none of us can do that in our jobs, and it's like, I try, as you know, but like we can't actually do it.
Yeah, I mean, imagine any league without a collective bargaining agreement, right?
Yes.
Without a union, without what is the exchange? If you sign a player for 5 years guaranteed, he can't just go on to the opponent over there, the rival. So I think, especially with the young kids, I mean, look, I have a junior, a girl who's a junior, and a young lady that's a junior at the University of Michigan, and I have a senior this year in high school, and I couldn't imagine one of my girls getting $5, $6, $7 million today, and they're not equipped for it.
Right.
Yeah.
Well, and the other thing, and to your point, Bill Belichick on our show said this is actually harder than coaching the NFL because it's free agency all the time.
All the time.
So the kids can move around.
Yeah.
And they will move around.
Yeah, we were
We were
hearing about
talking-
the portal with
we
a
were
colleague.
talking about it with a colleague here.
Yeah.
His son can just log in to a portal and go somewhere else.
And he is going to move somewhere else.
And if you look at some of the great coaches that we've lost from these institutions, whether you go to you go to Saban, Nick Saban,
Yeah.
you go to Coach K, you go to Coach Wright from Villanova, a tough name for my Georgetown buddy here.
My God.
But I think one of the reasons they're leaving is if you scream at a kid, he's going, I'm out, I'm going to Georgetown, or I'm going to University of Miami. And that wasn't the case back then.
So what does this do to the pipeline going into the pros right now?
I think college football becomes NFL junior.
Yeah.
And I think it really just becomes an extension, and so you start to what it could do is you could have more, in some form or fashion, Carson Becks who opt not to go to the pros because they're going to make several $1 million, playing in college for an extra year, and then I mean, big time football is going to just get bigger and bigger, and college is going to be a part of that.
So Alex, I'll ask you the same question I was asking you about sports gambling. Net, is this a good thing?
It's interesting, right? Because I still remember the days with P. Rose, right? I think the answer we don't know yet. I think depending.
But for college sports, what do you think?
For college sports. I'm not sure about that, but I will tell you one correlation. If just to back up what Jason was saying is, you've never had companies stay private longer, whether it's Stripe or whether it's many examples. I think you can have an example of players staying in college longer because they can develop. They can go to the University of Miami for a senior for $4 million. The kid over at Michigan, the quarterback, $12.5 million.
Amazing.
So it's a different world.
Yeah.
So 8 years in college and still no MD degree.
Wow.
But they got a lot more money.
Yeah, they got a lot.
We got
no student loans.
We just got a few seconds left here. Got a dream guest that you still guys are like, if they're listening. Real quick.
Roger Federer.
Oh,
good one. Roger Goodell.
Oh, good one.
All right.
Couple of Rogers. Listen up.
So Rogers, if you're listening,
Roger that.
get ready. Well done, guys. Thank you. Good luck on up on the big stage. We know you're getting ready to talk to Justin Tuck. All right, of course, Jason Kelly, chief correspondent, Bloomberg Originals, Alex Rodriguez, chairman and CEO of A-Rod Corp. They are the co-hosts of The Deal. The third season, it is underway. You can find it wherever you download your podcast. All right, we're counting down to the close, folks. Just about 2 minutes to go. You're listening and watching Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It is 3:58 on Wall Street. I'm Lisa Mateo. We've got green on the screen, and this is ahead of tomorrow's jobs report. Today, we had a little bit more evidence that the labor market is cooling. Applications for U.S. unemployment benefits, well, they rose to the highest since June. Initial claims, they increased 8,000 to 237,000 last week. Continuing claims, they were little change. In other economic data, we had the U.S. trade deficit. That widened in July to a 4-month high. So before the close, let's check in right now with the S&P 500. It's up about 0.8%, 53 points. We have the Dow up 0.7%, 351 points. And we have the NASDAQ up 0.9%, 206 points. In the yield space, we have the 2-year, 3.58%. That's down 3 basis points. The yield on the 10-year, 4.16%, and that's down 5 basis points. The 30-year, 4.89%. And that's down 3 basis points. To commodities, a record-setting rally in gold is cooling. We have COMEX gold down about 0.8% at $3,605 an ounce. Oil extending its losses. WTI crude at $63 a barrel. To currencies, the Bloomberg Dollar Spot Index, that's up about 0.1%. We have the Japanese yen down about 0.2% at 148.49 against the dollar. Over to Bitcoin, well, that's down about 2% at just over 109,000. We have a few companies making news. We'll start with Paramount Skydance. It has signed a 3-year agreement to distribute Legendary Entertainment's upcoming films in cinemas. And OpenAI, they plan to launch a new AI-powered job platform next year. That's what we have before the close. I'm Lisa Mateo. That is a Bloomberg Business Flash.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are back on Bloomberg Business Week Daily. Carol Masser, Tim Stenivek, live here on the 6th floor of Bloomberg headquarters in New York City. More from Power Players New York in just a moment. But, Tim, markets closed.
Yeah, it's a lot of green on the screen for that close. NASDAQ Composite up close to a full percentage point. The S&P 500 up 0.8%. The Dow up 0.8%. Taking a deeper dive into the S&P 500 and looking at those industry groups, everything was in the green except for utilities. Consumer discretionary surging up 2.3%. Communication services up 1.1%. Industrials up 1.1% as well.
Yeah, and don't forget, we've got a big monthly jobs report tomorrow morning at 8:30 a.m. Wall Street time. That'll be our focus. Right now, our focus, a headline crossing the Bloomberg terminal. President Trump asking the U.S. Supreme Court to let him fire the commissioner of the FTC. So developing story, we'll continue to monitor and bring you more news as it is known. In the meantime, we are obviously watching the headlines, watching markets, after hours, any kind of earnings, we'll bring them your way. But we're also all in on sports this hour.
Yeah, we are. We're live from the Power Players Summit here in New York. Sports now a multi-trillion-dollar global industry. We're bringing you influential voices from the business behind sports to help you identify what is coming up next. If you missed our conversation with A-Rod, it's okay. It's going to be in our weekend show, which you can catch on Saturday.
Yes.
Also in our podcast feed as well. Jason Kelly there holding down the fort, too.
All right. Also from Power Players, Ted Leone says, founder and CEO of Monumental Sports and Entertainment, and Gary Bettman, commissioner of the NHL. They will be here. They're off a panel, so looking forward to them. So we're going to talk about hockey with them. We're also going to talk a little bit about soccer.
Yeah, we got some great guests coming up when it comes to soccer. Also, when it comes to college sports, this is the topic right now, Carol, and what has happened with college athletics, with name, image, and likeness. Mike Harridy's going to be joining us. He's the athletic director over at Dartmouth College. Going to talk to him about what it's like being AD in the age of NIL.
Yeah, it's got to be kind of interesting. All right, everybody. We do want to remind you, yes, we're focusing on sports, a lot of great voices here, but we're also focusing on the U.S. economy. Got some data this morning showing some weakness in the U.S. labor market. We are less than 24 hours away from that very closely watched monthly jobs report. We'll get that tomorrow, and then we're less than 2 weeks away from the next Fed decision, so a lot going on right now.
Yeah, I want to bring in Ira Jersey. He's a Bloomberg Intelligence Chief U.S. Interest Rate Strategist. He joins us from Bloomberg Intelligence headquarters in Princeton, New Jersey. Ira, I got to tell you, the focus this week, not just in the U.S., but around the world, has been on the bond market. Give us the data, the reaction that we've seen, and what it could portend moving forward.
Oh, I thought we were talking about the soccer team I own. I didn't realize that we were talking about the bond market.
Yeah. That's such a good point. Ira would have been the right guest to have. Listen, man, we kind of need you when it comes to. Well, I think Ira, you would call it football.
Yeah, that's right. Yeah, exactly. I mean, obviously the bond market, everyone's focused on the jobs number tomorrow because that will determine, there's an outside chance that not only will it determine for sure if the Fed's going to cut in a couple of weeks, but could they do a 50 basis point cut, right? Imagine a situation where we get a negative job print, 1 or 2/10 uptick in the unemployment rate, and that could scare the Fed quite a lot and have them do another 50, right? Maybe another repeat of last year.
Hold on. I want to just jump in. Are we really talking about a potentially negative print? I mean, economists surveyed by Bloomberg are saying 75,000 is the number that we expect. We did see a little bit of a miss when it came to that ADP figure this morning. 54,000 added when ADP thought there would be, or what economists rather thought there would be 68,000. Are we really talking about a negative print here?
Well, it's not impossible. The standard deviation of misses is something like 60,000 from the economist estimate to the payrolls report. So, you get a little bit more than a one standard deviation miss, and that could be a negative print, and that could spook the job market. And remember, we also get, Tim, other revisions, and if we get more downward revisions, even if we get a 75 or a 50,000, so a slightly weaker but not crazy weaker print than expectations. but you get a downward revision the next last month and maybe July as well, and the next thing you know, you wind up in a situation where the Fed is really concerned about the flagging job market, and that's why this report is so important. It's look, you get a 75,000. I think then September is a done deal for a cut, and I actually think that we'll price again for an October cut, even though Chris Waller said they're not necessarily going to cut every single meeting. But if you get a weaker print, even a 10,000 print is going to be a point where the Fed is going to be very concerned about the job market and particularly the pace of slowing of job growth.
I will say, looking at the economists surveyed by Bloomberg, the range goes from 0 jobs added, Carol. Yeah. That's by Derek Holt over at Scotiabank, all the way up to 144,000. Regions Bank estimate is at 144K. Median again, though, 75K.
Hey, one thing though, Ira, like we had the Federal Reserve Bank of New York President John Williams come out and say it will become appropriate. Those are his 2 words, become appropriate to cut interest rates over time, also his words, as progress on the dual mandate goals continues. But he didn't really clarify what that over time meant. When you look at the data points, we got a bunch of readings on the labor market this morning. I don't know. Does it warrant that we need a rate cut right now? We had a guest on yesterday who talked about growth and the latest GDP report. It's backward looking, but saying that doesn't say to me that we're seeing slowdowns.
So really, the Federal Reserve is going to try and engineer a soft-ish landing. And from their standpoint, I'm not saying that I necessarily agree with them. If I was on the Federal Reserve Board, I might do something completely different. But that's not my job, right? My job is to try to determine what the Fed's going to do. And the Federal Reserve seems to think that the neutral rate, so R star, is currently somewhere around 3%, maybe 2.75. So therefore, the Fed is going to want to cut down to that rate before the economy really slows significantly, because they think that they have a restrictive policy stance. Now, ultimately, my view, this is my view based on where I think the economy's going and how the job market is probably going to moderate enough that it's going to spook the Fed over time, even when it's cutting, to actually go back down below 3% to say 2.5%, and they'll call it modestly or moderately stimulative, and that's how they'll couch it to get all the way down to around 2.5% on the funds rate. Now, and they want to do that before there's a problem, right? Like, if nothing else, the Fed's often very reactive to shocks, and they want to get in front of any potential shocks and slowdowns in the economy this time.
Hey, just real quick, I want to bring a headline that's crossing the Bloomberg terminal. Speaking of shocks, we're seeing shares of Lululemon down about 11.5% in the after hours. The company out with numbers and says it sees fiscal year earnings per share significantly lower than what it had originally seen. 1277 to 1297. That is really a lot lower than 1458 to 1478 with what it saw. The company's CEO out saying that he's disappointed with U.S. business results.
Yeah, stock down almost 12% here. And this is, in a year where Lululemon certainly the stock has been under pressure, down about 46% year to date. But again, another major haircut in the after hours. We'll look for some commentary on the call. It's just such an interesting time period, Ira. And I do think about the upcoming Fed meeting. Data points still to come, reads on inflation. I mean, is it still some things that the Fed's going to be watching?
Yeah, obviously the Federal Reserve watches just about every number, right? And the CPI report is among probably their top 3. But I think that the CPI report would have to be, way out of consensus and either extremely high or extremely low for not obvious reasons, or just very, across the board increases in prices in order for the Federal Reserve not to at least take one stab and cut in September. Now, if you had a situation where tomorrow's number is better than expected, toward that high print, Tim mentioned the 140-ish thousand print, you get one of those and 1 or 2 tenths uptick in CPI, right. Then maybe the Fed was going to pause and say, like, maybe we don't need to go yet. Let's wait another month, get a few more numbers, and then we can still cut in October.
All right, we're going to leave it there. Ira, thank you so much. Really appreciate it. Ira Jersey, Chief U.S. Interest Rate Strategist at Bloomberg Intelligence, out there at BI headquarters in New Jersey. Just want to mention, again, the headline crossing the Bloomberg. President Trump asking the U.S. Supreme Court to let him fire the only remaining Democrat
on the FTC, Federal Trade Commission. So teeing up really a case that could overturn a 90-year-old precedent and give the White House tighter control over federal regulators. That precedent, we're talking about a 1935 Supreme Court ruling that said Congress could insulate at least some high-ranking officials from being fired. So certainly another legal action that we are seeing out of the White House.
Should we stick with sports?
I'd love to go back to sports.
Should we go back to sports? We've got an incredible duo with us right now. Ted Leonsis, founder, chairman, managing partner, and CEO of Monumental Sports and Entertainment. Here's a little bit of what they have. The home to the Wizards, the Washington Capitals, the Washington Mystics, Capital One Arena, 8 teams, 5 venues, 1 media platform, and more. Once again, Monumental Sports and Entertainment. Ted with us, along with Gary Bettman, longtime commissioner of the NHL, former longtime general counsel for the NBA. Both join us here on set at Power Players New York. Welcome to both of you.
Great to be with you.
Well, we got a little bit of the panel earlier. We were able to take some of it and broadcast it to our audience across YouTube, radio, and Bloomberg Originals. You were up there with Scarlet Fu talking about the new fan experience. You've both been involved in the world of sports for a long time. A lot has changed. Streaming, sports betting, NIL, Carol, which I think is like the backdrop to everything that's happening here, the role of tech alone. What is this moment that we're living in right now?
Well, I think AI is really the next big thing.
With sports?
Oh, yes, totally.
How?
Well, right now we're redoing our building, and all we're talking about is physical AI. How do we collect data? How do we, with the 3 million people that come into our building, where are they coming from? How old are they? Who are they married to? How long have they had the tickets? What do they like? Where do they eat? What can we do to be anticipatory with our building? It's not just smart buildings anymore. It's build the intelligence and the data right into that experience.
You know, I just want to ask you, Ted, because you were at AOL in the early days. I mean, this is before you were in sports, you were in technology, so you understand the space. Are we in a moment now that is like when AOL brought us the World Wide Web?
Well, I think the leagues, it seems like it's been a long time, but it's been a quick pivot to go from analog and bricks and mortar and linear distribution and local to be a global digital power plant, if you will, that we look at our teams. Obviously, they have high fan avidity, but it's IP. And how do we digitize everything that we're doing from the start and distribute it over our own channels? That's why we bought our RSN. Everyone was running out of the burning house. We said, let's run in. There'll never be a better time to buy and reinvent the distribution model than there is right now.
Gary, I want you to come in on the role of technology. I think all of us, when we're watching sports, I love it, whether it's tennis, whether it's golf, whether it's baseball, the statistics that come up. Hockey. Sorry. I was getting there. Sorry. Well, that's what I wanted to get to, though. Like, you know, how fast the puck is going or something. Like, how much fans love that engagement.
I'm going to respond to that, but I want to add on to what Ted said.
Just so you know, I have 4 brothers, and growing up, we had an ice skating pond that they dug out of the woods in the back and would play hockey.
I knew I liked you and your family. But
you grew up with it.
Sports tends to focus people at an instant, at a moment in time, the score of the game. Yeah. What's the result? I don't think we're at a moment of time. I think we're on a journey, and we've been on a journey for decades, and the speed limits change on the road conditions change, there are curves, there are hills, but at the end of the day, it starts with the authenticity of sports and how important sports are in people's lives and how it brings people and communities together. And technology has enabled us to connect better with our fans. So AI, we're like any other consumer business. It's going to help us do business better. But also, it's going to help us make sure that our games stay true to themselves. I always tell, particularly my tech and strategy guys, we're not going to change the game to make it more tech savvy or tech, favorable. What we're going to do is use technology to make the game more consumable, more connective. And so puck and player tracking, NHL Edge, is a function of that. We're gathering millions of data points a minute, but it's enabling us to take people inside the game. Maybe even people who don't know the game and understand it, and let them say, wow, that puck, traveled 14 miles with averaged 88 miles an hour. This player can skate as fast as 35 miles an hour, and he's already skated 6 miles in this game. This gets people to understand and feel more connected, and it's going to let us give them the game on their terms, because with all the streaming platforms, you're going to be able to sit at home and decide how you want to watch the game, not the way we've done it from a linear standpoint since I was a little kid, and people my age are used to sitting on the couch and doing it. But
we used to get in front of my dad and be like, get down, because you couldn't rewind.
But if you're a Gen Z or a Gen A, and you want to focus on a particular player, and you want data simultaneously, and you want to place a bet, you're going to be able to do all that and buy a jersey all at the same time. In addition, what puck and player tracking has enabled us to do is use the metaverse. We use animated versions of our game in real time. We were the first sports league to do that, and it works really well, and it engages young people and their parents.
I'm thinking about all this, and I'm thinking about the technology and thinking about the investment that's being made, and it reminds me of the way that we've seen sports turn into this premium experience now, and the premiumization, this idea of it being a luxury good. And I'm wondering how you think about that, Ted, and how, it's not like you go to the ball. Well, I guess ball games are still affordable, but apart from that, some tickets just end up being so expensive. How do you think about that for your customers?
Well, many of us have run big public tech companies, and when you come into sports, you say, oh, the model is like a software company. We have nothing but blue chip clients, naming rights, suite sales, big sponsorships, media deals with the biggest companies in the world, Amazon, and NBC, Comcast, and Disney, ESPN, and they pay us over 10 years or longer with Escalade. So the model looks just like Salesforce.com or Oracle. Those are very valuable companies. It's why they're valued at a multiple of revenues, not a multiple of EBITDA. Okay, so that's what's happened to sports teams. It's this, we're 6 times, 8 times, 10 times, 12 times revenues.
Right.
But for those of us who came in from public companies and tech companies, I go, we don't have an R&D budget. Think about that. We didn't have a CTO. We were one of the first teams that, we made a major hire. We have software developers. There's like those software developers in these teams. That's a big part of the pivot, right? If you're going to be digitize or die, if you're going to try to get your products and services out and build brand and build audience on a global basis, it all starts with, taking a pixel and digitizing it. And we're now, I've owned the team 26 years, but there's now a lot of the big markets and the more innovative companies that have said, we're not just a hockey team. You've got to have the hockey team as the ethos, for the competition, for the fans. But as a business, these have become big businesses. We're going to be doing 2 years from now, $1 billion in revenue.
You were valued at about $4 billion back in 2023 with the Qatar investment.
We've been valued now close to $7 billion.
It's big growth in 3 years.
Good business.
Yeah.
It's good business.
But we're doing $750 million in revenue.
But the landscape, and it relates to everything that's going on with the distribution of content, no matter what platform you're talking about, live sports is the most compelling, most valuable content. And that's what's driving the values that you're seeing.
Right, because there's so much stuff out there, but you're right. People tune in, right, to see something.
It's reality TV. It really is.
You're right.
But I think one thing that people miss too, the world's in chaos, and it's not going to get more calm. But there's something about you go to a game, and it's the puck's going to drop at 7:06. You know where the game is going to be televised. You know where your seats are. The players know if you make the wrong pass, it's, goes over the blue line. They know what penalties are. There's referees. And while there's people will boo
Wait,
at
are
the
you saying
referees,
there's guardrails?
I'm saying that there's structure, right? I was amazed at the World Cup.
Yeah.
You have countries fighting each other, at war with each other, yet they get on the pitch, and it's, I know this line is out of bounds, that this is a boundary. I think we crave that. We want a level playing field, and you want meritocracy, and you want to see how people can compete.
And yet, politics, geopolitics have gotten their way into sports. And I think about the NHL being kind of the most international and Canadian of all U.S. pro sports. And yet, geopolitics, coming from the White House, whether it was over trade and tariff policies, we saw that play out, certainly.
It did during the Four Nations in February when Canada was playing the U.S. in 2 games, including the final game. But what's great about sports, and it transcends geopolitics, because sports brings out people's passion and it brings people together. Even if they're rivals, their common interest in seeing the game and the outcome, and even within a particular country, no matter how diverse a country is, on whatever basis you're figuring out what the diversity is, people come together. It brings communities together. And when you have assets, franchises like Ted has in Washington, they make a difference in people's lives. Their outreach in the community, their youth programs, using sports to teach young people life lessons. That's as important as anything else that we can do in sports. And I think monumental, what Ted does in Washington is a great example of being outward-facing in the community and making a difference.
So we helped the White House have the inaugural at our arena. We were called the world's most important arena. And that same week, there was a study out on who is the most popular and best athlete in Washington sports history. And it's a Russian, Alex Ovechkin, right? He broke Wayne Gretzky's record last year, and he is beloved in Washington, D.C. Yesterday, we announced a naming rights deal with Coupang, a South Korean company, e-commerce company. We're global, right? We are exporting our IP around the world. We have these icons, these great global brands. Advertisers want to reach those fans. And so, it's just ironic. Here we are in Washington, D.C. As I said, I can see the White House. And while they're churning on things, sports is the great uniter.
And didn't that poll also say that you were the most popular owner?
Let the record show Ted did not answer the question.
I think you guys need a little
You
podcast.
want to be modest.
It's good to hear that. It's good to hear that sports really kind of brings people together. We do see that over and over. Gentlemen, thank you so much. Thanks for being a part of this. Ted Leonsis is founder, chairman, managing partner, and CEO of Monumental Sports and Entertainment. Gary Bettman, commissioner of the NHL. Gentlemen, thank you so much.
Let's get back to the studio, the Bloomberg Interactive Brokers studio. It's where we find Lisa Mateo for an update on business news and markets. Hey, Lisa.
Got it. And we have this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, you can see if your company qualifies at Oracle.com/Bloomberg. All right. Well, the latest readings on hiring and unemployment claims pointed to a cooling labor market, and that sent stocks higher. So we had the Nasdaq close up about 0.9%, 209 points. The Dow closed 0.7%, 350 points. And the S&P 500 closed up 0.8%, 53 points. In the yield space, we have the 2-year 3.58%, and that's down 3 basis points. The yield on the 10-year 4.15%, and that's down about 5 basis points. Taking a look at currencies, the Bloomberg Dollar Spot Index up about 0.1%. The Japanese yen down 0.2% at 148.50 against the dollar. And Bitcoin right now down about 1.5% at just above 110,000. Some earnings action after the close. Shares of of Lululemon, they are taking a hit, down 13%. That's after the company slashed its outlook, so investors not happy about that. Chip maker Broadcom, want to hit those next. The companies like Alphabet and Apple, they're the supplier to. Well, it delivered a solid sales forecast for the current period, and that's a sign that AI demand still remains strong. Its shares are right now down about 0.3% after the close. Shares of e-signature software company DocuSign, they're on the rise in post-market trading, up about 8%. That's after it boosted its full-year billings forecast, beating estimates. Other companies making news, that would be Boeing, plans to start hiring permanent replacements for some of the 3,200 hourly workers on strike at its St. Louis defense hub. For on-demand news, 24 hours a day, you can subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash.
Lisa, thank you so much. Carol Master, Tim Stanovic, live here on the Bloomberg 6th floor, New York headquarters, as we continue to cover power players. You might recall last month that President Trump in the Oval Office announcing that Washington, D.C.'s John F. Kennedy Center for the Performing Arts will host the draw for the 2026 FIFA World Cup. Now, the draw to be held on December 5th, determining the match schedule for the tournament, Tim, which is held every 4 years.
Yeah, the 2026 World Cup is the first to be hosted in 3 countries, the U.S., Mexico, and Canada. The run-up, however, has been marked between trade tensions sparked by President Trump's decisions to hike tariffs on imports from the North American neighbor. Let's talk about the world of soccer and also the world of finance. Joining us now is JP de Boton, the finance minister for Mexico City. He's stopping by here, our headquarters at Bloomberg in New York. JP, good to have you with us. How are you?
I'm very happy to be here with you, Tim and Carol.
We're happy to have you here. Look, the focus of our conversations this afternoon have been about sports from a lot of different angles, from private equity, from public financing, when it comes to arenas, to name, image, and likeness in college sports, to gambling. I want to talk a little bit about the finances of a city and to what extent those rely on or those are affected by sports. How do you think about it as finance minister?
Well, for us, we are holding a very important event next year, so it's really important to keep the finance stable. As you know, Mexico City is the most important city in Mexico. It accounts for about 15% of Mexico's GDP. Also, we receive around 56.4% of the foreign direct investment of the country, so it's really key for in economic terms. We have significant achievements on the front of the revenue income. We have 8% year over year and over 26% on local revenues, and that allows us to meet the infrastructure needs for the World Cup in a very healthy and sustainable path of our public finances.
To what extent has this, and look, the World Cup obviously is important in the backdrop of the relations between the U.S. and Mexico, but I mean, to what extent over the last year or so has the finances, at least from the perspective of being able to plan, been thrown into disarray over the trade tensions between the U.S. and Mexico?
Well, I believe we have a very stabilized income in our city. It's very important that Mexico City is the only state or entity in Mexico that has more than half of their revenues that come from local revenue. And it's mainly a property tax and tax that has to do with income. And we don't see that moving a lot, in the short span. So we see that very stable, and that allows us to be very secure about having our sustainable debt. And also, we are heavily investing in security, infrastructure, and mobility for the World Cup. And we did this, we started a new trust in Mexico just for this matter, so people have transparency about how we are using these resources. We are mainly focusing on using resources in infrastructure, so this infrastructure keeps going after the World Cup. So this is not a one-time use, but all the people in Mexico City benefit permanently from these investments.
So we are talking with Juan Pablo de Boton. He's finance minister for Mexico City here at Bloomberg headquarters. But in terms of the geopolitics, I think, JP, that we kind of try to keep understanding
it's been uncertain and back and forth. And obviously Mexico, we know, has been an important, historically, trading partner for the United States. So has it
It
made
overtook
it
China as
difficult?
the biggest trading partner just in the last couple of years.
So has any of this uncertainty and volatility impacted some of the financial security that you guys have in the city?
Well, I believe there's some noise in the financial environment, but at the same time, we try to be very clear about what our policies are in the city. I just came from having this talk in this Mexico Investment Week in the FIBRA Day about how we are very eager to have more investment in real estate in Mexico. I think we have a
Has it
huge
slowed
market.
down over the tensions?
No, we don't see that. We actually have some fibras that have come to the market last Fibra Next. And also we are seeing a lot of projects going on. So we don't see that in the real estate. Maybe for the other states that are more prone to manufacturing, you can see some of that. But in Mexico City, we see a good perspective. Maybe also the World Cup also makes like the environment very optimistic, I think.
As soccer becomes more popular in the United States, I mean, Mexico and soccer, right, go hand in hand. I'm just curious, is it more challenging? I mean, how do you continue to attract players to the sport, especially when they can go so many different places and increasingly the United States?
Well, I believe players, of course, look for a competitive environment, and that has to do a lot with the league. I cannot tell you a lot about what should be done in the league or that. But, of course, there are a lot of fans and a huge demand for the sport in Mexico. And also, I think players look increasingly for the whole experience, and they want to experience a city that gives their kids the opportunity to be educated and well-educated, and also have the different services of the city. And I think Mexico City is attractive for players.
JP, one thing, last question as we wrap up, as you said, you're here in New York. I'm assuming you're meeting, you said, with investors, the financial community. What are you hearing from them about Mexico being investable against kind of the rest of the world?
I was surprised to see them very bullish on Mexico and Mexico City. Of course, everybody talks about uncertainty and geopolitics and latest news, but they also see the long term, and many of them are patient capital, and they are seeing in the numbers that there are a lot of growth in office space, in retail, in housing in Mexico City. So I was positively surprised about how I talked to many investors about their future plans in the city, and I already have some appointments for next week, so we are talking about projects.
Tourism okay?
Yeah, tourism is doing very good. We see that there's some movement in which some people doesn't feel as secure to visit the U.S. for some policies that have been going on, and they are planning to visit the city for the World Cup. And we also
people going to Mexico instead of the U.S.
Instead of the U.S.
as a result of U.S. policies, is what you're saying.
That's what we have seen lately. And also we are having F1 now in October, and it's a very hot season for the city, as also Festival de Dia Muertos, so we are seeing good perspectives in tourism.
Well, so glad we know you came to Bloomberg headquarters, but so glad you found also some time for us to come on air, and so our listeners could hear from you. JP, thank you so much. Juan Pablo de Baton, he's Finance Minister for Mexico City, joining us right here on Bloomberg Business Week Daily. Thanks again.
Taking a look at what's going on in the after hours, I'm watching what's happening at Lululemon. Shares sinking in the after hours. Carol, the company out with a report. It cut its fiscal year earnings per share forecast. It missed estimates. The Lululemon cut its earnings per share guidance for the full year. It missed the average analyst estimate. It sees EPS between $12.77 and $12.97. It saw $14.58 to $14.78. Shares cratering down 13%. in the after hours.
Yeah, I mean, let's not forget, we are still in earnings season, so we still continue to see some different earnings reports come out as we speak.
Broadcom also out with earnings. The company supplies chips to Alphabet and Apple, delivered a solid solid sales forecast, for the current period, lifted by AI-fueled demand for its custom chips and networking gear. Taking a look at shares of Broadcom. In the after hours, they are bouncing around. They were higher, they were lower, now down just ever so slightly, 0.2%.
Kind of little change. Stock is up, though, 32% year-to-date here in 2025. Hey, one of the things we wanted to get to, a lot going on this Thursday. There was a headline a short while ago, President Donald Trump asking the U.S. Supreme Court to let him fire the only remaining Democrat on the Federal Trade Commission, the FTC, teeing up a case that could overturn a 90-year-old precedent and give the White House tighter control over federal regulators. There's been a lot of court actions coming out involving the White House and the president and his policies. Let's get a little bit more into this story. Greg Storr is with us. He follows the Supreme Court at Bloomberg News. He joins us from D.C. Greg, tell us about this decision. What exactly does it mean, and what does it kind of set up in terms of future legal actions likely to come here?
Yeah, Carol, this is a theme we've talked about before, whether the president can fire for no reason at all, just because he wants to, the leaders of independent federal agencies. We've seen this with the National Labor Relations Board. We've seen the Supreme Court say the Federal Reserve is different and is entitled to more independence. And this is a case involving whether he can fire the last remaining Democrat commissioner on the Federal Trade Commission. A federal appeals court ordered the commissioner reinstated, said, I'm not going to order Trump not going to let Trump fire her right now. Trump is now at the Supreme Court, has gone there and said, let me do it right away while this litigation goes forward. And while you're at it, grant full review so we can get this issue resolved once and for all.
So when will the Supreme Court hear it?
So we don't know yet. We don't know that they're going to hear it. This is just the Trump administration asking them to. If the court agrees to, it would be sometime this term, a 9-month term that will start in October, run through June. And that could be a really, really big decision if they take it up because, as you alluded to at the top, there's a 90-year-old Supreme Court precedent known as Humphrey's Executor that says Congress can set up these independent agencies and protect the leaders from being fired. And that basically, sort of paved the way for all the independent agencies that we've had in recent years. It would be a big deal for the Supreme Court to overturn that. It is signaled it's likely to. And what it would mean at the end of the day is the president would have much more control over those independent agencies.
Hey, listen, one thing I'm curious about, Greg, and it just feels like there's a lot of legal actions going on right now involving the White House, and I'm just curious about things going up to the Supreme Court justices. Is it starting to get a little crowded or potentially going up to the Supreme Court?
Is it starting to get a little crowded? Well, there is a lot happening. Right now the Supreme Court doesn't have any on its docket, on its argument calendar. It doesn't have any, of the big Trump cases yet. Now that could change very quickly because of the tariff case. There's actually plenty of room on their calendar. I am sure that we will have in the coming months several, maybe even a lot of these big Trump-related cases, all sorts of issues, immigration, federal spending, tariffs, of course, the use of federal troops. It's going to be a very big term for the power of this president and the willingness of the Supreme Court to put limits on him.
All right, we have to leave it there. Hey, Greg, so glad we could touch base with you and get some understanding of this. This is, of course, Greg Storr, covers the Supreme Court for us at Bloomberg News. You can read more about his reporting. Just go ahead to Bloomberg.com.
Greg joining us from Washington, D.C. Let's kick it back to New York and to the Bloomberg Interactive Brokers studio where we find Lisa Mateo, who has a business update and markets, too. A lot of earnings. Hey, Lisa.
Most definitely. And this business flash brought to you by IBKR. Will December 2025 CME E-mini S&P 500 index futures settle above 6,200 on September 30th, 2025. Well, at IBKR Forecast Trader, the yes was recently at 80%. Start predicting today at ibkr.com/forecast. The last trading day for this contract is September 30th. Well, thoughts about a cooling labor market ahead of tomorrow's jobs report. That really pushed stocks higher in Thursday trading, keeping bets on Federal Reserve rate cuts alive. Money markets almost fully priced in a Fed cut this month and see at least 2 by year end. The NASDAQ close up 0.9%, 209 points, 21,707. The Dow close up 0.7%, 350 points at 45,621. And the S&P 500 close up 0.8%, 53 points at 6,502. Heading over to companies making news, I want to start with CVS Caremark because they're facing multiple federal lawsuits by patients who are challenging their decision to remove weight loss drug Zepbound from its list of preferred medications. That's after signing a rebate agreement with Wegovy maker Novo Nordisk. And finally, Microsoft, they are set to avoid a potentially hefty antitrust fine. That's after the EU, well, they got positive feedback on its offer to settle a probe into the allegedly illegal bundling of its Teams video conferencing app. Well, for on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash.
Hey, Lisa, thanks for that update. Do appreciate it. College is under a lot of pressure right now. Just this afternoon, Northwestern University president Michael Schill resigned after a 3-year tenure marked by controversy over protests on campus, conflict with the Trump administration over research funding, and a hazing scandal in its football program. College athletics not immune to all this pressure either. Fair to say NIL, also known as name, image, and likeness, has completely changed college athletics. There have also been labor challenges that have come along with this.
Makes it interesting on college campuses. For a view from one campus, we have Mike Harity with us, Haldeman Family Director of Athletics and Recreation over at Dartmouth College. Also with us is Bloomberg News higher education finance reporter Janet Lauren, both here at Power Players New York, and they were both up on stage, weren't you? College athletics, going through a lot. We were just talking about the ability for college players to move around and kind of, find the best deal. Tell us what it's like to be an athletic director in today's environment. And you're also, a lot of colleges and administrations, a lot of academic administrations are also catching the attention of the White House. So what's it like to do your job today?
Yeah, just a few things going on.
Just
right?
a few
just
things.
a few things. First of all, thank you for having me. I'm
you.
honored to be here. At Dartmouth and in the Ivy League, we're really distinct as it relates to everything going on nationally in terms of the House settlement with revenue sharing, name, image, and likeness. We have real NIL as it was originally intended. That means a student athlete can have a sports camp using their name or be an entrepreneur and start their own business. But any kind of pay for play, that is not something that we that's aligned with our values, and our presidents have made it clear in the Ivy League that is not something that we're going to do.
That's an Ivy League rule or a Dartmouth rule?
That's an Ivy League rule.
Okay.
Yeah, and voted on by all the presidents in the Ivy League, and certainly supported by the athletic director. So, but having said all that, we're still very competitive nationally. The Learfield Directors Cup, which measures postseason success in NCAA championships, there's a Power Four. Those are the top four conferences. When you measure that, we're the fifth. When there was a Power Five, we were sixth. So competing at the national level in the sports across the board has been really shows that we can have the primacy of academics and also pursue excellence in athletics, and those things are not mutually exclusive.
Does it make it harder to recruit though athletes?
I think it actually makes it easier in today's world, in that our value proposition has always been different. In the Ivy League, we do not give athletic scholarships. It's always been need-based financial aid. That has not changed. So that was a differentiator between scholarships and that. And now we're doubling down on our distinctions. And what we're finding is, as Power Four institutions are emphasizing certain sports, primarily football, basketball, maybe one beyond that, the Olympic sports are being de-emphasized. Reduction in scholarships, reduction in opportunities to compete, and we're sitting right there to benefit from that. And our coaches are telling me that we already are. So that's really exciting.
So take us back to what happened last year with the men's basketball team. There was a vote of 13-2, I believe it was, to unionize, and then they pulled back earlier this year. What was that like, being in the athletic director's chair?
Yeah, there's no playbook for it. When I took the job and started in July of 2022, if you would have told me that Dartmouth men's basketball was the first union in college athletics history, I would have called you crazy. But we learned a lot. Dartmouth has a long history of supporting unions, including student worker unions. We just fundamentally believe that student athletes are not employees for many reasons. One of which is the athletic endeavor itself we view as an extension of the educational core mission of Dartmouth. And so our president, Sion Beilock, a phenomenal leader, was public in saying that we would appeal that all the way up to the Supreme Court. They did withdraw their unionization effort right around New Year's Eve. And I'll note that the team went on to have the best on-court season in 25 years after that.
Pretty impressive. Well, so what is the greatest challenge for you today when it comes to college sports?
Yeah, for us, we're always thinking about how do we best deliver on the promise that we make to the recruits who come to our institution. Dartmouth's mission is to attract the widest swath of really motivated, students and send them off into the world as responsible leaders. And we play a key role in that. So we have 35 varsity sports. We have over 900 varsity athletes. They're roughly 22% of the undergraduate enrollment at Dartmouth. So I wake up every day thinking about how do we better support them to strive for their aspirations and help support their holistic development as students, as people, as athletes. And I know that sounds really lofty, but everything we do, from driving revenue, philanthropy, we landed the biggest gift in Dartmouth athletics history from the Lewenstein family 2 years ago. All that goes back into supporting their health, wellness, and overall development.
So earlier in the conference today, we were talking with some athletic directors who are writing very big checks to their students. Could you talk a little bit about the difference in what's going on your end, where you have to approve or you have to attest to NILs that are $2,000 or?
And I just want to clarify for everyone, Janet. Janet, what you're saying is the schools are actually the ones that are funding these athletes, right?
They have to pony up.
Okay.
If you're at a Power 4 conference, $20.5 million a year to athletes.
Okay. Sorry, go ahead.
We do not. But what I'll say is we have a variety of rules that ensure that the presidents, our 8 presidents, have directed that there is no pay for play. So with that, yes, every deal, $2,000 and above, I review personally to evaluate that. And also we attest as athletic directors that we are not in any way directly or indirectly, asking a donor alum to give money to somebody as a recruiting inducement, or if they want to go in the transfer portal as a retention inducement. So and it's really the spirit of it that we as ADs have all really committed to in our conversations, because I believe our distinction is a strength in today's world.
Women's sports?
Yeah.
What's changed? I mean, we feel like there's been such an explosion, a lot more attention.
Yeah.
The media rights, viewership, certainly on a professional level. But for you guys, in terms of college sports,
it's exciting. It's so exciting.
What does that mean, though?
Well, I'll tell you, I was at Notre Dame when women's basketball won a national championship, and I saw how it mobilized that community in a way that I hadn't seen before in my then 20 years in college athletics. It's amazing. Here, what I'm mostly concerned about, yes, that is all true, and also as the Power 4, the revenue sharing happens, there will be de-emphasis on Olympic sports, which would include both men's and women's sports. But so when you're focused on football, maybe men's and women's basketball, there'd be a de-emphasis on the swimmings, the tennises, the golfs, and so on. So that's an advantage.
Because the money isn't being committed.
It's not.
It's not coming in for those Olympic sports and elsewhere.
I think a lot of presidents and athletic directors have been public about sharing that that's a reality of that they need to pay. Some an SEC school announced, for example, 85% of their $20.5 million was going to football. The other 15% was split amongst basketballs and maybe one other sport. So the opportunity for us in a broad-based program in the Ivy League, which we believe strongly in, is that we'll always have those opportunities for them. We're not cutting sports. We are very committed to the broad-based program, and that includes women's sports. But as a father of 2 daughters, 15 and 12, who are gymnasts and soccer players, it's really exciting.
Just can't believe it's so different at the Ivy League versus.
I know.
And we still compete at a national level. Don't forget that.
Yeah,
we're still lining up and winning.
And it's also just completely different in just a few years. I mean, this was all unheard of.
Yeah.
A lot of it was happening. Look, a lot of this was happening.
Was it?
I went to a party at a.
Here we go.
Yeah, like at a car dealership owner's house during a tournament, and saw a lot of players from a basketball team there. This was all before NIL. And it was like they're like, oh yeah, they just hang out. You know, it was like
They get a
unofficial,
car,
sort of like I don't know if they were.
cozy.
I don't know if they were getting a car, but they were very comfortable and they knew him very well, and like he wasn't a part of the school. It was very interesting to see. Let's just say that.
Just last question. So when you think about your career, and I know you obviously sound like you like where you're at, but would that shape you? Do you want to stay kind of being an athletic director within the Ivy League community? Because it does seem a little bit more pure.
Well said. I appreciate the question. I love it here. My family loves it here. We have a fantastic president, Sion Bilak. The trustees are very supportive of what we're doing. I think
she
also
used to be president of my alma mater.
Oh, Barnard?
Yes.
Oh, so you know how great she is.
She's incredible.
Yes, she's incredible, and a huge sports fan and believes in the power of athletics. And
Yeah.
what I'd say is, I have a lot of friends who are Power 4 athletic directors, and I'm right where I'd love to be during this time. This
It's a different
tumultuous
ballgame,
time.
right?
It really is.
Okay. Good stuff. Thank you, both of you. Really appreciate it.
Thank you.
Yeah, Mike Hardy. He's Haldeman Family Director of Athletics and Recreation, PGA of, no. Why does it say PGA of America?
It's okay. Go with that.
Do
He's
you
at
want to be
Dartmouth.
PGA of America?
I wish I could play
He's
golf.
staying at Dartmouth for now.
At Dartmouth.
Also Janet Lauren with us.
It's been a long day.
Thank you.
Good luck catching your plane.
Appreciate it.
Yeah, really appreciate
Go
it.
Big Green.
Yeah, exactly. All right, folks, you are listening and watching Bloomberg Business Week Daily. Carol Master along with Tim Stenovec.
Hey, we're also watching what's happening after hours when it comes to companies that are still reporting earnings. I want to take a look at what's going on with Broadcom. The company delivered a revenue forecast for the current period that failed to impress some investors who were anticipating a bigger payoff from the AI boom. Sales will be about $17.4 billion in the fiscal fourth quarter. That's higher than the average analyst estimate. That was for 17.05. The company expects revenue from AI semis to reach $6.2 billion in the fourth quarter.
All right, and then you were talking about this before. Lululemon, man, stock is dropping like a rock, down about 13-14% in the aftermarket. Wow. This, as the company slashed its outlook, the company really still struggling to pull out of a sales slump. The company slashing its outlook, projecting sales in the range of $2.47 billion to $2.5 billion for the third quarter, lowered its earnings per share outlook to $12.77 a share to $12.97. And again, this is a company that's just trying to win back investors. Its stock is down a lot this year. It is down about 46% here in 2025. So again, some struggling revenue. Total revenue in China did increase 25%. It's looking to boost new styles to 35% of its assortment next spring. Says the product cycles are too long, assortment stale. And I got to say, as someone who has bought some Lululemon, stuff doesn't go on sale often.
Maybe it will start going on. So you said down 46% this year. It also lost 25% last year. So it's been getting hit pretty hard.
Tariffs cutting the fiscal year gross profit by about $240 million net. Tariffs cut first half gross profit by net $10 million.
The tariffs are hitting Lululemon.
Yeah.
Okay.
So, all right, stuff that we're seeing. All right. Listening to Bloomberg Business Week Daily, live here at Bloomberg headquarters. We are all in on sports today, thanks to the Bloomberg Power Players New York Summit. On that, a Bloomberg story that caught our attention.
Yeah, it's about how creatine is shedding its gym bro reputation. It's unlocking lucrative new markets as women and older Americans get wise to the benefits of the long stigmatized supplement. Sales are booming as a result. This was one of the most read stories the day it came out. We've been waiting to have Red Brown on to talk about this. He's Bloomberg News earnings reporter. What's up, Carol?
What's creatine?
Creatine is a...
Oh, creatine, excuse me. See, I really don't know what it is.
I love this.
It is very confusing. Hopefully the story helps.
Potato.
But creatine is a supplement that it's actually something that's our livers and our brains actually naturally have it already.
Yeah.
And it's something that it synthesizes the energy molecules in the body, so it lets you release more energy. Basically, what it does. And that's why athletes have used it for so long, is because it makes you have more energy when you're working out, when you're playing, running, all those things.
Wait. You spoke to a lot of people for this story, Red. Does it work?
Yeah, I spoke to several professors who have kind of dedicated their academic lives to researching this thing. It is one of the most well-studied supplements, and it's actually kind of shocking because supplements everyone thinks is kind of this thing that's a seedy.
Well, it's unregulated. You don't know what you're getting. You don't know who you're buying it from. You do point out in the piece that even though it is the most studied, there is a firm that has backed a lot of the studies
Right.
that is a creatine producer. I think the largest outside of China, if I remember correctly from your piece.
Right. So it's called Allschem. It's a German company, and they are backing a lot of this new research, which is trying to cut into female health, into your cognitive abilities, things like that. So they're the ones that are really pushing this kind of cutting edge research, if you will, that is kind of expanding the market to, again, it used to be a really niche thing, you know. Back when I was in high school, it was just the meatheads in the gym. All the football players were using it. Us skinny soccer players stayed away from them and creatine.
Same thing when I was in college, but wasn't it because of the steroid sort of association that it had?
Yeah, exactly. That was one of the really interesting kind of stories that kept coming up, was that steroids and Mark McGwire, you know, the year that he broke the baseball home run record, he was on the record saying, I use creatine and I also use this other substance, which is now banned. So for a lot of people, they kind of associated steroids and creatine as they thought creatine was a steroid, and it's definitely not, because a steroid is something that stimulates the muscle growth, helps you recover faster, where creatine is really just unlocking more energy for you and providing more energy. So it's completely regulated, completely safe. It's above board. Yeah.
Wait, so if it's been around for a while, why all of a sudden is it taking off?
Yeah, you know what? I think it really has to do with the fact that this company is starting to push some of the research. It is starting to kind of open people's eyes up to the fact that, I think one of the professors I quote in the story says that there's really a use case for everyone at this point to use creatine.
Are you using it?
I'm not.
I was just going to ask you a question. No, I never have.
Unbiased for the story, but
you know what? I'll tell you something though.
What, you're going to?
No, my mom's doctor. My mom takes it now. My mom's doctor told her to start taking it.
I find that interesting.
What was the reason for it?
Well,
Do you mind me asking?
Yeah, well, it's just age.
Yeah.
And and she's increasingly doing resistance training too. There's been a lot of studies around resistance training as you age and why it's important to keep the muscle mass. If you're not, Red, you've done a ton of reporting on this too.
Yeah.
We spoke to you a few months ago about the way that gyms are taking out cardio equipment and putting in weightlifting equipment, because that's what everybody's doing.
Yeah, right. And it's exactly for what you're talking about. It's for the longevity. It's for the bone health. So that was another thing that I thought was really interesting while reporting this, was that I spent all day on the Reddit forums about menopause and women talking about the effects it's having for them. You know, it's really helping them with their brain fog, and it's helping them with being less worried about their bone health. You know, obviously women experience those that aspect of aging a little bit more aggressively than men, is the kind of bone density lessening, and people were saying that this is helping them feel just safer and more mobile and all of these things. So with all of this enthusiasm, I think we do need to kind of tamp it down. It's not like a miracle drug, but I think at the margin it does really help a lot of people.
It's no Ozempic or Wegovy or...
Right, no. It won't transform you necessarily.
Did you notice how when he said brain fog, he looked at me
I did.
really... Yes, you did. Totally did. It's a great story. We're so glad we could talk to our Red Brown earnings reporter here at Bloomberg News.
I'm Tim Stenevec along with Carol Nasser. We're joined by Red Brown. He's Bloomberg News earnings reporter. He's also got his eye on stocks on the move today. Red, what's on your radar?
Yeah, first one is actually Broadcom, the big kind of earnings report from this evening. The ticker for that is AVGO. Shares were sort of bouncing around after the report there. I think it's kind of giving me the same vibe as NVIDIA, where we're kind of waiting for more of the commentary during the call. But again, it's this idea that the enthusiasm for AI is gone. Not gone, but it's well understood at this point, right?
Yeah, exactly.
So the company they reported sales pretty in line. They gave an outlook that was it was above estimates, $6.2 billion for the upcoming quarter versus estimates $5.82 billion. So there is still growth there. There is still demand, but I think we're just starting to kind of enter this period of normalization. So I think that's maybe why we're seeing the shares sort of tepid.
It's I got it, right? Yeah, you're right. I mean, right now we're looking at shares of Broadcom. Very little changed here in the after hours.
Right.
Lulu, what's going on there? It's been a struggle.
What a really eye-opening report from Lulu today. I've been through hundreds, probably thousands of earnings releases, and I don't think I've seen sort of such.
I thought he was going to say I've been through 100,000s of yoga pants.
Just for testing, yeah, for
not
product testing.
Not going near that.
Okay, go ahead.
But it's rare to see a CEO be like this, sort of vocal about using this sort of strong language about the lack of execution that he's seeing and the disappointment within the results and things like that. So I think that really speaks to where Lulu's at the moment. Shares are down, I think, 47% last time I checked for the year. That makes it the fourth worst stock in the S&P 500. A really sort of eye-opening report from the company. company. The weakness is it's the U.S. It's the U.S. business. Shares fell 3 times more than, sales fell 3 times more than expected, or faster than expected in the U.S. But then if you look outside the U.S., shares jumped 13%. But the problem is they get 2/3 of the revenue here. So, it's really struggling with the U.S. market at the moment.
We're hearing from the company executives right now on the call. De minimis closure hit profit guidance. The CEO says product cycle's too long, assortment stale. The company said expects 20 to 25% growth in China, 1 to 2% revenue decline in the U.S., and markdowns increased more than expected in the second quarter.
So stock down like 13% here in the aftermarket, so getting hammered in a big way. American Eagle, that's a stock that we saw move in a big way in the regular session.
Yeah, actually had its best day ever in I think it's almost 30 years now that they've been public. So I think surged around 38% last time I checked before I came up here. And yeah, I don't know. I think there's more evidence that the Y2K kind of brands are coming back here. It seems like the company is pointing to their ads that everyone's talking about with Sydney Sweetie, also Travis Kelce. Seems to be really paying dividends, actually. I mean, all the